The FII outflows, they've obviously had to be matched by SIP buying domestically in India, but really you can date the FII outflows to really the third and fourth quarter of 2024, and then they picked up in 2025 and so far this year. In markets like India or indeed Indonesia or a market like the Philippines that are very skewed to consumer and financials, you've had this tendency for foreign capital to be withdrawn. Actually, we much prefer capital spending names, of which there are some significant large cap names in India that are oriented to defense spending or energy capex, which is ongoing here.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Hello and welcome to India Market Open. It's a happy morning with the rain showers, the rain gods finally that have arrived in Mumbai. I don't know if any of you faced that
well, earlier
this morning,
in the morning
as well.
It was there, and it's a welcome break. You know what we are going through last 10-15 days. A very welcome break. But let's see when this welcome break comes from FIs or the Indian markets.
I was
or
about
not.
to say that showers from FIs is something that everybody's expecting.
The expectation is too tall, I think, for the ask for the FIs.
At least droplets
come
of
back
FIs
in terms
would
of
be fine.
that could be a better one to put up. But welcome to India Market Open, everyone. And this is going to be some bit of a respite that we're talking about in terms of rain showers, and the visuals are what you're seeing on your screens as well. But what is interesting, Sharad and Mahima, is what's happening in the West Asian markets, because you are seeing crude, which is still below that 95 threshold. However, that uptick does come in, may it be like 1% or whatever, small up moves. And one way you're talking of one of the parties which is saying we are negotiating, probably this will be an end, we're ready to sit on the table, and on the other side the attacks do continue.
Attacks are coming, and that's why after a long time we are hearing this news of attacks coming in. That means like the talks are basically not on, and it's stalemate. It's largely there. Now reports are coming of Iran attacking Bahrain and Kuwait also. US is targeting Iran's largest digital asset exchange, and now this target is for terror finance and sanctions evasion. That means the war is not only fought on land but on the digital phase as well. And now Trump is also pushing Iran for a firmer nuclear commitment as well. Interesting statement coming in from Marco Rubio. He had stated that a fractured Iranian regime is having communication issues, and we'll get some important bite on that in some time as well. In fact, he had told the Senate, the Foreign Relations Committee, why the Strait of Hormuz remains restricted and outlined, and what Washington still expects from Iran before the negotiations can move forward. Let's listen in to what he had to say.
The only reason there's a blockade, the only reason why there's a U.S. blockade is because Iran has closed they're firing on commercial ships, and they've mined large segments of Hormuz, international waters. And so the blockade is only against Iranian ships. And it's very simple. The notion is if no one's ships are going to get out, then Iran's ships aren't going to get out either. We can't live in a world in which they get to close the straits and tell everybody, pay us a toll or we'll blow you up, but their ships get to go out unfettered. So that's the reason why there's a blockade. There wouldn't have been a blockade if Iran had agreed to do what they said they would do when the ceasefire kicked in, which is they were going to open the straits. So let me just focus on the straits for a moment. Number one, what they're doing is unlawful and illegal. There isn't a country on earth, other than Iran, and maybe Oman that flirted with it, who's in favor of what Iran is doing in the straits. The Chinese are against it. The Russians are against it. Everyone is against it. Now, we are in talks, and I say talks because talks with Iran are not like talks with Switzerland, okay? They're very different. They require the use of intermediaries, unfortunately. But there is the prospect before us, which could happen today, it could happen tomorrow, it could happen next week, that for the first time, certainly in my memory, they have agreed to negotiate aspects of their nuclear program that just a month ago, just a year ago, they were refusing to even mention, much less enter into discussions about. That is not a guarantee that ultimately it will lead to a deal that's acceptable to the Senate or acceptable to the American people. But we'll be able to engage them in a process to truly test the proposition of how far they're willing to go. Complicating that process, unfortunately, is their internal regime is somewhat fractured in the sense of it takes days to get responses from their system.
Well, that's an important commentary coming in, but these are some important pointers which should be making you ready for the global cues to be tracked. The geopolitical risk remains high. Crude has climbed for the third straight day. And remember the global AI trade, that is still continuing momentum. We saw software stocks also kind of reversing. The ADR is also reversing when it comes to the IT stocks. SpaceX is targeting a $1.7 trillion valuation in all primary IPO next week. Now you can expect the global liquidity to be impacted because of such a large IPO size. We saw that in the Bitcoin also, the outflows coming in. IT stocks, remember the brokerages are flagging the AI disruption here. And gold and yields do come down after a strong US jobs data overnight, and slight strength is being seen in the dollar as well. But of course, looking at that, in fact, in his first appearance before the Congress since the US and Israel launched the military action against Iran on February 22nd, Marco Rubio did actually talked about the Senate relations as well.
Yeah,
But
and to add to that, if you see in terms of US markets clearly, right? I mean, you've seen marginal uptick in terms of overnight trade, but if you talk about the futures, absolutely a very flattish move is what you're seeing in terms of futures. If you can just pull that one on the screens, there you go. Your Dow futures, S&P as well as NASDAQ. And if you have to look at Asian markets as well, let's pull up that one on the screens and see what's happened on that front. Nikkei, I mean, strong moves there, 2.5%, whereas your Hang Seng is absolutely the opposite. Shanghai, which is trading flat. Pull up crude, we are talking about levels of around 93, 94. Again, today now it's inched above that $96 to $97 per barrel mark. So 0.8 to 0.9% higher is what you're seeing in terms of crude. And yes, this is on the back of the fresh attacks that we've been hearing amidst the negotiations which are already ongoing. Let's actually get in. Seth Freeman, Senior Managing Director at Glassrotner Advisory and Capital Group. Seth, good morning and welcome to the show. It's always a pleasure. This is Hiral here. My question to you is, how are you reading this entire geopolitical situation? I know we talk week in, week out about what next, but I think there seems to be no respite over here. On one side, questions and conversations about negotiations which are ongoing. On the other side, you're talking about fresh attacks which are being made, you know, on US bases as well. How are you reading into this situation? Because the impact is absolutely seen. I mean, you see that downtick in terms of crude, and there the spike comes in yet again.
Yeah, we see it in real time, the impacts of favorable announcements, negative announcements, the Iranian government saying the talks are suspended, the U.S. Trump administration saying, oh, no, that's not right. We're continuing to talk, and talks are back on. It's very volatile, and it's reflected in the market action.
Okay, Seth, hi, good morning. Mahima joining this side. With regards to FII's flow, right, I was just reading yesterday that in 2025, total outflows that we saw from FIIs have already been done in the last 6 months in 2026 already. So according to you now, do you think tides are going to turn? Because yesterday there was a Morgan Stanley report stating that, you know, from here on, a strong year for the equities is what they're expecting. So what's your overall view when it comes to FIIs, you know, outflows or inflows?
Well, there is a point at which the growth rate expectations may actually induce investors to come back in. I was reading an article this morning about whether the new calculations of GDP growth were correct or not, and indicating that, in fact, India had understated its growth rates, and it's been more close to 7.8% average, except for 23-24. So that might get investors excited. All of a sudden, there are articles popping up about this idea that if you take the high growth rate in India plus AI, then it could be supercharged India. And we may be reading more about that in the coming days.
Good morning, Seth. Sharad here. Of course, I want to talk a little bit on the macro front as well. And very interesting data which Hiral picked out is gold has overtaken US Treasuries as the world's #1 reserve asset for the first time in 30 years. Now, how does this actually shape up in the macros when it comes to the reserves for both the US Treasuries and the gold Treasuries?
Well, it's pretty crazy when you see gold prices rising in unison with the market and interest rates. So clearly, expectations to have some piece of the rock, the gold rock. There was also some recent news about the amount of gold tied up in India versus the rest of the world. So it is the reserve currency. On the other hand, you don't get any return on it on a current basis.
Seth, my last question to you from my side is in terms of the global IT sell-off that we saw in terms of overnight trade. I mean, brokerages are citing AI disruption as one of the key reasons. You had NVIDIA, come out and say that AI is not something which will be negative, when you talk about software companies, specifically Indian companies, and that's what caused that kind of rally in terms of Indian IT over the last 2 days. And in overnight trade, the kind of downtake that has come in, you have Wipro ADR, which was down, Cognizant, Accenture. What are you making of this entire AI theme? Do you think it's still a bubble which is brewing, ready to burst any time, or do you think there is really some froth there?
Well, there's got to be expectations of growth plus froth. If you look at the valuations, you were talking about $1.5 trillion valuations of companies. I was reading this morning again with SpaceX, expectations of up to 1,000 newly minted multimillionaires just from this one IPO. And I think what's being, and in terms of Indian IT companies, outsourced companies, large corporations are in fact cutting back on consulting spend, and that's going to affect the Indian consulting firms. On the other hand, I think it's very likely that the high-speed nature of AI and the amount of power and computing power that AI actually recovers may actually create demand for new software that hasn't even been contemplated yet.
Okay, Seth, thank you so much for taking out the time and, giving us all those insights. Always a pleasure having you at NDTV Profit.
Thank you.
Just on the SpaceX points, I mean, we've been talking about this big IPO coming in, but look at the valuations. The price to sales is almost 94 times versus that of a 25 times price to sales of NVIDIA and 8 times of
I think the large
Apple.
IPOs don't care about the valuations.
At all.
Still,
I mean,
it's
$135 per share.
egregious.
And the quantum of weightage it is going to have in the indices is going to be the key question from here on. Because if a SpaceX has to come in terms of any of the indices, the kind of companies that will have to do, the outgo that will have
index,
to happen.
Same thing which we have seen in your Taiwan and South Korea also.
So
never know SpaceX having a high index weightage.
So that is something that we will have to watch out for as to how will the mutual funds or ETFs actually rebalance and adjust themselves as well once SpaceX gets that entry in terms of the indices.
Right.
Absolutely, yeah. So of course, that's about the SpaceX IPO, but let's take a look at what happened yesterday in the markets, right? FI is yet another day of sell-off of around 8,300 odd crores, where DIs did buy around 9,500 odd crores, and that's why we saw overall Nifty closing in green above the 23,400 levels. It of course did snap its 4 days losing streak, so that was on a positive note. Largely led by the entire IT pack, both TCS and Infosys were the top gainers. Both were up around 5% each. The mid cap 150 underperformed the benchmark yesterday. New India Assurance, Hitachi Energy were the top losers, both down over 3.5%. For the small cap 250, it did better than the benchmarks because it closed around 0.6% higher. Newgen Software, Balaji Amines were the top gainers and both gaining, up over 15%. With regards to where sectors go, it was a mixed note. Of course, IT stealing the show for second day in a row. The Nifty IT was up over 4%. TCS, Infosys, HCL Tech, Mahindra, etc. all gaining in trade. But on the flip side, Nifty Pharma, we saw a good 6-week winning streak for Nifty Pharma, and then now since the past 2 weeks, we're seeing some profit booking coming in, and was the top losing sector yesterday as well, down almost 1%. Bot India, Biocon were the top losers in the Nifty Pharma, both down over 2%. Nifty Oil and Gas, Finserv ended in red for the 5th day in a row. For PSU banks, Realty as well as Auto, it did snap its 2 days losing streak. For FMCG, it did snap its 3-day losing streak but almost ended flat. For bank, it did snap its 4-day losing streak, and for metal, it ended in green for second day in a row. But lastly, I think I think what Hiral is important is that the long short ratio for FIs stood at almost 10:90. So
and what does that tell you?
And that basically tells you that we're still
I think in the last 5
not even
months,
droplets are visible
and
right
the short
now.
position is almost highest in last 5 months.
Exactly.
That's the concern.
I mean, and that's something which probably Puneet will also help us understand what the FNO data is indicating. But before that, if you have to look at the markets, what I'm seeing right now is buy on declines, sell on rally. That is exactly the theme of the market.
Yesterday's trade is almost playing out the same
in the same way.
Yeah.
And it's your ongoing geopolitical uncertainties. That is what is continuing to keep your investor sentiment pretty cautious. after yesterday's session, if you see implied open in terms of today's session as well, that is indicating a downtick. Let's just pull up that one. 130 points downtick is what implied open is indicating so far. Your bank nifty, that is also undergoing a consolidation phase, because if you see in yesterday's session, there are trading positions that are being built in terms of banking and FMCG companies. So probably there could be some bit of buying interest, or at least positional bets that could be coming in on both of these sectors. Now, IT, very important to talk about. The reason being is, after that 2-day surge that we've seen in terms of Indian IT, now brokerages are flagging AI disruption as a concern. Truist has downgraded Accenture to a hold. They've lowered the target price to $210 from $269. Citi has cut the target price to $195 from $215. And they're citing AI-led pressure in terms of where outsourcing budgets go, deal sizes go. And what they're saying is that AI-native firms are increasing competition for IT services. Completely opposite of what NVIDIA has done. It's going to be interesting to see what happens to Indian IT today. Puneet will take us through a setup in terms of what could be expected with a conversation that we will be having with the analyst as well. So you had Accenture, Cognizant, Wipro, ADR, all of them that were under pressure in overnight trade. So watch out for this, pretty closely as we speak. But moving on, let me head across to my colleague Puneet to take us through what's expected in terms of the FNOQs. Puneet, good morning. We were just talking about the long-short ratio of what and where it is at right now. But if you have to look at the cues, what are you picking up? Because there is no particular trend which is emerging in the markets right now. But if you have to look at the open interest addition that's coming in, what are the levels where you're seeing some bit of, confidence?
Well, thank you for that. We are actually seeing a very interesting setup for today. As you rightly mentioned, yesterday was a very good recovery in the second half, but down again in terms of the implied open by 125 points. The strength of the last 2 days, as you guys rightly mentioned, has been IT, might be under pressure today. So watching out for the broader recovery in the other stocks within the Nifty 50. Watch out for auto, because 2 days in a row hasn't performed despite good numbers. We also spoke to the management of Maruti yesterday, and hence demand side momentum is quite strong. So watching out for the other factors, other stocks in the Nifty 50 as well. For the Bank Nifty though, we've seen the earnings season come and go, but not too many triggers. So only the macro-led factors that we'll watch out for. Of course, the RBI meet also will be an important non-event to watch out for in that sense. So hoping for no negatives at this point of time. But in terms of the foreign investors, they yet again sold almost 8,300 odd crores. So despite that second half recovery, selling continues by foreign investors, and the index longs, as you mentioned, just a tad below 9%. So almost 91% shorts being built in and held on at this point of time for the foreign investors. And this is the most bearish they've been in the FNO market for the last 6 to 8 weeks. So we've been hovering around 19 to 20% in April, slipped to around 10 to 12 in May, and now around 8 to 9% at this point of time as well. Across the board, when you look at open interest distribution, that's changed materially from yesterday. The one factor that we were watching out for is 23,500 and 24,000. So about 23,500, all those red bars have been formed yesterday are on the calls and the longs being built in. And in terms of shorts, you've seen a massive put interest build up below that level of 23,500 across the level all the way down till 23,200. So material changes could happen if the index moves one way. And that's what we are seeing post yesterday's trading session as well. And stocks, very limited action, but 2 to 3 that came on our radar. GVTND continues to be one which is seeing massive build-up of longs, and that whole space continues to be very attractive. GVTND, Hitachi, Siemens Energy, all of those continue to be in focus. NHPC was one which saw build-up of shorts yet again. And in terms of the open interest losers, you had some change in HCL Tech in terms of short covering, but then the open interest thins out very quickly as well. So watch out for IT, of course, but also for the other players that haven't performed yet within the Nifty 50 basket, like auto amongst others.
Okay, so that's with regards to where the cues, what FNO cues are indicating so far. But let's look at our watch list. On mine, the first one that I have is Adani Ports. It's very interesting to see how Adani companies are moving yesterday. Smart moves on ports, enterprises as well. and power as well, in fact. And Adani Ports has come out with their May 2026 update. What they've said is that the total cargo handled has seen a surge of around 16%, while liquid cargo has surged by 33%, acting as the primary growth driver as well. In terms of container volumes, a 17% increase is what we've seen as compared to May 2025. And on a YTD basis, the total cargo volumes touched a 91.4 million metric ton, reflecting a 15% increase. Now, the logistics rail segment, that has faced a slowdown. It's dropped around 19% on a year-on-year basis, so that could be a concerning area. However, Jefferies has maintained a buy. They have a target price of 2,160, which has been increased from a 2,100. And what they're saying is that the capacity crunch is what will drive the next leg of upside for the company. And the potential for demand-supply gap at Gujarat and Maharashtra container ports is what is driving the market share gains. So watch out for this one. And you have Nomura, which has maintained a buy, and they have a target price of 1,930. A thumbs up coming in on this one. A general disclaimer that you have NDTV Profit, which is a Adani Group company as well. The second one on my list is Canara Bank. Now, this is also a thumbs up because the board has approved a capital raising plan of up to 8,500 crores for FY27. Both of this is as per AT1 bonds. The additional tier 1 of up to 4,500 crores will be raised via Basel III compliant AT1 debt instruments, and the tier 2 bonds will be again an addition of 4,000 odd crores as well. Now, this capital cushion will actually support the credit growth amidst a pressure in terms of profitability. And what is interesting is that the fundraising plan is actually coming in at a time of a leadership transition. Earlier this week itself, Canara Bank announced that Brajesh Kumar Singh had assumed charge as Managing Director and Chief Executive Officer, and his tenure will run until April 30th, 2019. And lastly, John Cockerell, interesting one there. Let's pull up the stock. I mean, no major moves in yesterday's session, but the company, along with its subsidiary, has secured a massive order, which is valued at close to 1,250 odd crores and 1,300 odd crores. The order is coming in from JSW Vijayanagar Metallics, and it covers design, engineering, manufacturing, supply, building, commissioning, etc. The target segment, I beg your pardon, is going to be the cold rolled non-oriented electrical steel processing lines. And this high-grade steel is a crucial component which is used in EV motors and efficient electrical appliances. So the segment where this is going to go is also something which is really very good. In fact, yesterday we had Maruti's Rahul Bharti, who was in our studio, and what he was indicating is that the kind of sales that CNG and EVs are seeing post Prime Minister Narendra Modi's speech with regards to saving fuel, that has nearly doubled, or in fact grown substantially.
Exactly.
And that's where the demand
even Puneet
is coming
yesterday
in
his link had mentioned that the EV two-wheeler sales has actually picked up from its historical averages.
So any of the companies who are suppliers to EVs, or companies who are manufacturing CNG vehicles, it is going to be a spectacular bump up coming in for them as well in terms of backward integration. So these are the three that I will be watching out for.
Well, yes, of course, the auto anks is something we'll be watching out for, but there are three other stocks which are there in my list. The first one is Aqueous. It's the Karnataka government has sanctioned incentives under the ESDM scheme for setting up a manufacturing unit in Dharwad. Now, these incentives, they're likely to continue till 2030. Of course, the valuations are on the higher side of this stock, so there is a caveat to it. But one important stock which is going to be in the focus will be Borosil Renewables and also Asahi India Glass. It's a positive news flow for them. The government has put a countervailing duty on the textured tempered glass, and this CVD will be levied for over a period of 5 years. They have put this on the Malaysian solar glass exports as well, and this is positive for the solar glass makers. Already this was put against China till 2029, and now another important news flow for Malaysia till 2031. So expect a good momentum, and more details we'll be getting you at 8:50 as the management joins us, so stay tuned with us. And the third stock would be Mankind Pharma. Jefferies report has come in with a management meet. They have maintained a buy rating and a target price of 3,000 rupees per share, but they have stated something important. They are turning the corner amid the lingering skepticism, and the improvement is being seen in the volume growth. Now, this is where the revival is happening, especially in the acute therapy segment, and also the consistent chronic segment distribution is something which the street is bullish on. For Bharat Serum, which was of course acquired by the company, their exports are expected to have a high teen growth in FY27, and there is a future optionality for the clinical pipeline as well. So 3 important stocks which have come on my radar. But Mahima, what are you tracking?
So the first one on my list is Concord Biotech. Now, we saw how Walk Hard performed on the Zenith approvals coming in, but this is another US FDA approval for a particular drug. This is basically used for organ rejection. The estimated market size right now for this particular drug is of USD 30 million, and the approval is in line with company's growth strategy, and this strengthens the position for Concord Biotech as a whole in the US market. Plus, if you see, there's good traction coming in the counter since the last 2 days. We've seen 2 good green candles with good volume action coming in. So it will be interesting to watch out for as to how this news brings in positive sentiment on the counter today as well.
It's going to be interesting because if 2 days of gains, is this going to be a candidate of
probably profit
buy on
we'll
rumors and sell on news kind of a candidate? Because, and if you see in terms of the market size also, it's still a very niche. It's a very small market when you talk about organ rejection, because in the end you're dealing with organ transplants and how many transplants that happen.
Correct.
So a niche, yes, could be market leaders there. Interesting to watch what happens today.
Absolutely. The second one is also an interesting one because that's Advait Energy Transitions. Now they have signed a BESS agreement with GUVNL, and the project size is of 150 megawatt, and this will, basically they will go ahead and build and run the battery project going forward. The contract is for a long period of 12 years, and the project gets government funding support. Plus, if we take a look at the stock performance of this particular counter since listing, it's been on a continuous upward trajectory. So we'll have to watch out for us. This is one of those stocks that has done very well since its listing, and not one of those one with the herd that has just listed on a premium but has fallen since then. The last one on my list is EPAC Prefab. Now this is, when I was talking to Puneet also earlier, and he was mentioning that, generally this company is not into supply of cells and modules, but in their filing they've also they've basically got an order of 165 crore, and they've said that right now they've not mentioned as to from whom they have got it, but basically it's for the supply of cell modules and design, fabrication, manufacturing, supply of cells, that includes erection as well, and this is approximately for a 4-month of completion period. So short completion period, but 165 crore is a substantial amount to look at.
Yeah, I mean, so interesting names that we're watching out for. But apart from all of this that we're talking about, I think IT is going to be a sector that will remain in focus, because when have we seen the IT index itself achieve these kind of highs in terms of yesterday's session? 4.5% up move there. And if you look at individual components as well, from a TCS to a Infosys, Tech Mahindra, very interesting and sharp moves that did come in. And now the gap within the sector is only getting wider. Now, while your tier 1 companies continue to report a subdued performance, your mid-tier players are clearly pulling ahead with stronger execution, sharper growth. The view is that this divergence is here to stay, and at least in the near term, with agile mid-caps better placed to capture emerging opportunities. Puneet, how are you looking at the sector today? Because you have that pullback that happened in overnight trade, if you have to look at the US companies, from a Cognizant to a Wipro ADR to an Accenture, whereas last 2 trading sessions have been absolutely strong. If you have to look at valuations, if you have to look at what's happening with AI, whether that will come in as a positive basis commentary from NVIDIA, and what happened in overnight trade, sum this up for us to take the conversation forward.
Well, thank you for that. As you rightly mentioned, this is of course Choice Brokers' view that they are preferring mid caps over large caps. But yesterday we've seen the downgrades come in now for all these IT companies, and you mentioned those by Truist across Accenture amongst other key companies. So that backdrop might have some negative impact on the companies and the valuations today as well. That will be something to watch. What Choice Brokers has also mentioned that they are preferring mid caps over the tier 1 companies, given the growth, as well as they are expecting that valuation divergence to continue at this point of time. But just 2 key data points I want to highlight. One's of course from the gains from the lows that all these stocks have seen. So TCS, Infosys, HCL Tech all seeing between 9 to 15% of recovery from the lows, and that chart is visible on your screen with a higher return potential yet to come in So that'll be something to watch. For LTM, Coforge, Persistent, the recovery from the lows is much sharper, and hence the return potential is slightly more subdued. So it's a very interesting play between both tier 1 and mid caps. And finally, in terms of valuations, of course, when you compare it with the 5-year average, it is much lower, but the difference is quite stark. For TCS, the 5-year valuation is almost 29 times, currently trading at 17 odd times as well, and that valuation differential is visible on your screen for all these key players. So that is the key setup for today. Of course, the views from Choice Brokerage will also be something to watch, but mid caps is what they prefer compared to the tier 1 companies.
Thanks a lot, Puneet, for that. And of course, there's both for and against for the IT space, and that's where it gets interesting. And to get a little bit of clarity for you, we are joined in by Kunal Bajaj. He's the equity research analyst at Choice Institutional Equities. Good morning, Kunal. IT sector as a whole, is it looking like an inflection point here? Is there an AI trade to be made here? And if you just compare that with the large cap ITs and the mid cap ITs, where do you think there is a good alpha to be made, and your views on that?
Yeah, hi, good morning. Thank you for having me on the show. So see, the recent up move which we have seen in the last 3 or 4 days, so this is broadly on the sharp improvement in the global technology sentiment rather than a material change in the near-term earnings. So we have seen that US software companies like Snowflake and as well as ServiceNow have given a good results as well as have given a very strong guidance. So this has been driving the IT services over here as well, because these companies have good partnerships with all of these software providers. Further, what we see that AI, which was also seen as a threat for IT services, but what we see on the other hand is that this is also an opportunity for these companies, because they can make a good share of revenue from large-scale enterprise AI adoption. But this is somewhat gradual, and they can have integration or orchestration capabilities, which can be one of the key growth areas for the company going ahead. But in the medium term, we expect some pressure, because AI-led revenue deflationary impact would be there. So until unless we see AI monetization going forward, taking place for your for revenue deflation, we expect in the medium term there can be some pressure in the overall revenues. But coming to the point about mid caps versus tier 1 companies, so we expect in all of the tech transitions which has happened in the past as well, tier 2 companies kind of gain wallet share as well as market share.
Right.
And due to the high nature of the business, so they are better off in any transition. So this is a similar case for mid cap. This is similar case is here as well. Yes.
Okay, so Kunal, good morning. Hiral here. What you mentioned about what's happening in terms of AI as a trade in the global markets, and that's a rub-off effect that we're seeing in terms of India as well right now. I mean, it's not something very much from a fundamental perspective, because revenue recognition is something which will be on the cards much later. However, overnight trade, you have brokerages which have flagged AI as a disruption, where you did see global IT sell-off that did come in. Accenture, Cognizant, Wipro, all of them were down, around 6 to 8% in the US. How are you looking at this entire narrative play out? Do you think AI as a trade, to look at India and bet on it, then is absolutely not a thing to do right now? One, and two, your topics.
Sure. Thank you. So firstly, what we see that AI as a play, what we see India is on the infrastructure as well as application layer, right? So we play on that, and IT services are well positioned. But what we see the entire value chain of AI, so India would be not a direct beneficiary of this play, and mostly what we see enterprise AI adoption is somewhat gradual. So we see at the POC to implementation stage is somewhat the success ratio is 30%. So there is still a long way to go going forward. And in terms of top investment ideas, we believe in the tier 1 space. We are bullish on Tech Mahindra and Infosys. In the mid cap spaces, we believe Coforge, Persistent, and Happiest Minds to do better.
Hi, Mahima this side. One last question from a valuation point of view. As Puneet was just mentioning, right, a lot of these large cap names are trading much below the 5-year average, right? But at the same time, that's not the case for a lot of mid cap IT names as well. So how are you looking at this from a valuation point of view?
Yeah, hi. So what we see, we have done an analysis in February when the most of the stocks were down 25-30%. We done an analysis where we find out that the valuation premium for tier 2 companies, where average, if you see on a 5-year basis, was 45%. It narrowed down to 20% in end of February. So what we see, the convergence is happening again now. And so mid cap companies like Coforge, Persistent have been up 35-40%, while TCS, Infosys are up around 10%. We were expecting this. That's why we were bullish on the mid cap spaces rather than tier 1 spaces. I believe valuations point of view, we are not seeing a sustained re-rating on the stocks. So any rally which we see is temporary at the moment. And we back tier 2 companies to gain market, as well as have strong performance rather than tier 1 companies.
Kunal, thank you so much for taking out the time and helping us understand the entire space. But, sticking with IT itself, Coforge's sharp rebound leaves limited upside with valuations stretched and future gains hinging on execution as well as the Encora integration. Now, Puneet is here with a deep dive that will help us understand the entire aspect of Coforge. Puneet?
Well, thank you for that. And as you directly mentioned, we're seeing, a lot more interesting aspects on Coforge in the stock price movement. So let's bring that up, because from a peak of 1,977 rupees, the stock which hit that peak in December 2025 corrected massively down to just about 1,010 odd. So you saw stock correct nearly 49% from the highs. What we've also seen now, trading at 1,500 odd levels, we've seen almost a 45 to 50% recovery from the lows for this counter, and almost up 40% from the lows that we've seen for March. So just in the last 2 months, massive recovery seen after that AI deflation play, which started off in February as well with the launch of all these models. But what has changed is the broader recovery that we've seen in the IT names. Q4 performance for the sector was also very strong in terms of what we've seen post the result reaction for Coforge. So May 5th is when the result came through, and since then stock was trading at around 1,100 odd. Since then stock has rallied almost 31% as well. When you also saw that 5 large deals being signed in Q4 gives some revenue visibility impact as well. And order book is now roughly about $1.75 billion, which is up 16% for the company. And combined revenue with Encora, of course, targets at $2.5 billion as well. But the big question now, if this recovery sustains, that's point number 1. But a lot of it is already reflected in the price. So the key question now being, if there are any synergy benefits that the acquisition with Encora will see, which the company has guided for in the medium term. This is important because when LTI acquired Mindtree, those synergy benefits were also expected to come in, but that hasn't played out yet, and that's reflective in the underperformance for LTM stock price also. So the acquisition is key, but so is the synergy benefits that come through as well. Finally, in terms of valuations also, of course, the re-rating delivers on that, but Coforge was trading at almost 53 times in the last 3-year average, down to 25 now. And when you look at the other players like Persistent, they still continue to demand their premium valuations versus Coforge. We spoke about the other players like LTM, TCS as well as Infosys. Massive valuation comfort now compared to a 3-year average, but the return potential for Coforge will be something to watch. 32 analysts continue to track the stock, 6 to 7% return potential as well, but the Encora acquisition continues to be a key one for Coforge in the medium term.
Thanks a lot, Puneet, for that. But now time for a short break. On the other side, we'll get to the top trading strategies for today.
So I do want to stress that the earnings outlook for India is pretty constructive. We've got around about a 15% EPS growth on a 12-month forward basis, and valuations are a little below 20 times forward P, and that's down from peak multiples. If you look at the FII outflows, they've obviously had to be matched by SIP buying domestically in India, but really you can date the FII outflows to really the third and fourth quarter of 2024, and then they picked up in 2025 and so far this year. In markets like India or indeed Indonesia or a market like the Philippines that are very skewed to consumer and financials, you've had this tendency for foreign capital to be withdrawn. Actually, we much prefer capital spending names, of which there are some significant large cap names in India that are oriented to defense spending or energy capex, which is ongoing here.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 20.
Welcome back to India Market Open on NDTV Profit. Implied open almost 130 points down tick is what you're seeing. That is what has continued. And the question is where from here on? In fact, let's get in Kush Bora and Parag Thakkar as well. Good morning.
Good morning.
Kush, levels to watch today, because you know what I'm seeing is that conviction that you have in terms of banks, superb, because that positional trade is getting built on banks and in FMCG is what I'm seeing right now. What are you looking at? Because I mean, थोड़ा ऊपर जाता है, वापस नीचे आता है.
पूरा sell
I mean, क्या करें?
So, first up, a very good morning, right? And aren't we talking about the Mumbai rains? I mean, traffic, but reprieve
Let's
from
not
all.
jinx it. That's what we
let's not
thought.
jinx it, right? Yeah. No. But it's a good reprieve from all the heat that we've been having for the last 15-20 days or so. Hopefully, markets also get some of that, right? Okay, so yesterday we spoke of one thing that what's happening is that Nifty's attempting breakouts, like, in this calendar year alone, there were 3 attempts at breakouts, big and small, that were sold into. That is becoming a bigger concern. Of course, you're having, some levels from which there are, rebounds from, lower levels, but something so meaningful, and that is perhaps causing a bit of a concern. So let's just first quickly, look at where we are right now. Yesterday's, positive close was Nifty breaking the 4-day losing streak, right? A bit of an expiry effect also into that. So I wouldn't read too much into it. Also, it wasn't a very convincing, recovery, because intraday also there were, sell-offs from higher levels, correct? Also on the daily charts, if you see, there is a lower high, lower low formation which continues despite the positive close. PCR, by the way, which was at 0.69 yesterday, which, we said is an oversold, indicator, and now it's actually come to a neutral zone of close to 1. So there is room on the downside yet again. All of this is showing that, yes, there is some more, downtick that can happen on the index. The gap support and the 61.8% retracement of the April rally comes at 23,150. I would want to get that level filled before we move higher, otherwise it remains an overhang. But all of this now is starting to seem a bit like peak pessimism. I'm not saying that we're there yet, but it's starting to sound like that. It is also starting to reflect in the positioning. FII positioning is at 91% short on index. I think Sharad mentioned it briefly that it is at a 5-month high, right? So maybe any trigger and any short covering from here on could actually give a good fillip, but that remains to be seen. You don't preempt it, you ride it once you have that conviction and once you see that rally building in. So like I said, no trade on the Nifty right now. Bank Nifty also supports around 52,800. That is where the 61.8% retracement comes in. Once you get those levels, is perhaps when you consider a positional long with a favorable risk-reward ratio, not now.
And Kush, what would be your technical picks?
Yeah, so going with a mix of long and short, sticking to that strategy because the markets are reacting that way, right? I mean, you have to have a short, because even the mid and the small cap space is starting to see some profit booking, here and there. So the picks, CG Power and Vishnu Chemicals on the long side and Ireda on the short side, right? The targets on these, CG Power 930, 949, 885 is where you keep that stop loss. Vishnu Chemicals, 646, 662 are your targets. 614 is where you keep that stop loss. And on Ereda, small targets, small stop losses, keep tight stop losses on this one. 119 and 117 are your targets on the downside. 123 is where you keep that stop loss.
Okay, so interesting names there. You know, another segment I want to talk to about is the Adani Group companies. Yesterday, Parag Bhai, good moves is what we saw. I think in the top 5 you had Adani Ports as well as the other ones. If you talk about the business update that has come in from ports as well, seeming to be very strong in terms of the May cargo volumes as well. In fact, you have brokerages like Jeffries, they've maintained a buy for a target price of 2160, and you have a Nomura who has a target price of 1930. What is your view when it comes, because the surge that's coming in, would you still be a buyer at current levels?
So basically, we discussed this, I think, at Adani Ports at around 1450. It is a strategic asset, phenomenal asset, I would say, and annuity cash flow kind of business like Bharti Airtels of the world. So I would say that if you have, you just hold on. The momentum has just begun. The institutional investors have just come in some of the Adani stocks. So I would say that it's a good momentum to ride on, and companies are doing, as you rightly said, 16% growth in volumes in Adani Ports. So Adani Ports, Adani Enterprise or Adani Green, all stocks, the momentum is on in my view.
Okay, so if the momentum is on, Kush, would this be a momentum play?
See, they've run up quite a bit.
Correct, and that's the reason this question
immediate
now.
risk-reward ratio is not favorable, correct? But the good thing is that structurally the trend has changed. So they've gone into, from a consolidative trend, at least on Adani Enterprises, right? It's gone into a consolidative trend, say a bullish trend. So for me, it'll be a buy on declines kind of a strategy for a favorable risk-reward ratio. Close to the 2800 mark is where the risk-reward ratio becomes that much more favorable. Ab utna niche aayega ki nahi, that remains to be seen, because I've been waiting for that dip, and it's only been, a very shallow one. So if you do get it close to 28, perhaps 2850 odd levels, that's when it becomes more interesting. Same applies to, a lot of companies from the group, Adani Power, Adani Ports, a lot of these. So like I said, structurally positive, but you have to wait for that dip to come in for the risk-reward ratio to be favorable.
Of course. And standard disclaimer, since
Yes.
we're talking about Adani Group of companies, NDTV Profit is also a part of that group of companies. But Parag sir, I want to talk to you about the pharma names, because I mean, if we take a look at how it's been in the past 8 weeks, 6 weeks of gaining streak, then we have seen now profit booking coming in these counters. But do you think fundamentally there are some pockets that you're looking at that are looking still attractive to kind of buy?
Yeah. So I have, so basically I always said, see, domestic pharma, especially on the chronic side, that looks very attractive. Of course, the valuations have now gone up. Like, for example, my favorite stock, Torrent Pharma, now it is very overvalued. I would not recommend to buy at this price, although in long run you will still make money.
Okay.
So whether it is Torrent Pharma, Sun Pharma, all these companies, I would say I will not play too much of US generic plays, but domestic pharma, some of the names like Ipca Labs or Ajanta Pharma, those are also decent ones.
Well, that's correct. So domestic pharma is something which we are tracking.
On the chronic side, I will be more positive.
More positive. And today itself, Mankind Pharma also, there was a positive news flow on Jeffries as well. But moving on, in a big development, US Section 301 investigation has found India among 54 countries that have failed to curb imports of goods made with forced labor. Remember, as India and US trade deal talks are in progress, India is seeking a fair term in this probe. Rishabh is here with more details. Rishabh, what's the key development here?
Absolutely. What we have is a major development, what the US has done. Remember, way back in March, they had started these two investigations under the Section 301 of their Trade Act. Those two were in accordance with, one was on excess capacity, so on dumping, and the second one was on forced labor. Now, this second one of forced labor, it had the US had investigated 60 economies, 54 of which they found guilty now in terms of having imported goods that were built with forced labor. And they've sort of now the US is open to proposing an additional import duty of about 12.5% on these 54 economies. India is one of these 54 economies. What we have, and we had reported this a couple of days back, what sources had told us that the US team is in India, of course, and relief from these Section 301 investigations was on top of the agenda. Remember, the US's tariffing authority has reduced since the Supreme Court struck down its tariffs. Everyone was at 10% global tariffs, but now this additional 12.5% duty can also kick in. So the US has gotten more leverage in terms of imposing these tariffs now. What we're also picking up is that these tariffs are not immediate. They are proposed right now. The USTR will be holding public hearings on this on July 7th. So that's when India can also make its own representations. They can appeal against these proposed duties. So that's what we're picking up at this point in time. We're also trying to get what India's Commerce Ministry might say on this as a response to the USTR findings.
Rishabh, thank you for that. But very quickly, from your conversations in the past as well, I know these will be the smaller names, the MSMEs that will get impacted. But any sectoral impact that you're seeing? Because to my mind, probably it will be textiles, it will be your marine exporters, or a very say metal intensive, heavy intensive industries that will get impacted on the back of this. What is your reading into it?
Absolutely. I think, like you said, textiles are expected to be the major sort of recipient of this hit, of this duty hit. We're not very sure whether this 12.5% duty extends to all Indian goods currently, because there are only certain textile-related goods that could be found guilty of these wrongdoings under the Section 301 investigation of forced labor. So there is also an additional textile mechanism that the USTR is proposing as a result of the findings of these investigations. So at this moment, it's not clear what the extent of this impact is, but what we are clear with and what the USTR report mentions is the 12.5% additional duty on Indian goods. We are trying to find out what the exact sectoral impact of this could be, but prima facie, it does look to be textiles as the major sector getting impacted due to this.
Thanks a lot, Rishabh, for that. And me and Hiral were discussing that immediate impact that can come on textiles with the amount of exposure coming in. But Parag bhai, trying to understand India's textile setup which has come in, especially the global FTAs which are coming in, and a little bit of pricing benefits are also coming in. How do you see this kind of a minor hiccup this is, or there's going to be some kind of a major change happening here?
No, I think this 5-month window where they have reduced import duty on cotton, that is a good relief, I would say, for entire cotton value textile chain. Starting from, say, Vardhman Textiles, KPR Mills.
So the spinners right till the...
already yarn spreads are improving.
Yes.
So I would say that this is a good positive, and Vardhman and KPR are really the great companies in terms of Indian textile. KPR, I would argue, it is a little bit expensive on from PE perspective, but both these stocks are very good. And of course, Welspun Living and Indocount and those kind of companies will also benefit. And as such, if the tariff is, say, between 15 and 20%, for Indian, then these companies should do well over a period of time.
Okay. Anything that you're probably liking on the charts in this space, Kush?
So it's not something that you go out and buy, like, the whole sector is doing well or anything. In fact, on the contrary, there are a lot of names which are not doing well. But the one that very clearly stands out is Arvind, right? I mean, it's had a good run, continues to see accumulation on any kind of dips. So for me, this is a stock that you can consider. Yes, 500 is a psychological resistance more than anything else. But I think once you get a comfortable closing above this, I think higher levels of about 525, 545 kind of levels, very much on the cards. So this is the one that I prefer. On the downside, stop loss at the 475, 480 zone.
All right, okay. Now, the other name that could be in focus today is HUL, because Unilever is sharpening its India play with a clear message from the top CEO. Now, he's saying that the company won't repeat its China miss and plans to bring its global premium portfolio into India as the market matures. Here's exactly what he said.
We got late into the Chinese party. We will not get late into the Indian party. We have now a portfolio of super premium brands that will travel into India at the right time when the markets develop.
This is important, right? Because India is the second largest market for Unilever. Plus, we've seen as to how in his comments, by the way, he also did mention that it's been doing better than its peers in terms of especially home and personal care, in terms of volume growth as well. So this is a key commentary coming in, and with the new management especially, we've seen as to how the focus is on fewer but better bets, premiumization, etc. So this commentary coming in just adds to the positivity for it.
Adds to the positivity, but the question over here is, at this juncture where the expectation is, will consumption be hit? Is this the best time? Parag bhai, your view, because you have Unilever, which is saying that, okay, India, one of our biggest markets already in terms of market share or the contribution that we have, but to come at a time when there is that little bit of uncertainty.
So I would say that, see, the price is superb for long-term investor. For if you are a momentum short-term investor, don't invest in this sector alone, this sector itself. Because in short term, there will be worries that monsoon is deficit, although monsoon has started today, but I would say that monsoon is deficit. So I think in near term, 3 to 6 months, I think people will not gain much. Of course, there can be a tactical trade like what happened in IT in last 3 days. In FMCG also, because I think it is oversold completely. Lever below 2,100 is a completely oversold price. I saw lever at this price 6 years ago. And now it is trading at 45 times only.
Exactly. Kush, any technical trade, since Parag bhai mentioned that there might be a chance of it, anything in the FMCG?
There was an attempted recovery, but massively sold into. So this is my concern, that structurally this is not turning out to be that kind of a money spinner, even from a momentum perspective. Parag bhai rightly identified that near term mein पैसा बनाना FMCG में थोड़ा challenge हो सकता है. The only one that stands out is Marico, right? Very strong structure. Any kind of dips should be bought into. Historically, it has rebounded from the 20-day and the 50-day moving average zone. Now, right now that comes in at 775 and about 745, right? So if it dips and comes to that zone, then it becomes attractive. Otherwise, if you see the charts for a lot of other names, you will very clearly see a downtrend. So I wouldn't really venture in from a momentum perspective.
But there are trading positions that are being built on FMCG, right?
Not as much. So I'll tell you what's happened in IT. If you go back about 15 days, maybe a month or so, the street was 50-50 on IT. Right now, if you have that conversation, it's actually tilted to 60-40, the kind of number, than the kind of optimism that is creeping in, and you're starting to see that on the price. Is that the same thing on FMCG? I have my doubts.
Okay. So that's with regards to, and that's a good correlation that you've made. I was wondering why IT and why FMCG. But Parag, we'll talk about IT. One important announcement that has come in as well, which actually warrants a discussion, is where India is tightening the screws on solar glass imports. Now, fresh duties on Malaysian shipments is adding to the existing restrictions on China. Low-cost imports are also losing ground. Before we get more details on what this would actually mean for key players, let's head across to my colleague Varsha for more details in terms of the announcement and how does this benefit. Varsha, over to you.
Well, this duty was actually needed to protect the local players. Now, government has imposed countervailing duties on solar glass imports from Malaysia. In simple terms, imports will get hit, local players gain. Now, the duty details onto 9.7% for selected companies and 10% for others. Now, why this is important, if you see 15 to 20% of solar glass imports were coming from Malaysia at deep discounts. Now, that discounted supply route is now shut. Even China imports were already restricted till 2029. Now Malaysia is also covered till 2021. So two major low cost import sources are being blocked, and hence this is a very big news and positive news for Borosil Renewables, which will have a positive impact on realizations and margins for the company.
Okay, thank you, Varsha, for that. In fact, let's get in Mr. Pradeep Kheruka, Chairman at Borosil. Mr. Kheruka, this is absolute positive news for the industry as well. And in terms of policies, in terms of push, when you talk about, domestic manufacturing, absolutely pro the sector. Your initial comments in terms of the 15 to 20% of the solar glass imports that would earlier coming in.
Yes, ma'am. It is a definite positive development. This duty was actually imposed about 5 years ago, and it was going to come to an end on the 2nd of June, that is on the 3rd of June. And it had to be renewed, and we are grateful to the government for having stepped in and given an extension of 5 years for the continuation of this duty. So this is coming in the heels of the announcement of the imposition of ALCM, which is a standard that has to be followed by anybody using a solar cell in India. Fundamentally, what this means is that the government is continuing to support domestic manufacturing of the solar modules, solar components, solar ecosystem in India. So this is good news for the Indian solar industry.
Kheruka, just to understand more, especially on the volume and the growth outlook front, how does this change for your company for FY27 now?
Well, the thing is that if this had been withdrawn or if this had been allowed to lapse, then it would have been a downside for the solar manufacturers, solar glass makers. Fortunately, since it has been extended, that means our outlook, which is very strong, continues to remain strong, and this would spur investments in solar glass manufacturing in India, and the people who are already here will do well. So all in all, it's a very good development for the Indian solar glass industry. And in fact, it's a signal to anybody who wants to enter manufacturing of any components within the solar ecosystem. I think this shows it's a sign of strong government support.
Mr. Kheruka, hi, good morning. Mahima this side. And as you rightly mentioned, it's a sign of a positive support coming in from the government. But the key question I think here is whether, with this import getting restricted, there is enough domestic supply to meet demand, or in near term there is going to be pressure?
So let me clear the air on one thing. There's no restriction at all. It's just that when the glass comes in, it'll be subject to a duty, so it equalizes the prices. And people remain completely free to import from Malaysia with no restriction at all. It's just that this is something which was on the cards, and it has continued. So in effect, it doesn't change anything.
Mr. Kheruka, that's an important, clarification that you make, that in terms of pricing, it will come in at par with regards to the domestic pricing right now. So there is no change in terms of people resorting to imports which were cheaper earlier as compared to the domestic manufacturers, right?
Right.
So in terms of the structure, if you have to look at the structure of this industry in the domestic market now, what really changes? Is there any benefit apart from volume pressure that domestic players would be facing? Does that go away, or anything else also changes?
What would have changed if the duty had not been continued? The two things would have changed. The import prices would have dropped. That is one. And that would have brought some pressure on domestic glass manufacturers, which has not happened. The second thing that would have changed, it would have been a signal that there might be a rethinking in government policy circles regarding the importance of domestic manufacturing of solar components. So there has been no change, which means there's a strong support for domestic manufacturing in government policy that is continuing. And this means that the existing production setup in India for glass manufacture is going to grow. This is going to invite people to invest more money, create more capacity in the country, which is good for the national economy. I would say that the route has not been blocked. You can continue to import solar glass from Malaysia after paying a countervailing duty of 9.7%, which is not very large, and this has been ongoing in the past. So effectively, it has not changed. The situation has not changed. The only thing that has happened is that the strong signal to entrepreneurs to continue investing in Indian solar manufacturing has been given by the government. And the second thing is that the existing profitability, the profitability of existing manufacturers is going to continue. As far as the overall scenario is concerned, there's very strong demand for solar glass. So we are squeezing out every ton of glass that we can from the furnace and selling it, and people are buying. We make very good quality glass, and it's very well accepted. And we are coming in with 60% expansion within this financial year. So this looks good for that. And generally, it's a positive signal all round.
Okay, so a positive signal all round, but really on the ground, nothing really changes. That's the key over here. Thank you, Mr. Kheruka, so much for joining in. Always a pleasure to speak to you and get that clarification as well. Parag bhai, any view, because initially when the news came in, we thought this would be positive for companies like a Borosil. However, here you're talking about, you're creating an equal playing field for the domestic manufacturer and the imports that are coming in. It's not really beneficial to that extent for the domestic players.
So I would say that, see, this is a sector where, lot many changes will continue to happen, because government will have to balance between the domestic capacities coming up and of course the viability of the projects. So I would say that many such changes will keep happening. That's why we are underinvested in this kind of sectors where things are still evolving.
Correct. Okay. As we see, let's look at what the pre-open rates are indicating so far right now in terms of Nifty 50 as well. Clearly, I mean, a 57 points downtick, but you're still 23,400 is what you're seeing in terms of Nifty 50, 130 points downtick in terms of Sensex as well. Individual stocks, nothing major there, but our NHPC that will be in focus on the back of the OFS, Concord Biotech on the back of the US FDA approval. You have ICICI Prudential, Escort Kubota, Eris Life Science, Havels. These are few of the names which are showing some good moves. You have Mankind Pharma, NetWeb Technologies. Schneider is also very interesting. 2 or 3 consecutive sessions of declines coming in there. Jupiter Wagons, these are few of the names that we are watching out for so far. From your side, Kush, in terms of the way pre-open rates are indicating, anything that comes to your radar?
Actually, I'm quite interested about how Nifty is actually shaping up right now. Okay, so I don't want, of course, the markets to fall. Nobody does, but it'll be a good idea for the Nifty to go down, fill that support, that gap level, and then rebound. However, what this is indicating right now is that there is a 23,500 straddle at play. If you look at the options data, there is a straddle at play at 23,500. Now the total premium comes to about 370. Let me round that off to about 400. So 23,100 on the downside, about 23,900 on the upside, ties in with the support and the resistance levels. So maybe we could have the index playing it in this range for some time, and that's all right, because the mid and the small cap spaces have seen profit booking already. There could be a chance of these stocks going up again. 2 stocks that I want to highlight that we discussed yesterday, one of them which is Thangamayil, by the way. We discussed this yesterday. It's gone on and hit target 1, target 2, everything in day 1, and my conviction on this. We've spoken about it on this show, on Ask Profit a couple of times. So if you have, I think you should continue holding on with the trailing stop loss at 45.50. That is one stock that you can still hold on to. And the second one is Shilpa Medicare. Now this was our weekly pick on Monday. 525 was the first target, that was his hit yesterday. Mild profit booking from those levels, but all in all the structure is still good. You could very well continue holding on to this one as well. In fact, from a momentum perspective, you can add second target of 550 still intact. Maybe you can bump up your stop losses to about 505, 510.
Okay. All right. Now, on to our brokerage call for the day. Kotak Institutional Equities has upgraded Cartrade to buy. And Varsha joins us with more details as to what's the rationale behind it. Varsha?
Well, Kotak is actually bullish when it comes to Cartrade, and they've raised their target price and upgrade Cartrade to buy. Now, let's see why the company is bullish. Now, first, you remember that the stock had corrected sharply this year on fears that AI could, disrupt the business. It rose to 3,000 rupees, but then it fell, or it came back to rupees 1,700. So that kind of pressure that we have seen. But now what Kotak is saying that risk may be overstated. Number one, they believe that the Cartrade strong dealer network and deep database give it a solid moat. So even with AI coming in, the impact may be limited. Now the bigger trigger over here and why the Kotak is bullish is of course the OLX business. Kotak is assigning a higher valuation here, expecting steady growth in transactions, better utilizations or monetizations, and better margins for the company. And because of this, they have raised earnings estimate by 1 to 5% for the next few years. This is on higher profitability estimates by OLX. So overall, Kotak is actually bullish on the OLX business when it comes to the car trade.
All right, thanks a lot for that, Varsha. Now joining us, we are having Chandan Tapadia, Head of Technical and Derivatives Research at Motilal Oswal Financial Services. Good morning, Chandan. Always a pleasure to have you at NDTV Profit. And a lot of mixed cues are coming in for the benchmark indices as well. Seems like a sell-on-rise market. How do you see the important technical levels?
Good morning. Thanks for having me. So yes, we have seen a volatile swings in a broader trading range in the market. In last 4-5 days, index was making lower top, lower bottom as it fell to surpass its 50-day MA and a key hurdle at 24,000, drifted towards 23 to 22 levels. However, we witnessed some recovery of 250 points from lower levels, but again, sustained call writing is not allowing market to move on the higher side. If I look at the 3 data setup, we have seen a spike in put call ratio that headed above 1. But the only concern is that FIs are selling and FIs long short ratio is now near 8 to 9%, which clearly indicate that sustained selling pressure is clearly visible from the foreign players. So in this scenario, it would be limited upside kind of market where support will be there, but upside hurdle could continue to be there. So as of now, the broader trading range could be 23,750 as a hurdle on upside, while on the downside, key level or key support will be 23,222 to 23,000 marks. If I look at the Bank Nifty,
okay.
Yeah,
please go ahead. Please go ahead.
Yeah, if I look at the Bank Nifty, again, we have seen some selling pressure at higher levels. And till it remains below 54,000, bounce could be sold for the downside target towards 53,000. So in both the indices, mixed set of cues with limited upside and sell on bounce could be there in the market.
Right, and Chandan, what are your technical picks?
Yeah, so I'll focus on 2 names. One will be the VBL. So VBL has seen a positive price pattern. And in fact, we have noticed a consolidation breakout on the daily and the weekly chart. It has been making high tops, high bottom on the lower time frame. So here we are recommending to buy with support of 526 and stock can head towards 560 kind of level. Second trading idea will be buy on Adani Energy Solution. A good buying interest in most of the Adani group of the companies. So Adani Energy Solution will be the other name where we see a positive price action. After the corrective move of last 2-3 days, stock has seen a positive price action. So with support of 492, it can head towards 1600 marks.
Okay, so those are the top picks, and just a disclaimer again, NDTV is AMG group company which is owned by Adani Group as well. Kush, you have some additions to make to what Chandan is saying as well.
A query and a congratulations for Chandan, by the way.
Okay, promotion?
I really wish for it, for him. But Chandan bhaiya, ये बताओ अब Walk Pharma Wokhad का क्या करें? He knows. I've already messaged him personally, congratulating on the call. Fabulous call. The reason I say that is because he's reiterated that call a couple of times. I think around 1600-1700 level. Chandan, correct me if I'm wrong here, right?
Yes.
What a fabulous move. तो पहले तो congratulations on that call. और बताओ अब यहाँ से क्या करना चाहिए Walk Pharma पे?
Thank you so much to NDTV and you as well. And I always believe that when you have conviction, it should be passed to audience. And apart from Walk Pharma, I recommended so many counters with huge conviction, whether we talk about MTAR Take, which rallied by more than 200%. We can talk about the Motherson Samardhan, CZ Power, counter like Apollo Tube. So, and multiple times we recommended about BSC, MCX. But yes, coming to the Walk Pharma, I witnessed a positive price pattern. In fact, the setup was clearly visible on the weekly and the daily chart. And in fact, the data setup was also indicating, as we have seen a major spike in the delivery volume. So I'm sharing the reason behind conviction as well. So that will be helpful for everyone. So I picked the counter near 1600. I was expecting it to go towards 2200.
Lost Chandan's audio as well, but Wokhad has been interesting with that. If I have to look at any of the other pharma names as well, there is some momentum that's being built on a Mankind Pharma. Let's pull up that one on the screens. And if you see, probably last couple of trading sessions, today again a 1% up move, but Parag, any views coming in on a Mankind?
Yeah, so as I said, I'm very, very positive on annuity cash flow businesses.
Okay.
This is a business where 42% of the revenue comes from chronic. Chronic is a lifestyle disorder. And on trailing base it trades at 47 times, which might be expensive, but still cheaper than the leader in chronic pharma like Torrent Pharma. So I remain very constructive on this name. And I think they have managed their acquisition also very well. They have reduced leverage. They are trying to reduce net debt to EBITDA to 0.5x. The company is doing all right things. I think it's I would say a core pharma stock one can own. Like Bharti Airtel, here is also a business which generates annuity cash flows. And safe in this environment. Sorry.
No, go ahead. I'm just wondering if charts are suggesting otherwise for Mankind Pharma.
I think you're starting to read a bit of them yourself. But yeah, so look, it had a fabulous run, a near vertical rise, right? If you see the late March move. And usually I would have discounted whatever happened in the last week or 10 days as just profit booking. Had it not been for the kind of volumes on which, the stock fell. That is my concern. Now, it still has a few things going for it technically, where, the 50% retracement comes in at 22.80. The 200-day moving average also comes in at that level. So maybe, it'll take some support at those levels and then rebound. But for it to regain any kind of momentum, I would want to see the stock close above 23.50. So it's still structurally positive, but a close above 23.50 is something critical from my end for it to, move higher beyond these levels.
Okay. Another segment I want to talk about is auto. Yesterday, we had the Maruti management who was at the NDTV Profit studio, and what interesting comments they made was that post Prime Minister Narendra Modi actually giving out a speech in terms of saving fuel, CNG and EV bookings have seen a sharp rise, a 100% jump in EV bookings in the last few days, a 40% hike in terms of CNG bookings is what they are seeing, and they are seeing that move towards hybrid actually play its way. Parag bhai, if you have to look at this strong commentary, CNG, EV, at this point with the kind of models and new launches that you're looking at, would you still prefer a Tata Motors PV as compared to the others?
No. So basically, first of all, I was bullish on Tata Motors CV.
CV, sorry.
But in CV, that I publicly stated that we have sold at 490. We were bullish at 400 and we sold at 490. Right now, as we speak, we have accumulated some of the auto stocks like Maruti, TVS Motors, Bajaj Auto. Bajaj Auto is my favorite today. So these are the auto stocks which have bought in this correction after the war has started.
Okay.
Well, that's pretty interesting on that. But Kush, apart from this, EMS stocks seems to be out of flavor. But a couple of good news flows is coming in. Of course, EPAC came out with its numbers also. There was an order win also, Mahima had stated.
Yeah, but that seems a little different because this is for cells and modules, and that's not generally what EPAC prefab does. So, any view on this, Parag?
No, I have not followed this space. Yeah.
No worries. Any views on the charts then, Kush?
Not on EPAC, not very constructive. Sirma is the only one that stands out really.
Okay. We're about 10 seconds away in terms of pre-open. It's going to be interesting to see because 130 points decline is what implied open was indicating so far. IT, yes, that's going to be on our radar. FMCG is going to be on our radar as well. But let's see. I mean, not that bad. We're still above that 23,400 mark in terms of Nifty 50. So that is slightly, I mean, a respite that we are seeing in spite of what we saw in terms of pre-open. Likewise, Bank Nifty, 0.4% lower coming in here. You have a pretty flattish move in terms of broader markets as well in terms of opening. 0.1% in terms of mid-cap, 152, mid-cap 250 as well. Absolutely flat. This is what the highlight is. Nifty IT, 2.5% downtick. All the gains that we've seen in terms of yesterday's session have been given up. Let's just quickly look at the heat map because your advance decline ratio is still favoring the advances right now in terms of open. But there you go. It is a sea of red. You just have 10 Nifty 50 stocks which are trading in the positive, which is a Bharti Airtel, Adani Ports on the back of the, May updates that did come in. ONGC, you've seen that surge in terms of Brent crude prices. So a marginal uptick coming in on a ONGC to the tune of around 0.2%. But there you go. The gains are not holding up at all. You have the losers which are in focus. TCS, Infosys, HCL Tech, Tech Mahindra, Wipro. Your top 5 losers are coming in terms of where IT goes. Eternal is also seeing selling pressure in today's session. That stock is down 1.5%. ITC 1.5% as we speak, along with the Bajaj Finance, Asian Paints et al. But clearly, I mean, the breadth is telling you what's happening in terms of where markets go. Sharad, if you see in terms of losers, IT is in your highlighting factor today. A little bit of consumption, which is seeing profit booking as well in terms of today's session. Nothing is really holding up except ports, Apollo Hospitals, Bharti Airtel. And if you have to look at the sectors, that'll be interesting.
It's quite a weak setup, to be honest, to start with. And let's just pull out the sectoral heat map to understand what's actually happening. And Hiral mentioned there, Nifty IT index is down 2.5%. Of course, Nifty Realty, FMCG also seeing a big sell-off. Interestingly, only thing which is green is defense and the CPSC index, but that's also largely with very minor gains. So yes, broader indices also we are seeing the sell-off intensifying. So a little bit of concern is definitely there. Also, let's pull out the mid-cap and the small-cap index to see what's happening here. And over here, mid-cap index, that's down 0.4%, no major support, but small-cap index is trying to hold the fort. So we'll try to understand whether in the later part of the day the momentum comes or not. But let's focus on the stocks also. What's important, the first one is definitely going to be your IT stocks. That is where the brokerage concern starts coming in, and we're seeing Infosys, TCS, HCL Tech all falling in the day's trade as well initially. Operational update, keep an eye on Adani Ports. Brokerages have also given thumbs up and a good momentum can be expected in the stock. Also, we have Borosil. CVD impositions are happening, and the management also had stated that this would be positive for the industry. Another stock in focus is Concord Biotech. There's a good US FDA approval coming in. Stock also doing well in trade. Order wins, John Cockrell, Advait Energy and EPAC Prefab can make it to the list. All of these stocks doing really well, ranging between 3 to 7%. Buyback opening for Dhanuka Agritech from the mid-cap space. That's also a slight positive. And lastly, JBM Auto, Ashok Leland and Olectra Green Tech in focus as there is a new cabinet scheme coming up. And also on the brokerage stake, we have picked up Mankind Pharma as well. That is where the stock is largely flattish. But Puneet, which else stocks you are actually gathering right now in your analysis right now? Anything moving?
No, most certainly IT continues to be one that is gathering so much attention now as well. And just a quick question, Kush, with you as well, because we've seen 2 days of buying, then we've seen, of course, what we're seeing today in terms of action. Would you buy into this dip right now, especially in terms of the larger players? We're seeing a big correction on TCS, but on Persistent, Coforge, any view?
Yeah, that's the more relevant question for me, Puneet, where I still see traction in the mid-tier names where Persistent, Coforge, LTI, Mindtree to some extent, these still have some some traction. Wouldn't really focus too much on TCS, Infosys right now because the momentum, that's missing on some of these names. Like I said, would I buy right now? Not yet, because it's a lot of these stocks have seen a good run up in the last 3 to 5 sessions. And are starting to see profit booking. This is the first day of profit booking. You want to see where that halts. So, for now, I wouldn't really buy into them. But if they do halt near support levels, especially Persistent, Coforge and Emphasis, by the way, that's when you consider, a re-entry into some of these names.
Okay. And just one question for Parag Bhai as well, because so you've been mentioning about TCS as well as Infosys, something that you like from the space, but we've seen new launches just in the last week for so many these enterprise AI solutions. Not heard too much yet from the larger companies, but does that preference still say basis valuation, basis cash, basis free cash flow?
So as I've always said that IT, the jury is not yet out, that whether this Anthropic AI disruption is going to cause them a permanent problem or not. But I would say that TCS at 2,200, when I mentioned it, it was 5% dividend yield on a trailing basis. And the annual report mentioned too many things about, that they are AI ready actually. Then Emphasis also said that actually it is a tailwind and not a headwind. Tech Mahindra also mentioned that. So I would say that on a dips, today it was going to fall for sure. Accenture was down 5%, Cognizant was down, Infosys ADR was down. So today it was down, and after 3 days of rally, one would have expected some sort of profit booking. So again, if suppose say TCS comes down to 2210 or something like that, or Infosys below 1200, there are some price points because it is not a high growth sector. It is a sector we have to buy. It's a high quality sector, free cash flow generating, dividend paying sector. So you have to buy on dips, and you have to do some sort of trading also in this space.
Okay. In fact, MK has a note on LTM as well on the back of their investor day. They have retained an ad. They have a target price of 4,700 on this counter. And the management has outlined their 5-year Lakshya 2031 strategy. They're targeting 2 times revenue by FY31. implying a CAGR of approximately 15%. And they're saying that 15 to 17% contribution will come in from M&As with a 200 basis points improvement when you talk about the EBIT margins as well. They're expecting AI to reduce the traditional $1.3 trillion tech services market by almost $0.3 trillion, though this is more than offset by the $0.5 trillion from platformized IT services. Apart from that, their partnership with Randstad is value accretive, and they are expecting no material margin impact in terms of FY27. That stock, though, seeing cuts of almost 5%, but I think it's that sell-off in terms of IT which is having an impact here. Chandan is back with us. Chandan, the downtick in terms of IT today, what are charts indicating according to you? Because 2 days of surge, 1 day of downtake, I mean, how are you looking at it?
Yeah, so yes, some volatile cues is there in the market. The only problem is that index is finding selling pressure at higher levels. If I look at the Nifty IT, in last 3-4 days, the major recovery was seen from the Nifty IT, and the counter like Infi, TCS, Coforge, Persistence really did well. But now it seems that recovery is getting a pause, so better to look for wait and watch, because this is just bounce back move. So as of now, if you ask me only 1 or 2 counter in IT, I'll focus only on Persistent System, Coforge, or Oracle Finance on the lower levels, and it would be better to wait and watch and let the entire IT sector to get the settle at lower levels.
Okay, so that's with regards to a few of the IT names as we speak. But apart from IT, I mean, if you have to look at markets right now as well, Adani Ports, Bharti Airtel, Apollo Hospital, Coal India, Tata Steel, Hindalco, 2 from the metal names which are seeing some moves. There is still conviction, Parag Bhai, when you talk about metal counters as well. I think yesterday or day before, HSBC also came out with a note saying that the first half of FY27, at least there will be that momentum that could continue. But with the surge that we've already seen where valuations stack up, do you think it's still a good bet to look at metals as a fresh start?
So I have always maintained that Hindalco and JSW Steel remain my favorites within the metal pack, and within that right now at this price, or say I would say 3-4% lower, JSW Steel is still a buy according to me, not because I am expecting a big rise in steel prices. In fact, steel prices have moderated a bit, but just because the company's execution is phenomenal. They are adding 5 million tons every year with a capex of only 25,000 crores, which is lowest capex per ton if you see globally, and lowest OPEX per ton, which allows them to make a EBITDA per ton of 10,000 rupees, and they are continuously adding 5 million tons every year. Right now the capacity expansion plan is to grow from 38 to 80 million tons. So, and the net debt has reduced significantly after this JFE deal. So I would say that this is a very rare commodity player who is a compounder because of its own efficiencies.
From the commodity segment, let's just focus a little bit on the power segment. Let's just pull out the chart of NHPC. Of course, it's on focus because of the OFS announcement, and that oversubscription amount has also come in. Kush, I wanted to get you on this. A little bit of reversal there coming from the last trading session, and a good momentum is being sustained. Now, of course, channel checks are suggesting that some large, good institutional support is also coming in. How do you see this development for NHPC? And in the medium term, any important levels to track?
Massive period of consolidation. In fact, if I look at it, this has been in consolidation since the October of 2024. Look at the range on this one. If the team can bring up about 18 to 24 months kind of chart, once it sort of dropped off 72 on the downside and about 85, 86 on the upside. It's been in that range for a very long time. Right now, it's a range play. So if you believe that this range will be respected, you have a favorable risk-reward ratio. So with the stop loss at 72, for higher levels of about 79 and 84, 85, the upper end of the range, you can consider a trade. But like I said, this is more of a range play. So if you do get profits on the higher side, you're better off booking it out rather than holding it for a much longer duration.
The other one, and I think Parag, you spoke about Tata Motors CV. You publicly stated also that you got out at 490 odd levels. But just that cabinet approval, and we are putting up that story that BS4 trucks, buses could be moved to BS6. That would be a big push. But we are seeing a range-bound move for all these players, for Ashok Leyland, for Tata Motors after Q1. You're seeing that fuel price hike impact possibly having that bearing. But at these current valuations, Ashok Leyland 144, Tata Motors CV also, I think post listing was at 320, now is available at 360. Anything that you like, or at least from the near to medium term?
So it is worth considering for sure. But right now, remember, see, if oil doesn't fall, then there are too many diesel price hikes can still further happen. The under recovery is huge. We have just undertaken a price hike of 7.5 rupees. We require much more. So that will definitely cause demand destruction at the ground level for at least H1. Then H2 we'll see. So that means again, like I said in HUL's case, the first half there is a challenge. So if you are a short-term investor, you should be careful.
You know, when you mentioned about HUL, I want to talk about ITC as well. That stock in terms of yesterday's session actually fell to a 52-week low. Today as well, that stock is down nearly 2%. And it's actually, there is something brewing over there as well, because you're talking about record levels of what, 500. From there, it's corrected nearly 40%. I was just seeing this data in terms of NSE's margin trading facility book, where they are saying that the leveraged positions of ITC have actually surged to close to 1,800 crores as of the 1st of June, which is implying a growth of 86% from April 30. Now, if you have to look at the MTF book and the leverage on this counter with the downtake, Chandan, what are charts then indicating?
Yeah, so if you look at the ITC, the trend is negative. In fact, the ITC has been making lower top, lower bottom. The structure is negative, whether you look at the weekly, monthly, daily, or even the lower time frame. If I look at the price behavior of last 10 days, it has seen a corrective move from 315 to 275 odd levels. And we have seen sustained cold writing and shorts are being built, and those are rolling from series to series. So as of now, the structure is weak. We have seen huge cold writing at 300. That is the big barrier. But on immediate point of view, till it remains below 288, downside could be seen towards 265 to 260.
So pull out the telecom infra stocks. All of them are seeing a good basket buying. Pull out Sterlite Tech. We have Tejas Networks, HFCL. All of them doing well in today's market. Sterlite Tech, that's the company. It's a buyer. It's not Sterling 2. Sterlite Tech, Tejas Networks. All these are the stocks which are doing well in trade. Do you think the momentum is back, Kush, on this space? Because this has already run up a lot, taken a pause. Again, the buying is starting. Is it healthy for these stocks, or is there something else?
Not at all healthy. This is through the roof. I mean, we'll have to create more space on my charts to accommodate the RSI levels, forget the price levels, right? Sterlite Tech is on steroids. So I would completely avoid this. Yes, if you have a position, you should continue to hold. I'm not saying that, you should sell off. The momentum is fantastic. It's still, building on, but massively overheated. No point, trying to chase this now. Already at upper circuit, so you really wouldn't get it anyway. HFCL2, very similar story. The only one that perhaps you can consider as a trade right now is Tejas Networks. Had a meaningful recovery. It's been beaten down quite a bit. So from a positional standpoint also, risk reward ratio remains attractive. Golden crossover of the 50 and the 20-day moving average happened a while ago. Yesterday you had that 20 and the 200-day moving average golden crossover. Yes, so it's sustaining above some key resistance levels and building on. Maybe something that you can consider from a positional standpoint again. I would suggest a stop loss close to the 515 mark. On the way up, look for targets of about 585 and 600 plus kind of levels. So this is the only one amongst the names that you mentioned that you can consider as a trade right now.
Okay, so that's with regards to Tejas Networks as well. But thank you, Parag Bhai, Kush, as well as Chandan for joining in. Always a pleasure to speak to all of you as well. But moving on, Premier Energies, that company continues to benefit from India's domestic solar manufacturing push, seeing marginal gains of 0.2%. Now, it has been supported by strong policy tailwinds and an expanding order book as well. Before we speak to Vinay Rustagi, Chief Business Officer at Premier Energies, Varsha joins in with more details. Varsha, set this conversation up for us.
Well, a lot of things actually working in favor when it comes to Premier Energies. One is, of course, the recent news wherein MNRE has rejected industry demand for a blanket extension when it comes to ALMM list 2. What does this mean? That now solar projects will now have to use domestically, approved solar cells. Now, onto the business highlights when it comes to this counter. Let me talk about the order book, which stands at around 14,000 odd crore, which provides strong visibility for the company. Entire order book is domestic focus, and the major execution is expected in FY27 with some spillover in FY28. On the capacity, which has scaled up to 3.6 gigawatt with target to reach 10.6 gigawatt, module capacity is expanded to 11.1 gigawatt. Lastly, on the business strategy, strategy front, they are moving towards fully integrated model from ingots to modules, which will ensure the supply chain, and they're also adding new segments like BESS and inverters and transformers.
Got it. Well, thanks so much for that, Varsha. But let me go across to our guest now, Mr. Rustagi. Very good morning to you, sir. Thanks so much for joining in. It's Puneet this side. We've seen, that big update coming in for you, as well as for all players who've already invested so much in the domestic cell capacity. If you can walk us through your timeline of, the current cell capacity, I think somewhere around 3.6 gigawatt hour. How are you shaping that up over the next 2 to 3 years? And what could be the potential benefit essentially from this move? We've seen all companies that have invested early into cells will get a big benefit. But what does it happen for the consumer, for your customer essentially in terms of cost as well?
Sure, Puneet. Thank you for having me. Good morning. The government announced a roadmap for domestic manufacturing of cells back in December 2024. At that time, our cell capacity was 2 gigawatts. And we obviously took immediate steps to expand our capacities. Today we are at 3.6. And then we have a state-of-the-art 7 gigawatt plant coming up in Andhra Pradesh over the next 4 months in phases. The interesting thing is that we are investing in latest technologies to basically manufacture products which are best in class in the whole world and make sure that we kind of meet the demands of the domestic consumers. In terms of the cost for the consumers, so I think there are many segments in the market. The two segments being residential rooftop solar and Kusum program, they already have been using domestic cells as per the government mandate. So for them, there is no increase in cost. Then you have the corporate segment, which now has to use domestic cells from June 26 onwards. For them, I would expect the total increase in the project cost to be about 10 to 12%. But then on the other side, they do get some advantages in terms of more stable supply, more stable prices, and obviously no forex risk. And then there is the third segment, which is the utility scale segment, where the domestic manufacturing mandate applies to them only in about 2 years' time. So for them, as of now, there is no cost increase.
Right. Good morning, Vinay. This is Sharad here. Just wanted to understand a little bit on the policy support front. Varsha had clearly mentioned about ALMM2 scheme for the cells, which are already active from 2026. What are the key timelines, how things get benefited, and by when we can see that in your numbers?
So I think, Sharad, thank you for the question. We're already seeing that benefit coming through the numbers. As I said, ALMM2 has a phased timeline. It has already been applicable to some of the market segments. It is now becoming applicable to the corporate segment, and it will become applicable to utility scale projects in about 2 years' time. So, in terms of, we are seeing that impact coming through in form of demand. The demand for domestically made cells is expected to more than double from last year. Last year, we expected demand at about 16 to 18 gigawatts. And this year, it should be about 30 to 35 odd gigawatts. So as a result, all the companies who have invested early into the business are going to benefit from increased demand and better pricing outlook.
Got it. And Mr. Rustagi, just in terms of what you mentioned as well, that you will be going back into backward integration also for ingots amongst others. So just a quick question firstly on what is your current bill of materials that you're already addressing with the integration of cells in your complete project, I think over the next year or so. So if you can give us a timeline by 27, what is the integration that you expect to reach in terms of capacity? And by 28 also, because you will be going backward, it will also help you save a lot of cost. So how much of the bill of materials is already being addressed from you at this point of time? And what's the timeline maybe by this year end and for the next year?
So if you look at purely the cost of production, today we are making cells in-house. By 2027, we will be making ingots and wafers in-house. We also have a plan to make aluminum wafers from the start of next year onwards in-house. And together, these three components will account, I would say, for about more than 50% of the total module cost.
And also in terms of, as we see the projection as well, because of course your module capacity has also shaped up very well. Are you putting in any numbers for growth in terms of what's the expectation on the revenue side for this year and going into that? Do you feel that because there'll be a lot of cost, as you mentioned, escalations amongst others that we are seeing this year? So what should we expect for margins for you?
So, let's look at the top line first. I mean, I think the outlook for the solar sector remains very bright. We have seen demand grow by almost 90% last year. And with the current war going on, with the fossil fuel prices at near all-time highs, I think the government is having to rethink the whole energy mix and with a more emphasis on renewables coming through in the coming years. We also see a lot of demand upside from new segments like green hydrogen, data centers, and electric mobility, electric cooking, etc. So I think the demand is expected to grow, I would say, by something like 8 to 10% per annum over the next 5 years. In terms of the pricing, so as a company, we don't give out any future guidance, but as we discussed, our emphasis as a company has been on capacity expansion, vertical integration, and obviously venturing out into the new segments as well. So, we endeavor to remain one of the largest, most integrated companies in the sector, and that we believe, will put us in a very strong position when it comes to the future growth of the business.
Okay. Vinay, good morning. This is Hiral here. My question to you is now, if you're looking at the DCR, that's the domestic content requirement surge that will happen on the back of the ALMM2 extension. If you have to look at Q1 and Q2, what is that fresh order spike that could be expected in terms of DCR in this first half?
Sure. So, it is important to understand, like I said earlier, the only change that is now coming in the immediate run with implementation of LMM2 is basically for the corporate projects. The corporate projects which were using imported cells before June this year now have to use domestic cells. That segment alone is worth an estimated 15 gigawatt per annum. So in terms of quarterly demand, that's about 3.5 to 4 gigawatts. A lot of these customers are now going to actually scale up their programs given the high cost of conventional energy. So we would expect about 4 to 5 gigawatts of demand coming through on a quarterly basis.
And if you have to look at the order book as well, I mean, little what over 14,000 odd crores, 2/3 is scheduled to be executed in FY27. So if you have to break that up in terms of the margin profile of these orders, picking up from what Puneet spoke to you about, how much of this is going to be your high margin domestic cell orders versus your assembled modules?
So yes, so we have said basically, I think about 56% of our order book is in the form of cells. The rest is a little bit of that is DCR modules, but most of that is the remaining part is non-DCR modules. So I think it is well understood that in the DCR business and in the cell business, the margins tend to be much higher because there is a focus on domestic manufacturing. And most of our order book will benefit from these high margin products in the order book. So our margins as a result of that should remain in the visible trajectory over the next 1 year.
And in terms of the capex, Vinay, my last question to you is what 12,000 crore outlay is what we are looking at, 5,000 earmarked for FY27. You have tied up with IRDA for debt, you have IPO proceeds as well, but an additional enabling resolution of 5,000 odd crores is what you're seeing. Will that actually require a near-time equity dilution if internal accruals face working capital stress?
Sure. So, our internal, our CapEx program is actually fully funded through, as you said, IPO proceeds, internal accruals, and the debt, most of which we have already tied up. So as it is, as we sit here right now, there is no plan to raise any more monies to fund any of our existing projects. The resolution that we have passed is basically an enabling resolution to give more flexibility to the company, because we are looking at lots of growth opportunities both in India and abroad. And should any of these opportunities materialize, then obviously we will look to raise more money and may approach the market at the right time. But at this point in time, we don't see any specific need in terms of quantum or timing.
And just one more, Mr. Rustagi, as well, because what we've seen in terms of cash flow as well. I think FY26. I think before FY25, of course, your capacity was also much lower. So that capacity expansion has happened in FY26, expected in 27 and 28. So you turned on a net cash flow basis, roughly around 1,700 crores negative. Is the expectation that the next 2 years, given the investment phase, also will be similar? And any guidance in the medium term that you can give on cash flow? Do you expect that from FY29 onwards, you feel that those investments will start to generate that cash outflow?
See, as you can see, in terms of the existing operations, we are already generating a lot of cash. Our cash flow to PAT conversion was 87% last year. And that is obviously all going into funding the growth of the business. Now, in terms of, how does it kind of play out going forward? Yes, obviously, the cash accruals will only increase as we increase the capacities and production numbers go up. But I also said, energy sector is a very interesting space, particularly when it comes to energy transition and some of the green energies. There are lots of growth opportunities. So I think we will be investing and continue to invest a significant amount going forward to basically strengthen our position within the solar sector, as well as venture into adjacent technologies and product segments. So I think it is difficult to give you an exact kind of guidance, but I do see a lot of the cash that we generate being redeployed in the growth of the business.
Vinay, for that, and a very interesting take coming on how the cash flow usage and the policy up moves are going to help the stock as well. As stock also we see it's largely at the day's high level, if you can just pull that out as well. But moving on from this, fresh SIP additions have slowed and stoppages are rising. But overall account levels remain stable, signaling that long-term retail participation and faith in systematic investing still holds firm despite near-term volatility. Mahima is here with more details. Mahima, what is this data talking about?
Right, so Sharad, what's happened is that the fresh SIP registrations did hit a 3-year low when the last AMFI data came out, and this is on account of many investors stopping their monthly SIP on the account of the way markets are right now, and the SIP stoppage ratio is also rising very fast. Now, if you take a look at the number of discontinued SIPs from 23 to 24, that is FY 23 to 24, it was at around 224 lakhs. Now this has increased to almost 679 lakhs in 25-26 FI. In terms of total number of SIP accounts also, Jan 26 it stood at around 1029 lakhs, which is which has been at that 1044 lakhs mark since the last 3 months. So that's not essentially increased as well. In terms of number of new SIP registration, Jan 26 it stood at around 74 odd lakhs, which has come down to 50 lakhs in April 26. So that number has significantly come down in the last 6 months itself. And SIP stoppage ratio also, if we see, that's increased from 52.4 in FY24 to almost 101 as of April 26. Now, this also needs to be looked at from a perspective that SIP is just a tool, right? Because if we take a look at how benchmarks have done versus the normal funds that have performed, for example, if you take a look at Nifty 100, in terms of 1 year return, it's negative 2.7%, but at the same time, Quant Large Cap, which benchmarks Nifty 100, has given a return of almost 6%. Similarly, Small Cap 250 has given a return of just around 1% in the last 1 year, but something like a Motilal Oswal Small Cap has given a return of almost 10%. Nifty 500 has given a return of around negative 0.8% in the last 1 year, but at the same time, Quant Flexi Cap, which benchmarks the Nifty 500, has given a return of 11%. So I think this part needs to be considered, that it's not, SIP is just a tool, and, considering as to how the markets have done, these mutual funds benchmarking those, indices have done pretty good as compared to where they stand. So this is the overall view of what's happening with regards to the SIP flows.
Okay, thank you, Mahima, for that. This is a very interesting data point at a time when the FIs are selling out. The conversation all this while that we've been having is that the DIIs and it's the retailers who are coming in as a good support and strength. Mohit Gang, co-founder, CEO at Moneyfront, joins in. Mohit, good morning. Welcome to the show. This is Hira Leo. My question to you is, what is this data actually indicating? Because your SIP additions are indicating that there is hesitancy amongst your retail investors to actually commit money at this point in time, given the way volatility has been creeping in terms of Indian markets. So is it that the new cash is hesitant? Is it that people are probably making budget adjustments as well right now to say that let's sit on cash and not spend it out or not invest it right now because we don't know what the situation is going to be ahead? What is the sense that you're getting so far on the back of the data?
Hi, Hiral. Morning, and thank you for having me on this. Look, I think there are multiple factors which are leading up to this kind of a SIP stoppage ratio. So there is no doubt, we can't deny the data that matured and closed SIP numbers have been higher in April than the new SIP additions, right? So the data speaks for itself. Even the month of March was not particularly good. I think the ratio was almost around 100% in that month also. Now, the number of factors which I was alluding to. Number one, obviously, there is an AMFI reconciliation which is happening around the data itself. So there is a lot of mismatch historically around the data. A cleanup exercise has been underway for a pretty long while. I think a lot of cleanup has happened between the months of March and April. And number one, that is A, reflecting in the data. B, obviously, you can't take away the fact that Indian markets for last 2 years haven't done anything much, and we've just been trading in a range. And obviously, the new set of investors who have joined in last 2 years haven't seen much returns coming from SIP, and there are a little bit of disillusioned. I would not say that you're seeing mass redemptions. Obviously, here and there, you are seeing some pauses, and you are seeing people questioning the whole mechanism, so on and so forth. And perhaps that could have led. But I don't think so. That's the major component of the SIP stoppage ratio, because we have seen over a period of time that Indian investors have matured dramatically, and the cross flows kind of verify that fact when you see that the number remains static at around 31,000, 32,000 odd crore mark in terms of gross flows. So that's point number two. Point number three is that during the month of March and April, there is a lot of rebalancing which people do in their portfolios. There are a lot of shuffles which happen. People try and see what has worked well for them in the last few financial years. They want to plan for the next financial year. And there is when you see a lot of old SIPs getting closed and new ones getting booked, perhaps not in the month of April immediately, but those numbers start hitting from June onwards, right? So my sense is there is a lot of portfolio rebalancing happening at advisor levels, distributor levels, and investor specific levels to kind of realign their portfolio to the new world and new reality. And my last point on this, Hiral, is that obviously you've seen inflation spiking up across the country. Crude prices are soaring, and so is the cost of raw materials and inputs and a lot of other things. There is a little bit of uncertainty around jobs, right? So people perhaps are saving more in safer instruments, kind of building that safer nest, right? And maybe shoring up their emergency corpuses around different kind of mechanisms, and perhaps not so much in SIP. So that could again be a minor factor, not the major one. To me, the major factor is the AMFI reconciliation exercise and the annual portfolio readjustments which happen around the closure of financial year.
Good morning, Sharad here. I just wanted to understand in a very simplified manner, seeing how much volatility is happening in today's equity markets also. The newcomers who come in the markets in the mutual fund industry, they haven't got any returns as yet. They are moving to other asset classes also. Just wanted to understand if there's some newcomer in the market, he has 100 rupees in his pocket. How much does he allocate to equity, debt? How does it actually play out at the current levels?
Sharad, look, honestly, I think there is no bullet answer to this question. There is no simplified version of this entire thing. Obviously, it will depend from investor to investor, their profile, their tolerance capacity, the kind of time horizon they have, and the liquidity requirements, right? Keeping everything in mind, I think we currently are overweight equities, meaning to say that because of consistent underperformance in equity and the valuations having reached a reasonable level, we think it's time for investors to kind of go a little overweight on equity from whatever their asset allocation is. So consider an example that you were running a 50-50 debt equity portfolio. Perhaps now it's the time to go 60, 65 or even up to 70 equity, right? And take a little step away from your fixed income portfolio. Fixed income, of course, on the longer duration end hasn't done well. And with the expectations of interest rates rising, we are a little underweight on the long duration fixed income portfolio, right? So you take off a little money from fixed income, park a little extra in equities. But again, as I said, there is no fixed formula. If you were 50-50, go 65-35. If you were already 60-40, go 70-30, right? So it will have to be adjusted. But yes, the time is ripe and perhaps pertinent for you to go overweight on equities gradually, stepwise. We don't see any miracles happening in next quarter or 6 months perhaps, but with a 2 to 3 year perspective, I think that's the place to go.
Okay, so that's an interesting take there, but the trend from here on is going to be important to watch out for as to what SIPs are doing, because if the retail money is getting stopped at some point in time, that will be concerning to some extent as well for the markets in terms of flows. But thank you so much, Mohit, for joining in. It's always a pleasure to speak to you. Moving on, an important development where the government of India has actually nominated 29 non-official members to the Board of Trade. Now, this will be reconstituted Board of Trade under the Ministry of Commerce and Industry, and the reason why they are doing this is mainly to boost manufacturing and exports. This will be chaired by Union Commerce Minister Piyush Goyal, and this is a high-powered advisory board which has been brought together, and they've got leaders from top corporate houses, tech firms, and financial institutions. You can see the entire list as well. Your financial and advisory services, you have CS Sethi, State Bank of India Chairman, and Rajiv Memani, EY India Chairman and CEO. In terms of tech and electronics, you have Virat Bhatia, Apple India Managing Director, and Sridhar Vembuzo Corporation co-founder. From the automotive and aerospace division, you have Anisha, M&M, and Shailesh Chandra of Tata Motors, and Pawan Goenka, who will be in as well. And you have Parth Jindal for core industry and infrastructure. So this is going to be an important development from the way the government is looking at it as well, to discuss strategies to enhance manufacturing and exports. Don't you think, Sharad and Puneet?
Well, yes, of course, manufacturing, Puneet tracks it, and especially looking at the way that defense is there's manufacturing, especially coming from Bengaluru and Hyderabad corridors. It seems quite nice, and today itself, Equus also came out with an announcement.
Well, most certainly. And I think we've seen all auto companies, I think we've discussed that the amount of capex that are putting in, you will need a lot of representations from these personnel, especially from likes of Shailesh Chandra, Anisha, into the board, of course, to give us that perspective of what could lead the production as well as the growth in the next 10 years for the automotive sector.
Yep, absolutely. So let's see what comes out of this entire committee that has been set up as well. But moving on from the Morgan Stanley Investor Conference, one of the interesting speakers that we have today with us, Jonathan Garner, Chief Asia and Emerging Market Equity Strategist, who's joining in to talk to us about what he actually thinks of the FI perspective about India et al. And the impact of the West Asia crisis. Jonathan, good morning. Welcome to the show. My question to you is, with India's lower strategic commodity reserves, which are absolutely relative to China or Japan, at what threshold of global oil prices would you actually consider moving India back to an overweight position, because you've recently downgraded India?
Well, the most important thing, as in any call that we make on markets, is what's going on with earnings and what's going on with valuations. I do want to stress that the earnings outlook for India is pretty constructive. We've got around about a 15% EPS growth on a 12-month forward basis, and valuations are a little below 20 times forward P, and that's down from peak multiples. But the issue is not really India, it's what's going on elsewhere. And in North Asia, we have completely spectacular earnings growth. For example, in Korea, something like 230% year-on-year earnings growth this year, which I think will be a record for any emerging market. We're probably looking at 30% plus for Taiwan. And again, Japan also very strong. And so what's happening is that on a relative basis, you're getting allocation away from markets like India and in fact South Asia more generally into North Asia. And even though North Asia's outperformed dramatically this year, this will be the second year in a row that Korea is performing very strongly, the forward PE multiples are actually in some cases lower than they were at the start of the year because the earnings growth environment just continues to improve.
Okay. Jonathan, with sticky inflation, with the impact on oil, where do you see the highest risk of EPS contraction happening?
Well, again, it's certainly true that if you look at it across the whole world, a high oil price environment is more negative in aggregate for Asia than it is for Europe or for the US. But again, there's a North Asia versus South Asia thing going on here. Some of the countries that are most negatively impacted by a structurally higher oil price are in South Asia. It's not to say that North Asia doesn't have oil import needs, but there are much bigger strategic reserves of oil and gas in some of the North Asia geographies, and that's helped them be somewhat more resilient so far. But you're right to identify the oil price as a big swing factor, and were the oil price to fall back in the second part of this year, that would certainly be helpful from a balance of payments perspective for India and other countries in South Asia.
Okay, so Jonathan, the question then is, with FIs moving out, how are they perceiving India at this point in time? Because that is a concern that India is looking at.
Well, actually, if you look at the FII outflows, they've obviously had to be matched by SIP buying domestically in India. But really, you can date the FII outflows to really the third and fourth quarter of 2024, and then they picked up in 2025 and so far this year. So it's about a sort of 18 months, maybe going towards 2-year phenomenon now. And it's related to my answer to your previous question. It's to do with when some of these structural themes around very strong capex in relation to AI, but also defense spending on energy and other thematics began to become much more central to investor portfolios. And they became much less interested in long-term consumer-centric themes within Asia and things that are more adjacent to the consumer, like the financial sector. And so in markets like India or indeed Indonesia or a market like the Philippines that are very skewed to consumer and financials, you've had this tendency for foreign capital to be withdrawn. And where you're much more skewed to upstream capex related names, which is the case in Korea, Taiwan or Japan, that's where you're getting the strong foreign investor inflows.
Okay, so that's with regards to investor inflow. Now, the AI tech boom, are they still safe in terms of retail investors, or are you saying that valuations are becoming very expensive and risky if someone has to actually look at the AI tech boom and the play around it?
Well, we are talking about semiconductor names in particular and the memory sector, which is exemplified by the 2 largest market cap stocks in Korea. And more broadly than that, we're finding actually that CPUs are increasingly used in the AI technology innovation sphere. And that creates a much broader array of stocks, particularly in a market like Taiwan, that investors can get engaged with. And I do want to emphasize that as far out as we can see, this likely continues. So we do have a strong environment, not just for 2026 on this thematic, but through 2027. And it's early 2028 at the earliest when we might see a fade in terms of the growth rates that we're getting in the upstream capex sectors related to AI.
Okay, so that's with regards to where AI goes. Now, overall, if you have to look at investment bets in India and your view on consumption, what would you put your bets on?
Well, we are negative on consumer really across the board. Even in parts of North Asia, the consumer is struggling in the face of the energy shock currently. So actually, we much prefer capital spending names, of which there are some significant large cap names in India that are oriented to defense spending or energy capex, which is ongoing here. The missing piece is the lack of large listed semiconductor stocks, which are just not present in this market. So anything that's capex related is a key thematic for us. Our economist, Upasana Chacha, is talking about India's investment to GDP ratio rising to 37.5%. And it continues to be a very strong story that the public sector has been like enabling of capex in general here in India. So it's finding those names which are relatively limited within the overall index weight to invest in India, whilst being cautious around the consumer, financials, and the traditional IT services or downstream names that are affected by the energy shock.
Okay. So, Jonathan, my last question to you then is, if you have to look at what's happening across the globe, West Asia crisis, with the way FIs are behaving, what's happening to emerging markets, what are your key monitorables over the next 6 to 12 months?
Well, it's really about the earnings growth story, which we've already discussed on this interview. So from the beginning of the year, if you look at the earnings revisions breadth and how that's evolving, it's just continuing to strengthen in industrials, semiconductors, memory, upstream energy, to some extent materials, areas like copper, and it's continuing to weaken in all geographies around the consumer. It's quite a significant dispersion in revisions breadth that's happening on a pan-Asian basis, and everything really flows from that in the way that we look at investment. And the path back for the consumer, it'll be partially driven by what's going on with the oil price, but it's also driven by by policy and by the underlying sentiments of households themselves in Asia. It's worth remembering that this technological innovation, AI, is essentially driving capital returns, and it's starting to create a situation of uncertainty in relation to the labor force, which is affecting consumer behavior as well.
Okay, so, I mean, India, that becomes a problem right now in terms of emerging markets as a whole. But thank you, Jonathan, so much for joining in. Always a pleasure to speak to you as well. Jonathan, it's interesting to see the conferences which are happening right now. They are seeing a lot of interest from BofA to a Citi to a Morgan Stanley. The commentary is also very interesting, where they're still not really upbeat, but they're not very negative as well when you talk about the earnings commentary.
Already a lot of sell-off has happened, and now I think they are looking at some pockets. Some of the foreign broking houses are bullish, especially on the small cap, mid caps. Other are still cautious. So it's still mixed cues coming in. Right now, just the earnings season has been over yet. So of course, we'll be tracking all of these important, foreign broking houses, important days, and how India's growth story actually pans out. Also, artificial intelligence, global capital flows, all will be getting discussed. And there is Citi India's Conference 2026, which is getting kicked off in Mumbai today. Now, this is a flagship event. It's set to bring in global investors and policymakers representing companies with a combined market of nearly $1.8 trillion. Now, to get in more details, what's in store from it, let's go to my colleagues, Riddhima Bhatnagar and Nimit Dikshit. Guys, a lot of important news flows coming in, a lot of important foreign broking, you could say, events are happening. Now, what's new here?
Yeah, absolutely. Riddhima and I are here. It's quite a bustling and busy event already. Like you already said, a market cap of about 2 trillion, close to 2 trillion is in attendance here today. We're looking at the world's top investment houses. We're looking at the world's top bankers, top policymakers, and top AI and financial experts. What I'm looking forward to most is Sergio Gore, the US ambassador to India, will be in attendance today amid trade talks that are going on in Delhi. We'll be tracking that live. Also really looking forward to the SBI chief CS Shetty, who will be delivering the keynote here today in a short while from now. That should be very interesting. Former IMF chief economist Geeta Gopinathan is here, and she'll also be talking to Jane Fraser, the Citi global CEO, who will be talking about Indian banking with the globe and how capital flows have been changing in India, a topic that's been hot. Riddhima, can you tell us a little bit more about what's happening on the company side and the investors?
Absolutely, Nimit. So in FMCG space also we're seeing big names, Harsh Mariwala of Marico, then you have Nestle's Manish Tiwari, Apollo Hospitals, Sunita Reddy also lining up for the event, and they will be discussing how the global disruptions have happened and how the boardroom talks are happening. And not just this, to discuss geopolitics and supply chain disruptions, we also have JSW Steel's management and also Mahindra's to give us more on that. And even in the the AI and the deal space, Nimit, what is the lineup?
There's a
look like?
lot going on there. Importantly, the AI space, the AI India play will be discussed here today, and it will be discussed by the people that seem to be exiting India, the foreign portfolio investors. Temasek is here today. Norge is the world's largest sovereign wealth fund is here today, and it's going to be a very important panel. We're going to see how this goes through, and we'll keep you updated on what's coming.
Okay, thank you, Nimit and Ridhima, for that. We are looking forward to a lot of conversations that you will be bringing for us from the City Conference on the sidelines as well. But yes, your offline conversations will be absolutely more important than what actually makes it everywhere. But we'll quickly slip into a short break. On the other side, we'll speak to Amisha of Bank of America. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
Investments in Specialized Investment Fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy-related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in Specialized Investment Fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy-related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems genuine.
Welcome back to India Market Open, and of course let's just check the markets. Big reversal here coming in the IT space, and a lot of analysts had stated about this reversal happening because the structure was not strong. Let's pull out the Nifty IT index to see which stocks are falling in trade. We have of course the Nifty big heavyweight stocks falling in trade. TCS, Persistence, Tech Mahindra, Coforge, all of them down more than 4% in the trade. And if you just pull up the broader indices also, no major support is coming in as well if you get the mid cap index or even the small cap index. So of course it's a muted day of trade as well. But to understand more from the perspective of India, emerging markets and globally, where does India stand, we are joined in by Amish Shah. He's the head of India research at Bank of America Securities. Good morning, Amish. It's always a pleasure to have you. In your India equity strategy report I was reading, interesting take has come is that Nifty still overvalued on earnings versus bond yields. Now, what does this mean, and why, when do you think, if correction goes on, the valuations turn favorable on that?
Sure. Hi, morning, Sharad. Thank you for having me. So look, valuations you can look at in multiple ways. One of the way is obviously the comparison of Nifty versus its own history in terms of valuation. There we could argue that India has become reasonable in terms of valuations. The second is to compare India's valuation to emerging markets, where adjusted for growth, India still continues to be one of the expensive markets. And the third comparison is to compare it with the other asset classes like bonds that you mentioned. Given that the bond yields have gone up, and equities is always a premium over what you can get over the bonds. So relatively speaking, equities are currently expensive in comparison to returns that you could possibly make from debt markets as well. So that's the context. Having said that, we do think that if you are somebody who is invested in Nifty, there is a possibility that from current levels you can make about 10% rupee returns. So as a foreigner, maybe the returns will be lower on the back of rupee depreciation, but a single digit kind of dollar returns is still possible from Nifty in India.
Okay. Amish, good morning. This is Hira on this side. My question to you then is, I mean, you're talking about where valuations stand in terms of Indian markets. However, if you have to look at the FI positioning as well, they've continued to remain sellers. Now, what factors, according to you, will actually get them to turn buyers in terms of Indian markets? Because the other concerning area I have right now is the SIP data. The SIP is on a reduction path right now. So there is the retail investor also who's probably losing that kind of interest right now.
So Hiral, as far as the FIIs go, look, I never believe in that argument that just because FIIs are underweight India or they have sold a lot of Indian equities, they therefore will come back to the markets. That I think is a lame argument. Foreign investors will go where they find returns. As of now, adjusted for valuations and growth, as we were discussing, returns are much more attractive in the AI markets of Korea, Taiwan. Even Brazil is a commodity market and commodities are all doing well. So I think right now they find alternative markets which are more exciting, and therefore foreigners are very hard to come back in India at this point in time. As far as the domestic investors or retail investors go, the risk of SIPs coming off is a really big risk, because going back to the valuation argument that we were having, ideally in the context of where earnings growth cycle is for India, there is a reason to believe that India should be trading at long-term averages or maybe a shade lower than long-term averages, because corporate earnings growth is run rating below the nominal GDP growth of India right now, as far as the large cap Nifty 50 companies are concerned. So the only reason where the valuation multiples have held up right now is on the back of domestic flows, and if that starts to crack, then valuation pullbacks are very likely.
Amish, if that happens, what are you then baking in, according to you, in terms of valuations and where markets could go? I mean, let's look at the worst case scenario.
So we have drawn these as scenarios already. So we have right now, unfortunately, there is no bull case for India. So we have a base case, we have a bear case, we have a worst case. So the base case, as I said, is about 10% returns where domestic flows continue. Valuations give you no returns from here, but the market compounds in line with earnings growth. Earnings growth, we are talking about 8.5%. So broadly 10% returns is what you can deliver in the base case. In the bear case, earnings growth still continues to be 8.5%, but on the back of the domestic flows coming off, valuation multiples will go lower than the long-term average multiples, more closer to -1 standard deviation, in which case we are talking about a 12% downside from here. And your worst case, builds in the risk that the Iran conflict drags on beyond June. So currently in our base case, we have assumed that by the end of June, the conflict comes to an end. But if it drags on for longer, then commodity prices, supply chain issues, they just persist. That pulls down your earnings growth, from 8.5% more closer to flat earnings. And it could then be a combination of weaker earnings combined with even weaker multiples. That we hopefully, we hope that we don't get into that situation really.
Weaker earnings, weaker multiples, and hopefully India should not get that. But moving on from this, Amish, which are the sectors there will be a preference right now? Of course, the first half of FY27, we all will be impacted because of the higher costs or the inflations coming. But in this scenario itself, which sectors do you think will do well or the preference would be good here?
We have bucketed them in terms of either themes or whether there is value or there is a visibility of growth. So I think from a thematic perspective, the theme that we like the most right now is energy security. Clearly we would agree that this is not an India conflict. This is somebody else's conflict, but India is getting impacted because of its imports of energy. So what can we do over time to localize energy within India or to have your own energy replacing the imported energy? There we think that there are a variety of solutions. Obviously it will take time. It's going to be a multi-decade theme if we start from a policy action perspective, but there could be biofuels, there could be electrification, we could do more deep water oil and gas exploration, there is coal gasification, so there are a variety of themes and stocks linked to that ecosystem, including power financing companies, power generating companies, power transmission companies, even the coal manufacturers, the cables, wires, those kind of ecosystem players, so that is one pocket that we find exciting on the back of a theme playing out. We are also excited about the shipbuilding sector in India. That's a space where you can generate a lot of employment and the market shares are going to move away from the existing hubs of China, Korea and Japan because population there is aging. So that's another theme that we are quite excited about. So that's one bucket. The second bucket is lapping up to the global themes. So if globally there is AI which is doing very well, what feeds into the AI ecosystem is commodities. So things like aluminium stocks, copper stocks, again cables and wires, transformers. So those are the kind of stocks that we think will do well. Linked to the global growth story. And then coming to the value bucket, we do think that certain utility companies, both power and gas, plus telecom, plus hospitals and pharma is something that we are excited about. And then finally, within the value, we would also put in the financial space, which was always value, and because of the West Asia conflict has become even cheaper.
Those are interesting sectors, Amish, that you're mentioning about, but I was just looking at BOFA's trajectory in terms of what they're expecting from the RBI. The house view is a cumulative 50 basis point interest rate hike for FY27 as a whole. With the way things are panning out, you have the policy which is just slated in the next couple of days. How severely will this macro tightening that we're looking at pressure the domestic cyclical sectors as well, if you have to look at real estate or even for that matter auto, because the view in terms of auto is very different. Auto and auto companies, if you hear their commentary, absolutely bullish when you talk about FY27. Yesterday I did meet the management of Maruti where they were indicating that EV and CNG sales have been spectacular in the last couple of days in terms of bookings. So there is that divergence in terms of views that is coming in from what the macro could look like, what it could look like on the ground, and what corporates are talking about.
Absolutely, Hiral. So interest rates is obviously one factor that could lead to growth slowing within the auto space. The other is the commodity, cost inflation, which can impact the margins for these companies. Look, a large part of the GST cuts from 28% to 18% that we saw around Diwali last year, a large part of that benefit is gone, and the residual is likely to be gone very soon if companies will have to take price hikes in order to offset the commodity pressures. So you are right that the outlook currently for autos is very good, but we do think that the outlook can moderate on the back of these issues going forward. But specifically within the autos, the EV theme that you spoke about or the CNG that you spoke about, I think that will see further acceleration. And we are already seeing early signs where EV cars or EV capacities are now facing supply side challenges. So companies are already talking about adding more capacities there. So we do think that two-wheelers, commercial vehicles, the conventional ICE technology, passenger vehicles, those can be vulnerable to commodities and rate hikes, but the EV side of ecosystem can actually accelerate from here.
Okay, so it's going to be interesting to see how things develop as well. But thank you, Amish, so much for joining in. It's always a pleasure to speak to you as well. But moving on, SBI Chairman C.S. Setty delivering opening keynote at the City conference. Let's listen into what he's going to talk about, because here he's talking about the resilience that India has in terms of the geopolitical issues. Let's listen in.
To many of the students, millions of students those days. Today, I'm very proud to say that India is surplus in the food grain production. And India has established itself as the fastest growing major economies in the world. But the most remarkable aspect of India's rise is not simply the pace of growth, it is the ability to deliver transformation at an unprecedented scale. And throughout this journey, the banking sector has been far more than a provider of financial services. It has been a critical partner in nation building. The most distinctive feature of India's developmental journey has been the creation of a world-leading digital public infrastructure. I think you're all familiar with the DPI, JAM Trinity. I think they've been spoken quite a lot. But the digital prowess, what India has developed, particularly in the payment space, is amazing. And you must have read extensively that today, UPI handles 200 billion transactions every year. And very proud to say that SBI handles 30% of that volume. If you see the volume of transactions and the capacity what the system has developed, SBI alone handles almost 250 million transactions every day on UPI. And with a technical decline as low as 0.01%. So you need to build in India, if you are operating, you have to build for scale, and build scale which actually creates the flywheel impact going forward. So the JAM Trinity definitely have helped in terms of creating foundation for one of the most ambitious digital transformations in modern history. Banks have played a central role in translating this digital infrastructure to economic opportunity. Social security coverage expanded dramatically from 19% of the population in 2015 to over 64% in 2025. The bedrock of this is what is called direct benefit transfer, which has not only prevented the leakage, it has brought many people into the fold of the benefits what the government has been giving to them. And again, the digital public infrastructure played a very important role to ensure that the DPD is delivered with efficiency and low cost. One of the most other significant achievements in the Indian banking system has been the democratization of access to finance. This DPI and the whole gamut of data availability in India has ensured that the finance, access to finance, the story which I mentioned is no more relevant, when not only the collector, everyone in India has access to the finance today. The microfinance sector offers a compelling example. Today, 95% of microfinance borrowers are women, and nearly 80% belong to rural areas. Over the last decade, the number of active borrowers has increased from 33 million to nearly 63 million. During the same period, the sector's loan portfolio expanded almost sevenfold, reaching approximately 2.5 trillion rupees. So these numbers represent much more than credit growth. They represent women starting businesses, families improving housing conditions, children gaining access to better education, and households becoming more resilient. Few financial inclusion initiatives in the world have combined financial access, social empowerment, and women-led development at this scale. Banks also have played a transformative role in supporting entrepreneurship. Today, large-scale government-supported, non-government supported, individually driven by the banks are immense. We have adopted digitalization at scale to ensure that SME financing becomes seamless in the country. Consolidated MSME credit outstanding is around 67 trillion rupees, growing at a 5-year CAGR of 17%. The other pillar of India's transformation has been the infrastructure and productive capacity creation.
Okay, so banks and digitization, that's the key right now that SBI Chairman C.S. Setty is talking about delivering their opening keynote at the City Conference. We'll keep getting you further updates as well from our reporters who are there. But very quickly, in terms of markets, before you wrap up, TCS, you know, that's one stock that I want to watch out for. 7.5% downtick coming in yesterday with all the surprises that we were talking about. That when have we seen these kind of moves in terms of IT companies on the upside? It's the actual reverse that has happened today as well.
Exactly.
When have we seen this kind of downtick as well on a single day, right?
I think it's almost a year. I could say the biggest intraday fall again coming back. It's just reversing. Yesterday we were putting out lines which was biggest intraday gain. Now it's biggest intraday reversals.
Yeah, absolutely. So I think that's what the flavor of the market is right now. But we will get to you continuous coverage in terms of what's in store from here on. Stay tuned. Completely out of time. With that, it's a wrap on India Market Open. Up next is Ask Profit. Thank you for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna, İnamdar.
Hello and welcome back to NDTV Profit. You're watching Ask Profit. My name is Puneet Zaveri and with me is Mahima Vachhajani, and over the next hour or so, we'll try and solve all those stock related queries. So if you haven't already, do start sending in on the number that's flashing on the top of the screen. You can also call us, speak to us as well as our guest on those stock related queries as well. The landline number for that is also flashing on the top of the screen. But as you look at the markets, yesterday was a good day in terms of recovery in the second half. Today though, on the other hand, you receded back to those levels below the 23,300 mark, and we'll get Vaishali to give us a benchmark view as well. But largely a day where IT is down and out. So you got some indication yesterday, and if you can pull up the heat map, that'll give you that perspective also. The index is down 4.5%, and that's led by the top names as well. So in terms of the index, you're seeing a 7% downtick right now on TCS. Tech Mahindra, HCL Tech, Infosys are some of the other top losers of the Nifty 50 and continues to be under pressure at this point of time. You've also seen some gainers today, but it's largely, as you can see, 41 stocks in the Nifty 50 that are currently in the red. And so we will hope for a similar picture compared to yesterday, where there'll be at least some rebound in the second half from the lows, but very important to track all those key updates. If you also look at the sectoral heat map, we spoke about IT being down as an index, down 4%. You're seeing pressure across the board. So all sectors in the red right now. Realty is down 2%. You're also seeing the PSU banking index down 1.1%. But, as mentioned, continues to be a day that's under pressure. Also, in terms of the advanced decline though, we spoke about the pressure on the benchmark indices. But in terms of the advanced decline ratio, yesterday you saw a revival in the second half and today, but it's been a down and out day for the broader markets as well. Almost a 2:1, a 3:1 kind of ratio, getting very close to that number also is unfortunately the state of where they are. Mid cap, small cap also reflect that pressure, and also look at the BSE 500 in terms of individual names. So of course, mid cap down 1%, small caps trying to get some momentum, but all those getting sold into at this point of time. In terms of individual movers, you're seeing all the tech names being in red. So you're also seeing Birla Soft, Coforge now down, and Natco Pharma is also down. While HLE, Glasgow, Lakshmi Organics are some of the gainers, but you're seeing almost a 1% downtake on the BSE 500 as well. But let's start taking all your stock related queries now. It's an important day to get some views in. So let me welcome in Vaishali Parekh, Vice President Technical Research at PL Capital, and Gaurang Shah, as always, Senior Vice President at Georgette Investments. And both of you, thanks so much for joining in on this Wednesday morning. Vaishali, just before we move forward, we've yet again broken that 23,300 mark, and we've seen pressure across the board. Are you finding some support at this point of time? Any indication of some up move that we could expect in the second half of today?
Very good morning, Puneet, Gaurang, and all viewers. Yes, market is giving us tough times. Support levels are being challenged. So I would say for today's levels, I think 23,200 is the final crucial support level. If we break this, then we are looking at 23,000 to 22,800. So the bias is definitely corrective. Let's see 50 points here and there, and are we getting a bounce? But the trend continues to be down, even as far as Bank Nifty is concerned. That is also showing, and of course, today IT sector has been instrumental in giving us a downslide. But I think overall we are seeing good selling coming in almost all sectors. So wait and watch scenario and stay light.
Stay light, and most certainly, Vaishali, and capturing that momentum also of a downtake. We've seen weather pouring down also in Bombay, and that's actually reflected in the markets as well. It's been a down and out day, to say the least. Hoping for some better momentum going forward. But let me go across and take our first caller for today from Hyderabad. And Sainath is now joining in for a stock-related query. Sainath, very good morning to you. Welcome to the show. What's your query?
Very good morning, sir. I'm holding RVNL shares of 1827 at the price of 331 average. And it's been 4 years I'm holding this. And right now I'm in the loss of around 28%. So I just wanted to know, should I average or should I hold or should I sell when it bounces back?
And Sainath, when you bought it, of course, and you've been a patient investor, but did you look at the fundamentals at that point of view, or did you look at the technical, the charts view?
That time the railway stocks were picking. I took up the fundamentals and then I entered and I averaged multiple times when stock was going up and down.
Correct. Well, Ben, since you are in a difficult position, let me get you both the views. So, Gaurang, very good morning to you. Thanks so much for joining in. If not a direct view on RVNL, because, as a strategy, he's been holding and bought into railway stocks 4 years ago. Unfortunately, it's a bet that's not worked for him. But if you can give him some perspective of what he should do, if not on the stock, on the space, any view?
Thank you so much, Puneet, for having me on the show this morning. Good morning to all your viewers, to Vaishali and to our entire team. A small disclosure, all recommendations that I'll be sharing with you this morning are part of our fundamental research team recommendation from a long-term point of view. Our company, Jyojit and myself, we don't have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, Indian Railways related companies, very often the spike comes into these companies near about budget because now both the budgets are clubbed together. Along with that, couple of years back, because of the modernization changes, upgradation of railway station, railway tracks, railway coaches, dedicated freight corridors, more networking, connectivity, resolving the last mile issue, most of the railway related stocks were up and buzzing. Of late, I think most of the stocks have gone into a cold storage or hibernation process. Sainath over here has bought in at about 331, if I'm not mistaken, and currently the stock is trading at 235. So there is a huge hit, Puneet, that the investor is taking right now. The future, I'm talking about the sector because on RVNL, or as a matter of fact, we used to cover IRCTC some time back, but our targets price were in place and we have removed the coverage. So currently no coverage. Also on RVNL, we don't have coverage, but the future looks extremely bright in terms of the changes and the resolution of last mile connectivity that the government and rail ministry spark. But this is going to take time because, acquiring land, laying down tracks, getting in connectivity, electrification is also a big theme because a lot of our locomotives are dependent on diesel. And electrification is also a big theme of Indian Railways, which the government is kicking off on a very large scale. But the problem is acquisition price and the current market price. I believe Vaishali would be in a better place to advise over here.
So a view on the charts, because of course he's bought it at elevated levels, but is there a revival on the anvil? Would you recommend him to average?
So basically, actually, even we were tracking, the rail stock some time back, and we thought, yes, it will, it was a fair value price. And RVNL also we had recommended some time back. But right now it's in a downward trajectory. And from the recent data, what we see, right from 300, it's been corrected to now 235. So technically, I would say the stock is deep oversold. So maximum erosion, what I can see from here on, could be around 220 levels. So I would say average out at these levels and wait, because when there is a turnaround in this sector, you will get a bounce at least up to 300, 320. So you will better your price in this way, and probably hopefully you should be in gain also. So 220 is a level to watch. Start accumulating from every dip from here to average out your price.
Okay, all right. So that's the view on RVNL. I think we've got Ajay calling us from Ambala. Ajay, very good morning to you. Kya query aapki?
Good morning, ma'am, and good morning to all the panel.
मैम मेरा क्वेश्चन रिलायंस इंडस्ट्री पे है। मेरे पास 50 शेयर्स हैं 1362 पे। और मैम मुझे ये पूछना था, क्या मैं यहाँ पे थोड़े और शेयर ले सकता हूँ, क्योंकि सुनने में आ रहा है इनका 19 जून को एजीएम है और एवरेजली थोड़ा सा ऊपर जाएगा तो मेरा शेयर एवरेज प्राइस आ जाए। ये सेकंड पॉइंट ये पूछना था। और मैम इफ यू डोंट माइंड मैम, एनएसडीएल पे व्यू चाहता हूँ, क्या एनएसडीएल यहाँ से ले सकते हैं क्या? ये 800 के आसपास चल रहा है।
तो अजय आपको चूज करना पड़ेगा, रिलायंस पूछो या एनएसडीएल पूछो।
नहीं, रिलायंस मैंने पूछ लिया, बट बस वही पूछा अगर व्यू दे सकें कि
ठीक है, चलो आपके लिए एक्सेप्शन बना रही हूँ इस बार, दोनों पूछ लेती हूँ। एंड लॉन्ग टर्म व्यू से चाहिए अजय, करेक्ट? ये रिलायंस। ऑलराइट, गौरांग, वेरी गुड मॉर्निंग टू यू। फर्स्ट ऑफ ऑल योर व्यू ऑन आरआईएल एंड देन एनएसडीएल, इज दिस द राइट टाइम टू एंटर?
Well, thank you, Mahima. Morning to you as well. If you permit me, can I answer this in Hindi?
Sure, 100%.
Thank you. Thank you so much. So, प्रश्न पूछने के लिए बहुत बहुत धन्यवाद। देखिए, पहले तो रिलायंस इंडस्ट्री पर काफी लंबे समय से हमारी खरीदारी की राय रही है बुनियादी दर के आधार पर, और वो आज के तारीख में भी बरकरार है। जिस प्रकार से फैला हुआ कारोबार है, पहले तो पुराना कारोबार योगदान देने में सक्षम रहा है। नए कारोबार में से आय और शुद्ध मुनाफों को लेकर के बहुत सकारात्मक भविष्य हमें दिखाई दे रहा है, और जो भी रणनीति कारोबार को लेकर के मैनेजमेंट ने साझा जमीनी स्तर पर रखी है, वो भी हमें लग रहा है कि बहुत बड़ा परिवर्तन। लेकिन इसके लिए समय लगेगा, क्योंकि ये जो पूरा कारोबार है, चाहे वो रिफाइनिंग हो, ऑयल टू केमिकल्स हो, रिटेल हो, डिजिटल हो, और एक बात यहाँ पर ये भी है कि बाजार एक तर्क लगा रहा है कि रिलायंस जियो मोबिलिटी को अलग करके अलग रूप में लिस्ट किया जाएगा, जैसे जियो फाइनेंस को लिस्ट किया गया। लेकिन वो ये भी बाजार समझ रहा है कि इस वर्ष के आधे हिस्से में होगा, यानी कि जुलाई से दिसंबर तक। लेकिन एक तर्क लगा रहा है बाजार, मैनेजमेंट के ऊपर छोड़ देते हैं, उनकी बुद्धिमत्ता पर छोड़ देते हैं कि अब लेके आते हैं। तो अच्छा लग रहा है, बने रहे, हमारी खरीदारी की राय है एज अ डिस्क्लोजर। और अगर आपने ऊपरी स्तर पर लिया है तो ये जो 1300-1310 के आसपास है, उसके थोड़ा बहुत नीचे आता है तो आप और भी जोड़ सकते हैं अगर आपका नजरिया लंबी अवधि का है। एनएसडीएल पर आपकी राय है, तो पहले तो क्षेत्र पर टिप्पणी करूंगा। भारतीय शेयर बाजार यानी कि इंडियन कैपिटल मार्केट्स पसंद आता है हमें। एक कंपनी जो कि सेवा उपलब्ध कराती है वो है कंप्यूटर एज मैनेजमेंट सर्विसेज। ये कंपनी पर हमारी खरीदारी की राय है। लेकिन आपने प्रश्न पूछा एनएसडीएल पर, तो मेरे ख्याल से अगर मेरी याददाश्त सही है तो जब आईपीओ हाल ही में आया था, तब आईपीओ नोट द्वारा हमने लंबी अवधि के लिए आईपीओ में निवेश की राय दी थी। लेकिन अगर हमारी सोच ये कहती है कि भारतीय शेयर बाजार हर साल आपको साधारण 12 से 15% औसतन ऊपर के तरफ के दायरे दिखाएगा, अगर आप कंपाउंडिंग करते हैं 3 से 5 साल के लिए, तो शेयर बाजार से जुड़ी हुई जो भी सक्षम और मजबूत कंपनियां हैं, चाहे वो प्लेटफॉर्म प्रोवाइडर हो, चाहे वो सुविधाएं उपलब्ध कराने वाली कंपनी हो, या फिर एसेट मैनेजमेंट कंपनी हो, या फिर इंटरमीडिएटरीज, ये सब भी आने वाले सालों में अच्छा करेंगे।
Got that view, गौरांग, बट गौरांग की एकदम सक्षम और सकारात्मक हिंदी पे हम सब फिदा है यहाँ पे। सो गौरांग, फर्स्टली
मैं तो क्लासेस ले रही हूँ,
क्लासेस I mean we do get a lot of queries in Hindi, but I think that fiery response across the board, I think, you know, it's gotten a smile from Vaishali as well, but very good view. Thanks so much for that, Gaurang. But let's go across, take another one from Vinay, who's joining us from Pune. Vinay, very good morning to you. What's your query?
Morning. See, I have 2,000 shares of Larsen & Toubro at 3,200 rupees. So I want to partially shift to one or two or three stocks in like semiconductor, data center, AI related. So what would be the 2 and 3 stocks, because I have an investment horizon of at least 3 years.
Got it, Vinay. And Vinay, did you buy into L&T in the current fall? Because at 3,200, it's a very attractive level. You're also sitting on profits of almost 14 lakh rupees. But did you buy it currently, or have you holding it for a while?
No, I have been holding it for more than 3-4 years.
Got it. Well, firstly, many congratulations. It's a bet that's worked for you. But Gaurang, you know, in terms of he wants to diversify a little bit, is it a good time, firstly, to book some profits in L&T and go into the areas that he wants to?
So Puneet, I have always believed in one thing. Like investing is an art into stock market, booking profit also is an art. And the reason why you invest in stock market is so that your 100 rupees becomes X plus something, depending upon the return that you want. I will not give an advice to book profits because we have a positive coverage on L&T. So I would completely leave it up to Vinay. And of course, Vaishali, if she's got an opinion or a view over here. His question, data center, semiconductor. So data centers, there are a couple of investment ideas from our side. Basically providing into the backup part and the infrastructure part, Puneet. So you have companies like Cummins, ABB, L&T again is involved into, creating all these backup infrastructure and back-end infrastructure for data center related. For chips and semiconductors, we have coverage on 3 names. Amber Enterprises, CG Power, and PG Electroplast. So Vinay, I leave it up to you and your fine sense of judgment and wisdom. And I hope Vaishali can possibly throw some more light on this.
Sure. Vaishali, any view on the charts?
Well, CG Power and data center, all these stocks are doing very well. So I would continue to have a positive view even for CG Power. In fact, technically also, we have been recommending this stock, and I think it's a must-have in the portfolio because this can give very good returns from here. And besides the sectors that he's recommending, I would also suggest capital goods like ABB, etc. He can consider those stocks as well because they are looking quite robust on charts and can give good returns. So yes, I would say have a diversified view.
Okay, all right. So that's the view coming in on all of these data center player names. But time to take a look at the F&O space and the setup, of course, and the queue shaping up. To give us a perspective, we have Sharad joining by as to what the queues are indicating at the moment. Sharad?
Well, it's quite negative cues there, and it's a big stark reversal of the IT stocks, which is there in focus. And let's look at Sensex, what's happening here, and see much of the sell-off. TCS is down 8%, Tech Mahindra down 5%. It's a massive, reversal from yesterday itself. Nothing major happening when it comes to gainers. Also largely flattish for Trent, M&M, and Power Grid. Only Maruti we are seeing a little bit of buying, but nevertheless, a big sell-off is there in terms of the markets, and the technical strength is of course quite weak. But what's there in the long build-up? There was a little bit of profit booking earlier in this capital good play, and now the reversal is happening. Nova Transmission and Distribution, and Avenue Supermarts also, but not that convincing also. The significant portion has not been built yet. Also short covering, we have NHPC, a little bit of reversal. The OFS subscription is there. Channel checks are suggesting larger institutions have shown interest. And Keynes Tech also, nothing major happening. It's just still in the green. But largely today has been a big sell-off, and you're seeing Samman Capital also making it to the list along with the IT stocks. And lastly, let's see the short build-up, and I think it's going to be the IT stocks as well. Just a reversal of what I was speaking yesterday, to be honest. And that's all it is in the F&O space today.
Got the view, Sharad. Thanks so much for that. So IT definitely continues to be under pressure, but take across the next query now, and this one's coming from Sunil Kumar. He is holding on to NHPC, bought at 90 rupees per share, and is currently holding 3,200 shares. So he's sitting in a loss. Vaishali, any view that you can provide him in the near term?
Well, so actually, it's not giving a clarity on trend. But all I can say is that the near-term possible view that I can have is it's holding on to 73 levels as support. And we can observe a range of 73 to 80. Unless and until the stock sustains above 80, it's hard to tell whether are we seeing a good upward move.
All right. The next one that we have is coming in from Sobha from Bengaluru. She's holding 5 shares of Nestle, bought at the levels of 1410. She's sitting on a small loss, wants to know whether she can continue to hold, sell or average at the current levels. Vaishali, I'll stick with you for this one. Nestle, how is it looking on the charts at the moment?
So Nestle had got into an uptrend, and right now we are seeing some profit booking and so some consolidation. But I would say there's no damage to the trend unless and until we see the stock going below 1340. So continue holding, and once we see the stock moving above 1440 levels, it's back on track and you can expect a target of 1500. So in my opinion, hold but with a stop loss.
Got the view, Vaishali. Vaishali, also on Welspun Corp, another query coming in now. This one's from Rakesh from Hyderabad. And he wants to know a short-term view. We did have the management, just a few days ago in the studio, a very bullish commentary in terms of revenue growth expectations. But on the charts, Vaishali, is that following through?
So So I would say keep a trading stop loss because, of course, it has shown one-way rally right from 800 to now it's at 1387, quite a run up. So be cautiously positive. Hold with a trading stop loss of 1340. And this can go towards 1440, 1450. I don't see much of an upside from here on for now.
Okay, all right. The next one that we have is on Britannia. Harsha from Vijayawada is holding around 30 shares at the levels of 5,700. Wants to know whether to add, hold, sell from again a short-term perspective. So Vaishali, I'll have to stick with you for this one as well. Britannia on the charts.
So when it's short term, I won't say add or just keep a stop loss of 5,000 because once again, stock deeply corrected. In fact, if you see the weekly chart also, it has come towards a make or break levels of 5,000. So 5,000 should be taken as a stop loss, and short term you would be hold for a target of 52 to 5,300.
Got that view, but it's now time for the rapid fire round in this edition of Ask Profit. Vaishali as well as Gaurang, you know the drill. Keep your answers as short as possible. The first question coming in on Ashok Leyland. Sanjay from Bangalore wants to know if it's a good time to enter. Gaurang, any view?
Buy for long term.
Okay, the next one is on Kalyan Jewellers, bought at the levels of 373. Continue to hold for the next 2 to 3 years, Gaurang?
Would prefer Titan, no coverage on Kalyan.
Ramesh from Bangalore is holding Pidilite at 1480, Vaishali. Should he continue to hold is his question.
Well, so it's 1452 right now. Keep a stop loss of 1420 and look for a target of 1500.
Okay, 500 shares of Kotak Mahindra Bank is what Ram from Chennai has bought at the levels of 368. A long-term outlook on this one, Gaurang?
Continue to hold for long term, and if you get an opportunity on lower side, you can add as well.
The next question coming in on Shriram Finance. Vaishali, our viewer has bought shares at 954. Is it a good time to still continue to hold the stock?
Yes, expect a bounce from here.
Okay, Railtel bought at the levels of 348. Ram from Chennai is holding around 100 shares. Continue to hold for the next 6 months, Vaishali?
So as I said, expecting a bounce in the rail sector, so yes.
Got it. The next question is on Cochin Shipyard, bought at 1715, Vaishali. By our viewer Sudeepto, he wants to know what should he do with the 75 shares.
Continue holding. If time is not a problem, continue holding. Look for targets of 1800 to 2000.
Okay, HFCL 100 shares is what Sriram Raghuraman from Chennai bought at the levels of 53 since June 21. The stock is currently trading at 195 from a long-term perspective. Gaurang, any view? Continue to hold?
Mahima, no coverage. I'll get a pass.
Vaishali, any view?
So technical target is 200. So we are suggesting to book partial.
On Sandeep from Hyderabad has bought into Dalmia Bharat, Gaurang at 1880, and he's holding 100 shares. Wants a fundamental view. I think the Q4 results were slightly weaker, but any view?
The numbers were weak, Puneet, no doubt about that. But yeah, given the benefit of lower levels from where he bought, he can hold on to whatever is there. He can add as well from long.
Okay, Bandhan Bank 600 shares bought at the levels of 190. Continue to hold, Vaishali?
Hold for near-term target 220.
Got it. The next question is from, on Irida, bought at 237 by Nikhil. So he's in deep losses on this counter. He wants to know if he should stay on Vaishali or average down. What would you recommend?
So for now, hold with stop loss 118. Average out at around 135, 145 once you get those gaps.
Okay, Kitex Garments is the next one. Krishna Prasad from Hyderabad has bought 400 shares at the levels of 230. Now it's around 160, I believe. Let's try to pull that up. 160, correct. What should he do, Vaishali, on the charts? Should he book his losses or continue to hold for recovery?
No, not in a hurry. Add more with stop loss of 150. This can go towards 192.
The next question coming in now, it's on Bharat Electronics, bought at 430. But before we do that, let's just cut into SBI Chairman CS Sethi at the Stay conference.
Demand is there. I think a lot of people have approached us. I don't have the numbers right away, but I think there's a good demand coming.
Any particular sectors that are seeing more demand?
No, I think across SMEs. Predominantly SMEs who are taking the loans.
Sir, in the current geopolitical situation,
यहाँ पर सर ये भी एक्सपेक्ट किया जा रहा है कि ECL नॉर्म्स में ट्वीक हो सकता है उसके लिए सर क्या वो एक्सपेक्टेड है क्या बैंक से?
No, I'm not aware. I'm not aware.
Can we get an assessment in terms of acquisition financing? What is the impact that you're seeing on?
No, currently, as we mentioned, I think we have not had any major impact on the asset quality so far, and we have to be watchful in terms of the lingering. Pardon?
Or demand?
And the demand of credit demand seems to be robust, and when compared to the year-on-year growth, we are seeing the growth continues to be robust across the segments. So we have not seen any demand constraint at this juncture, but we will have to see how the lingering impact of the legislation.
So last time we checked on acquisition financing, you were in talks with Japanese lenders. What's the update?
Any possibility with
So
Citi as well?
we work with all foreign banks and Indian banks in terms of creating that collaboration for M&A financing. We did a couple of deals together already, so we are working on many other
Are you
deals.
assessing any proposals for
Yes,
M&A?
we
How
already
many,
have. We have done we've done one already, and we first of all we put the system and also the team in place. The team is working now, and we have done one transaction. We are doing another one, and I'm sure that I think will play an important role. I think let's not get into the details.
Sir, what are your expectations from the RBI monetary policy also, especially in the context of how crude has behaved, how currency has behaved, and the inflation fears?
So the expectations, I think broadly the market expects that there could be a rate pause at this juncture. Growth, inflation dynamics are more important. I think a pause will definitely help us to stabilize in terms of ensuring that the smooth growth rates are achieved.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year.
Okay.
We are just waiting for the regulatory approvals. Calendar year.
Are you close to filing the...
we have already filed the DRHP, so we are waiting for the approval. Yes, we have filed the DRHP.
Yeah.
And then would SBI General also follow next?
Yeah, we'll see that.
US ambassador expected to say what do you have to say on the US?
Got it. Well, and you know that important question there by our colleague Nimit there on the SBI AMC IPO as well as on the general one, of course, will be something to watch. But the DRHP filed, as CS30 spoke about as well. But let's take a very quick break. We'll resume all the questions on the other side with our guests.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to...
Hello and welcome back to NDTV Profit. You're watching Ask Profit, and if you haven't already, do start sending in your queries on the numbers that are flashing on the top of the screen. Now, we had CS30, of course, speaking to our reporter Nimit there as well at the City Conference, and we also have a query now on the stock. Kaushik from Baroda is holding on to 20 shares of SBI. He's bought it at 1,050 and wants to know if he should continue to hold for the long term as well or no. Gaurang, you know, since he's bought it at 1,050, first a view on the stock, and second, if it's a good time to buy more at this point of time?
So Puneet, as a disclosure, again, we've been positive on SBI, and SBI happens to be one of the largest bankers to the nation, as we all know it, Puneet. And a slight bit of disappointment in the fourth quarter numbers in terms of treasury income, if I remember and recollect right. And because of that, there was a little bit of punishment on the stock. There was sell pressure, and sell pressure continues because the market's also down and out. Hold on to it. And Puneet, these are the corrections which actually should excite long-term investors to nibble into strong fundamental stocks from a long-term point of view. Hold on, and if you have investable amount, you can add an average as well.
Okay, all right. I think we've got Aruna calling us from Vijayawada. Aruna, a very good morning to you. Go ahead, ask your question. Hi Aruna, can you hear me? Okay, I think we seem to have lost the caller, but we do have her query. It's on Vimta Labs. She's bought 500 shares at the levels of 620. Vaishali, any view on the charts for Vimta Labs?
So I think the stock has shown good erosion and now signs of reversal. So I would say start buying this stock with support of 450 and near-term target we are looking at 550.
Got that view. The next one coming in now, it's from Royston from Maharashtra, and he's holding on to, or actually wants to actually buy REC for the long term. And what's the view? Gaurang, any coverage either on REC or PFC? Of course, the merger is impending, but any view on either of those stocks?
So Puneet, while we used to be positive on both, but since our target price were in place, we have not gone ahead with our coverage any longer, no coverage. But yeah, we remain extremely positive on the sector, that is power transmission and distribution and power equipments. And both these are well-defined players. And there is a news, I believe, Honorable Finance Minister said about merger of both these companies. But yeah, no coverage, so no specific comments.
Okay, the next one is on Bajaj Housing Finance. Our viewer Kesav Rao from Andhra Pradesh is holding 1,200 shares at the levels of 143. Wants to know as to whether he can continue to hold this counter further or book his losses. Vaishali, any view?
Well, I would say I don't have much of a data. Gaurang would be the better person to talk about.
Gaurang, any view on this one? Because from 143, it's now come to 83.
Yeah, I think this has been a drag and an underperformer, Mahima. But the only problem happened, I mean, we remain positive on the entire HFC, that is Housing Finance Companies, Mahima. Two recommendations are there, LIC Housing Finance and Canfin Homes. Despite of almost a decade after which we saw an IPO coming from the group, that is Bajaj, the stock is still under pressure. I believe it is below the IPO price as well. Correct me if I'm wrong. So if you want a preference, LIC Housing and Canfin Homes are better options.
Got it, Gaurang. And yeah, it's been a very, very disappointing ride. Recovered from those lows of 77, 78 odd, climbed to 90, then back again at these levels of 84, and has been under pressure as well. But the next query coming in now, it's unfortunately on another disappointing stock performance post listing, and that's on ITC Hotels. Now, our viewer Suman from Kolkata is holding shares at 182. Wants to know if we should average out now and continue to hold for the long term. Gaurang, any coverage on this stock? What would you recommend?
So ITC was in the news for all the wrong reasons, unfortunately, Gridham. Because of the, not only ITC, but all these companies like VST and of course Godfrey Phillips, Puneet, because of the price hike. Then once again, we had price hike coming in for the smaller length of cigarettes. We remain positive on ITC from a long-term point of view. The stock got adjusted for dividend, if I'm not mistaken, Puneet, recently. Last week it was, if I'm not mistaken. And we are optimistic in the sense that other than having tobacco products and cigarette business, ITC's got a couple of other businesses also. While the negative overhang is for companies like Godfrey Phillips and VST because of only focus business on tobacco products. Long term, continue to hold ITC.
Also, Gaurang, actually the query was more on ITC Hotels. So if you have any view on that as well.
So hotel sector, we remain positive, but on ITC hotels, we don't have a coverage. Indian hotel is something that we are positive on. But there are a lot of capex, Puneet, that are lined up by various hotel companies, whether it is ITC, whether it is Indian Hotels, whether it is Chalet, whether it is Taj GVK, or whether it is Lemon Tree. We expect tourism to pick up on all fronts to a great extent.
All right, so that's the view coming in on the entire hotel space. The next one that we have is on, this is from Nidika from Pune, asking about Jio Finance. She's holding 550 shares at the levels of 263 that she's kept from a long-term perspective. Whether she can continue to hold this or not, Gaurang?
So Jio Finance, again, Mahima, my sense, what I have observed since the time this company got hived off and listed as a separate entity, between 200 and 220, there are a lot of large investors who are looking at that. And there's been a couple of times in the past history since this company got listed, it goes to 200, 220, consolidates over there and then bounces back to about 275, 280, 300 plus levels. 350 is the target from a long-term point of view. Continue to hold on. If you got in at higher levels, you can add an average as well.
Got that view, Gaurang. But let's go across and take another caller now from Hyderabad. And Murli has a stock query for us. Murli, good morning. Welcome to the show. What's your query?
Yeah, good morning. Yeah, good morning. Good morning to all the panelists and you both. I have a query on Syrma SGS. I have right now about 20 shares at an average of 606.
Okay.
I sold about 20 shares and it reached 1,000 plus.
Okay.
So should I hold the remaining for another 1 year or so? I've been holding it for the last 3 years.
Well, Murli, firstly, many congratulations. You got it at a very good price. So you looked at the fundamentals or the technicals for Syrma SGS when you bought into it?
I looked at both and the company and the fundamentals of it, though it went into negative at times, but I hold it on assuming that it's a good company and it would bounce back.
Well, most certainly it did, Murli, and I think it went down to 425 since then. What a move for this counter in the last 12 months. Also, our stock has doubled. But let me get firstly a view from Vaishali. Vaishali, because we've seen rank outperformance from Sirma SGS, especially at a time when the EMS sector is under consolidation. Any view on the charts?
Oh, yes. I think it's a very good pick and it's doing very well. It should continue to do well. Even the monthly charts, they show a good upward move. So I would say please hold. No harm booking partial profit, but the rest one can hold for a target of around 1250 to 1300 levels.
All right, okay. We've got caller Seema who's calling us from Hyderabad. Seema, a very good morning to you. Go ahead, ask your question.
Hi. I'd like to add NTPC and Power Grid stocks. So can I know about them? Yeah.
Okay, Seema, got your question. Any time period that you're looking at to add both of these counters?
Short term.
Short term. All right, okay. Then I'll take this up with Vaishali. Vaishali, where are the charts more attractive? Is it NTPC or Power Grid?
Well, I would say right now market is showing some signs of weakness. So I would not really advise to trade, but I would say if you have to, I think Power Grid is showing more stability. 275 should be a stop loss and can go for this stock to look for a target of 295 to 300.
Got that view. Now, it's a stock we haven't discussed too much. KMC Specialty Hospital, the last 1 year chart has been very strong for this one. Ankit from Mumbai is actually holding shares at almost 87 rupees per share and holding 500 of those almost. So he's in the profits. Vaishali, I don't know if you track this. He wants a long-term view, but I'm guessing it's a very small company for Gaurang to track. But any view firstly on the charts, Vaishali, for KMC?
Sorry, I don't have this chart either.
Gaurang, I'm guessing are too small, right, to cover at this point of time. If not, anything that you like in the hospital sector?
Yeah, it happens to be a very small company, Puneet. No specific coverage on this one, but the healthcare sector, Puneet. And I would add one more dimension to this particular sector, and that is the ongoing geopolitical situation and the boil in crude oil prices, energy prices. Hospitals, healthcare, to a certain extent, IT, power generation remains insulated from the external shocks. We have 4 investment ideas in the healthcare category. Apollo Hospitals, Narayan Rudalaya, Fortis Healthcare, and Max Healthcare. And on the numbers front, other than Max Healthcare, Puneet, other 3 delivered fantastic set of numbers. But we remain positive on these 3-4 names.
Right, okay. The next question that we have is on Bharat Dynamics. Nala Muthu from Chennai is asking about this particular counter. He's holding around 120 shares, an average price of I think 800 for the last 4 years, and he wants to know as to what should be the perspective from a long-term view. Gaurang, I'll stick with you for Bharat Dynamics. What's the view like?
So Mahima, again, we remain positive on the sector. First of all, no specific comments on Bharat Dynamics since we don't have a coverage, but let me give an insight of the coverages that we have. Bharat Electronics Limited, Mazgaon Docks, and MTAR Technologies. These are the 3 names on which we are covered. And of course, one more private player, that is L&T. Bharat, and my view, personal view is, Mahima, that have 3 to 5 year time horizon, because these companies which are actively participating in defense, they take time to execute the order book because they are complex engineering, high technology, precise products. You can't afford to go wrong. And you have to make a prototype, then you have to get it through various tests, and then the mass scale production starts. So remain positive on the defense. Bharat Dynamics happens to be one of the strongest player in the defense, but no specific comments.
Got that view, Gaurang. But let's go across, take another caller now. And Vinod has a stock query for us. Vinod, very good morning to you. What's your query?
Yeah, good morning. I'm looking for a stock advice on Techno Electric and Rajesh Power, which both are SME power transmission EPC contracting companies. I'm looking for a 5 to 7 years horizon, preferably through a SIP route.
Got it, Vinod. Let me try and put those to Gaurang. Gaurang, Techno Electric, I think, we saw pressure post Q4 results, but any view on Techno Electric or Rajesh Power for the long term?
I'll give it a pass, no coverage.
Vaishali, on Techno Electric specifically, if you track the charts, because saw that massive 10% downtick post results, is there any momentum getting formed now on the charts?
So if you're talking about Techno Electric, well, there's nothing really happening. It's just consolidating. Since a very long time, it is just having a range of 950 to 1350. So follow these levels. Either way is a decisive move, give you a clarity.
Okay, all right. The next one that we have is from Amit, who's writing us from Mumbai. He's holding 1,000 shares of IndusInd Bank at the levels of 1380. He wants to know whether he'll ever be able to reach his cost price or not. And his query is valid also, right, Gaurang? He's been a patient investor sitting on a loss of almost 5 lakh rupees. What should he do?
So first advice is, Bahima, that don't let your capital erode.
Exactly.
60-70%, because then the recovery of your capital itself becomes a big question mark. Forget about making profit on your investments. Having said that, there are some news items recently which has actually played an overhang on IndusInd Bank, but we have a hold rating. I dare not say that he can average over here, but yeah, in case if he's got investable amount, then he can average some portion, since he got in at 1300 plus and the stock is trading at about 880, 890 odd levels. Hold an average, it may take a longer time. Patience will possibly pay off in terms of either narrowing your losses depending upon the quantity you average, or getting you a little bit of profit. I don't know if Vaishali has a view on this.
Got it, Gaurang. But next question coming in now, it's on Supriya Life Sciences. There's been another counter that was locked in upper circuit post results, and our viewer Mahesh actually holds shares at 678. So he's currently sitting on a profit, holding 15 shares. Let's look at the 1 week or the 1 month chart, and then you had that market correction over the last couple of days. So stock also tanked 10%. So it's been volatile to say the least in this week, up 13%, and you said a big jump post results at the end of last week, and then that downtick yet again. But Vaishali, it's performed well in the last 1 month. Would you recommend Mahesh to book profits? He's bought it at 678.
I would say so, book partial profit, because we've seen a good one-way run-up. But, and if you're not in a hurry, I think follow a strict stop loss of 850, because this stock, the way it has consolidated, can show new round of momentum and perhaps retest the previous high. So 850 should be a stop loss and continue holding.
Okay, all right. The next one that we have is from Sunita, who's writing us from Delhi. She says she wants to invest 3 lakhs rupees in ICICI AMC and wants a short-term view, a 2 months view on this particular counter. Vaishali, this question is specifically for you.
So first of all, well, if you want to just trade, then I think follow strict rules, and I'll just give you the levels. Yes, so currently I think it is at 3270, and I think keep a stop loss of 3150. 2 month horizon can see a target of say 36,3700.
Got that view, Vaishali, but let's go across, take another caller now from Telangana, and Anil has a stock query for us. Anil, good morning. Welcome to the show. What's your query?
Very good morning, everybody, sir. Thanks for connecting this call. So my query about I purchased Vedanta shares 1,000 rupees at the market price was 354.60 thousand shares.
Okay.
So can I expect 370, 380 next coming 1 month or 2 months?
Got it. Vedanta, Vaishali, we've seen the demerger and hence the price correction, but post that, there's still a lot of investor interest, right, on this one. Should he continue to hold? Should Anil continue to hold his shares at 364? What's your view?
So I think there's nothing wrong with this stock. We are seeing some corrective move and some profit booking. So if short term is the view, then hold with a stop loss of 320. If these levels break, then there could be a possibility of further profit booking coming to 300 levels. So 320 should be the final support stop loss, and continue holding.
Okay, all right. The next one that we have is on MCX. Anjali from Kochi wants to know the short-term target on this one. Vaishali?
So MCX currently at 2818. I think it is also into a profit booking. The near term, I think it can go towards 2600 levels.
The next question coming in now is from Venkat from Chennai. and he's holding on to L&T Finance, which he's bought into it at 270 and holding about 100 shares here. And he's asking if he should continue to hold this counter, buy more or sell out. Gaurang, any coverage on L&T Finance? I think you gave a view on some housing finance companies that you hold, but any specific view on L&T Finance?
Sure. So we do have a positive coverage. And Puneet, my sense is that despite of the headwinds and the concern in the near term as far as the entire BFSI segment is concerned, of course, there is also opinion that the credit policy that is due this week, there's going to be a status quo. Let's wait and watch what the governor has in mind and what is recommended by the MPC committee. But on L&T, yeah, we do have a positive coverage. And my sense is that after hiving off certain businesses which were not productive and did not contribute to a great extent, the balance sheet has become much leaner and cleaner. Long term, continue to hold L&T Finance.
All right, okay. The next one is on Balaji Amines. Neha from Bengaluru is holding 30 shares at the levels of 1481. Wants to know the target and stop loss from a 3 months perspective. Vaishali, yesterday's gain and today's gain combined together, it's gained around that 20% mark, and this is on account of the price hikes that were that it saw, right? So, any view on the charts? Do you think there's more steam left?
I would say so. If 3 months is the horizon, in fact, even on a weekly chart, it's showing good bullish candle right now. Though for the near term, we have seen a good run up already coming in. So I would say continue holding, but the stop loss comes at 1600. So that's your call as to would you want to hold with such a low stop loss. But I think the projected targets for 2 to 3 months, I won't be surprised if this goes to 2400 to 2600. So stock accordingly.
Got that view, Vaishali. So definitely, we put out the story yesterday in India Market Close about what's happening in the amine space as well. So probably that's what's leading the momentum there. But next question is from Battu from Hyderabad, and he's holding on to Escorts, which he's bought at 2970. Now he's holding on to 253 shares. But Gaurang, very interestingly, though, we've seen that last year was a record year for the tractor industry, crossing that 1 million sales mark for the industry. But the April and May numbers are also not too bad, right? What would you recommend here if you have a direct view on Escorts, or what do you recommend for Bhattu to do?
He's got a nice name.
That's why I took it twice.
So I believe Escorts Kubota is what the stock we are talking about. And the entire tractor, earth moving equipments, farm and agri equipments, which Escorts Kubota is into. Excited about it. Yeah, I mean, deficit monsoon may create a little bit of headwinds in the immediate short to medium term. But if you're a long-term investor, continue to hold on. We have a buy coverage as a disclosure. So, and if you got in at higher level, if you have investable amount, you can continue to add and stay invested. Target price, very attractive. And the downside looks protected. And targets are somewhere close to about 3,800.
Okay, wow, 3,800 targets for Escorts Kubota. That's what Gaurang is predicting. But, let's start a rapid fire round. And Gaurang and Vaishali, you both know the drill. The first question that we have is from Ajay, who's writing us from Bengaluru, asking about Aeroflex Industries. He's bought at the levels of 345,000 shares is what he's holding. Vaishali, on the charts. Aeroflex Industries.
Aeroflex, yes. So right now it is showing some momentum. It can go towards 460. Hold.
Got it. On Sandhar Tech, Neelam from Jaipur is holding shares at 441. Gaurang, we had the management come and say that they're expecting FY27 to be one of their best years. Any view on the stock or anything that you like in the auto component space now?
So yeah, I mean, this is a very strong player, Puneet. No specific coverage since we don't have one. But we like Uno Minda, CIE Automotive, JK Tire, Apollo Tire, Balkrishna Industries, Oxide Industries, Amara Raja Mobility.
All right. The next one is on Kansai Nerolac. Akhil from Pune is holding 60 shares, bought at the levels of 163 from a 2-year perspective. Continue to hold. Gaurang?
Kansai Nerolac, yeah, I mean, paint happens to be one of the sectors which are affected by the ongoing geopolitics. Long term, continue to hold. We have positive coverage.
Sign DLM bought at 605 by Bhaskar. Vaishali wants to know what should he do with his 80 shares now?
Currently 455, hold, look for a target of 500, 520.
KC International from a long-term perspective, is it a good time to enter? Saurabh wants to know this. Gaurang?
So we are positive on KC International. Mahimad, the only problem was the numbers were a disaster. Let's be very honest to ourselves. But long term, being a small to mid cap cap goods engineering play, we remain positive. Continue to hold and add as well.
Got the view, Gaurang. On NTPC Green, Dr. Ravi Shankar is holding shares at 98. Wants to know, Vaishali, if he should exit now or continue to hold. I know it's a very recent listing, but any view?
Keep a stop loss of 95 and hold, because this can go towards 120, 130.
Okay, Bharat Electronics bought at the levels of 430. Can I continue to hold? Prem from Hyderabad is asking. Vaishali?
I think keep a stop loss because near term is a bit bearish, so keep a stop loss of 400.
Next one's from Nikit from Bangalore. He wants to know if it's the right time to buy into Aether Energy. What would you recommend? Vaishali has seen a very strong run up.
Buy and dip.
Jupiter Wagons, a 2-year plus view from a long-term perspective. Ashish from Delhi wants to know. Gaurang?
Well, this also happens to be a play in the Indian Railways and has recently secured orders. No specific comments, no coverage.
Rajesh from Hyderabad wants to invest in an auto ancillary company. I think, Gaurang, you gave quite a bunch of a list, but his question is also on Sansera Engineering, if it's on your radar.
Not on the radar, but happens to be a decent player in the auto ancillary pack.
Okay, Bank of India, 100 shares bought at the levels of 91. Murli from Hyderabad wants to know, from a long-term perspective, is this a good hold? Gaurang?
We have a positive coverage on Bank of India, continue to hold.
On Senco, Vaishali, how do the charts look right now is what Jaya from Bangalore is asking.
Senco Gold, that is 343. Nothing happening for now. It needs to cross 360 to show some strength.
Tejas Networks bought at the levels of 481, 20 shares. What's the short-term view on this one, Vaishali?
So this has shown good momentum and this can go towards, I think, 600 for short-term perspective.
On Wellspan Living, also Vaishali, our viewers bought shares at 127, asking if it's a good time to book out right now. Certainly in some profits, what would you recommend?
So, well, if time is not a problem, continue holding. This can go towards 160, but also hold with a stop loss of 135. And if it's a short-term period, then do book.
Got it. Well, that was the last query on this edition of Rapid Fire. Gaurang as well as Vaishali, thanks so much for helping us solve a lot of queries today. 60 of those that we have across stocks and spaces. So thanks so much for your inputs today. But viewers, out of time on this edition of the store. Stay tuned. A lot more action on the other side, and we'll see you at 2 p.m. for Ask Profit, the afternoon edition.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where I get to the hottest companies, what's the story behind it, and interestingly, will there be any alpha made or not? So let's start with the company in focus today. That would be definitely there, but I'll give you some hints. Try to guess it. It's India's third largest manufacturer of magnetic winding wires. And if you look at the export angle also, that's also very strong. Company delivered with a very strong operational numbers, and it was recently listed also. Let's see the date. What's there? Of course, it's backed by Malabar Investments as well. Try to guess the company. This was listed on December 23rd, 2025, near the Christmas Day period. Interesting. But the stock has given a solid returns, up 113%. Stock double हो चुका है IPO प्राइस से. लेकिन ये स्टॉक है क्या? ऐसे खराब बाजार में इस स्टॉक में अच्छी रिटर्न्स? Which stock is this? The stock in focus is KSH International. The company is coming for the first time in KYC, and we'll try to decode what this company is all about, what's the outlook ahead, and why did the numbers come so strong in Q4. But a lot of questions are there. Let's try to answer them one by one. Why are we calling this company? Strong growth outlook for FY 27-28. Will this sustain? Because 4 quarter numbers were strong, and that is where we would like to see the momentum in this counter. Also, the second question, the views on exports and specialized wire segment. The management has explicitly stated in their press release that these are the growth levers. Let's try to understand more about the demand trends in the client confidence, especially on the client onboarding front, and also how the raw material prices are jumping, and is there any pass-through mechanism, because the company definitely has a lot of raw materials tied up to metals and minerals. The utilization numbers of the factory and the capex plans, what are the numbers looking like for the next 2 odd years. Also, we'll be looking at the future product mix as the company is pushing towards the value added segment. Apart from this, another important question is there any execution risk, because monsoon is nearby? In their industry, there is at times execution risk or lumpiness as well. And to explain this entire process, we'll have Rajesh K. Hegde. He's the MD at KSH International, where we'll ask a lot of questions for Rajesh. But let's try to understand the company first. This company karti kya hai? First and foremost, I would like to point out 2 important portions. The company was founded 1981. It's India's third largest manufacturer of magnetic winding power and also the largest exporter. So definitely their revenue mix is pretty interesting. They provide ultra precision special and standard magnet winding wires to OEMs. So that is something to watch out for. But where does the wire go? It's in the power, renewables, railways, motors for the EV and the ICE, internal combustion engine segment. So they are catering to a lot of industries. Also for industrial, there is home appliances, compressors and refrigerators as well, where most of their wiring solutions are there. Now they have 4 manufacturing facilities which are located in Maharashtra. Apart from this, also the key factor to watch out for is the total annual capacity. Look at that, it's around 43,445 million tons per annum. So that is something we'll be watching out for. And interestingly, 2.45% stake is held by Malabar Investments. 70% capacity utilization is there in the 4th quarter. Also, let's look at the other key triggers for the stock. FY26 EBITDA per ton stood at 67,625. Compare that with the numbers last year, it was 52,356 rupees per share. Also, let's look at the segmental revenue mix. The specialized segment that is still there, value added margin is higher. It's around 75% of the margins. Compare that, it's around 25% for the standard wires which we are talking about. Apart from this revenue mix, the key clients, very big names are there. BHEL, CG Power, Hitachi Energy, Bharat Bijli, ABB, Bosch. So you can say technically it is a power ancillary company, and this is why the entire sector has been seeing a lot of strong, you could say, tailwinds, and it's an approved supplier to Power Grid, NTPC, NPCIL and RDSO. So definitely the company's credentials are pretty strong. But how was the 4th quarter? The first question is strong volume growth coming in, and the mix is also good. Higher copper prices were also there. So we need to understand what's the pass-through mechanism for them. The volumes increased by 29% on a year-on-year basis. So that is showing strength. Apart from the volumes, also there's specialized magnet winding wires. That's the revenue going up by 103%. And if you look at the exports, that has also gone up by more than 92%. Apart from this, the Q4 performances, what's working for the stock, more reasons than what's not working. Strong growth outlook for the exports and the specialized wires, ye management ne kaha hai. And apart from this, the improvement is coming in the working capital ratios by a little number of days, but nevertheless, it's very strong. Debt equity ratio, that has healthily come down. Of course, post the IPO, they've used that to reduce the debt. It stands at 0.39x. Also, apart from this, the strong customer confidence has come in, especially during these uncertain times. The customer onboarding has been strong. That's what the management had stated. So definitely this looks like a positive point. But what's not working? H1 FY27 might be impacted due to rising costs, and this is for the entire industry. Pricing pass-through for the mechanism, that needs to be seen how the company is able to do it, because let's be honest, March quarter hasn't taken the major hits because every situation happened at the last week of March. Execution risk of large power projects remains a key risk. So these are the reasons where my entire analysis is coming in, and the run-up which has happened from the IPO, because of that the valuations may not be reasonable for right now. But let's talk about the rating parameter. What do we want to give to the company? But before that, let's give in the total numbers to actually check out. This includes income statement, balance sheet, cash flow, and of course the ROC, ROE numbers also for the company. I've also taken the shareholding pattern and the street cred, but remember the company was listed just last year on December 23, so the data is quite less. Operational parameters I've taken in terms of valuations, but I have flagged that the valuations are not cheap for the stock, and the outlook ahead. What are the numbers, or what is the company expecting going ahead? But let's start with the first one. That one is your income statement, and look at that growth. Last 3 years CAGR, the stock has been going more than 50% up perhaps it's justifying its premium valuation right now. 63% of top line and operational growth in the 3-year CAGR numbers. Even the Q4 numbers, if you look at it, they also have shown strength. If you could just pull out the Q4 numbers to show what the growth is on a year-on-year basis, be it revenue, EBITDA or net profit, most of them have doubled up, the top line and the bottom line. Let's have a look on the margins, what has happened, and I feel margins has taken a little bit of hit. It was going comfortably above that 6% mark, but now it's at 5.5%. So we'll try to understand why the margin pressure and will this continue going ahead or not. But net, I could say this is a strong thumbs up when it comes to the income statement. Up next is balance sheet. I mentioned to you earlier that the debt levels are on the lower side, and that's what I'm talking about. The balance sheet has done well. The cash levels have gone up. Look at that, it's around 84 crore rupees, and net worth seems good as well. So all in all, a good balance sheet management. So I'm going to give this a thumbs up as well. So we spoke about income statement, we spoke about balance sheet. Let's look at cash flow. Is there any lumpiness in this business model, or this just a neutral way of looking at things? And yes, things have improved. The EBITDA number has improved and the company has turned net cash flow positive, but there is lumpiness in this industry and I want to be fair in my rating. So I'm going to give this a neutral rating for the cash flow segment. Let's pull out the return ratios and see what happens. And largely the ROC numbers is something to track. It's around 13%. It went at a peak of 17%. Slight cool off at 16%, but nevertheless it's a 15% plus ROE business. Return ratio, same story happens here for the ROE numbers also. It's comfortably at the 20% mark. So net, it's a very solid return ratios for a business model like that, but a little bit of moderation has come. So that is where a little bit of question comes for me going ahead. So I'm going to give this a neutral rating. Okay, so this is pretty much interesting. We'll just take a quick break. Out of the break, we'll be coming back with more details.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, What do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editors.
Welcome back to KYC, and of course we are talking about the KYC rating parameters, and let's go on to the next one, that is the shareholding segment. Of course, largely the promoter stake has been, you could say, neutral around 75%, but one thing which I liked was the FIDI. They have increased the stake partially from 4% to 5%. For FIs and for DIs, this number is around 13 to 14%. So that's pretty interesting as well. So I'm going to give this a thumbs up as well. Also in the street cred, we are having the stock's reaction. From the IPO price, the stock is up 113%. And look at that, from the listing price, the stock also jumps 121%. So the stock has made money if you have invested in the company or even after that. But let's look at the operational parameters, what is there. I have taken EBITDA per turn and sales volume per turn, and look at that, the operational numbers are pretty strong and a good jump, both YOY basis as well as a sequential basis. So I'm going to give this a thumbs up as well. Let's talk about the outlook, how things pan out, and largely you need to take this thing with a pinch of salt. The company wants to exit FY27 with an installed capacity of almost 59,000 million tons. Good execution momentum is something which they have spoken about, and the increased demand for export products and the special segment in the new countries is something which they are looking out for. Now they have signed up new domestic OEM customers for standard wire products and also diversifying the business to leverage the new growth market. So it's a neutral rating right now because of uncertainty coming in. But let's try to recap what are the important KYC ratings coming in. Income statement, balance sheet has been quite strong. On the other hand, the street cred and shareholding, if you look at it, largely the stock has given good returns post IPO as well. Operational parameters have been strong, and so has the interest amongst the institutions. So net on the higher side of the average earnings which I gave in the KYC segment, the company gets 6.5 out of 8. So that is a really solid, strong set of numbers which we are giving for KSH International. But we have the next speaker, Rajesh K. Hegde. He's the Managing Director of KSH International. An interesting snippet about him also, he has 28 years of experience in strategy and management, and of course a strong education coming in as well, and he joined this company in 1996. So joining us, we'll have Rajesh K. Hegde, the Managing Director at KSH International. Good afternoon, Rajesh. It's always a pleasure to have you with us. Just wanted to understand the fourth quarter numbers are quite strong. How does the outlook look for FY27, FY28?
Good afternoon, Sharad. Thanks for having me on the show. So, if you look at our Q4 earnings, see, we are sitting on a pretty strong demand environment. And we had this new additional capacity that has come in the new plant, which was available for Q4. This has allowed us to basically address the demand which was actually available in the market as well. This has finally led to the volume growth over the previous year of about 29%. Now, demand is driven by two things. A few things. The T&D cycle, which is there, which is very strong across not only in India but across the world as well, and that's the primary drivers for us. For that is the renewable energy rollout that's happening across the world, and the data center demand that is there. And then you have also, for us, basically it's the export demand because, almost all my customers are in expansion mode right now. So if you look at the growth outlook that you asked, I mean, it remains strong, especially in the T&D segment. Transformer OEMs are, growing, adding new capacity. Most of the capacity will also kick in. The new plants will start sometime in FY28. And then finally, we also have, two other levers for future growth as well, which is the localization of the AC compressor segment that is happening, AC compressors that's happening in India, where because of BIS and also for local content requirement. So there are a number of new plants which are being set up for manufacturing AC compressors, which uses the standard magnet winding wires. And, another future lever for growth will be the EV segment, which of course is quite small right now, relative to the T&D segment. But we feel that, in future, in another couple of years, I mean, this is the segment which will drive the specialized magnet winding wire and the standard magnet winding wire demand.
Rajesh, apart from this, the concerns definitely come in when we talk about the raw material prices. There is a pass-through mechanism also. We just need to understand what's the lag here. Is it a 1 quarter lag? Because the impact will start coming in this quarter.
So, I mean, you have to understand that, our business basically is a make-to-order business. We don't do anything make-to-stock. And every order, where we have the metal price that gets, finalized on the same day. And that becomes the invoice price for that order. And generally, it's about a 15-day cycle for, from getting the order to delivering the material X works. So, it's 100% pass through when it comes to the LME, not only the LME, but the exchange rate as well. What we focus on is the value addition that we do. And that's the explanation for something like this. So, the right measure for our business actually is EBITDA per ton.
So what will be the EBITDA per ton guidance going ahead? Because you have been growing sequentially. I checked the numbers. It was good. Year-on-year basis also it was good. Sales volume growth is kind of, you could say a little bit of peaking, or you could say plateauing. So how is this numbers looking like? What will be the guidance for the EBITDA per ton, next 2 to 3 years?
Well, if you see historically, I mean, last year we did at a blended EBITDA of about 67,000. The year prior to that was about 52,000. And, the new capacity that came in was actually available for us from Q4 onwards. Now going into the next FY26, we have this entire capacity of 43,000 tons available with us. And generally our view is, in terms of capacity utilization, it takes about 2 to 3 years to reach about 85% capacity utilization for any new plant as well. So, in terms of EBITDA per ton, I mean, we feel that in terms of volumes, last year we grew at about 29%, year on year. That is sustainable, in terms of growth as well, in terms of volumes. And, our endeavor is, of course, to maintain this between 67 to 74,000, per metric ton. Because our last quarter, if you see Q4, was at about 74,000
per
metric ton.
Rajesh, two segments you have been quite bullish on. One is the exports and the specialized segment. But I just want to understand, now your company is moving towards the value-added segment. So how does the product mix lie, next 3 to 4 years? And what kind of margin outlook you will give? Because this quarter, if I'm just looking at it, there was a little bit of pressure in the margins. So I just wanted to get your margin outlook and how the product mix changes.
So let me answer the margin question first. If, since copper is a pass-through, and if you look, the year prior versus last year, copper prices have moved up, but copper is generally a pass-through for us. So in an environment where copper prices are increasing, margins might look to be lower, but that's why we give, we put out basically the right measure is EBITDA per ton. And we don't really look at, in terms of margins might look less in an environment where the copper prices are increased, and even this year also we find that the copper prices are, on an upward trend, globally as well. So that's the, I mean, does that answer your question, or do you have another question?
I have a question, Rajesh ji. Is that the product mix, how does it change? Because you are going after value-added product also. So that also tries to offset, the margin pressure we might see even if you have 100% pass-through. So I just wanted to take your view on that as well.
So 75% of our, revenue comes from the specialized magnet winding wire segment, and which is actually going into the T&D or the transformers or wind generator or any railways, product which uses the magnet winding wire. We expect this mix to continue going forward, and 25% is from the standard which goes into your motors or the EV or the other applications. In terms of, if you look at it, obviously specialized magnet winding wires is a higher margin product or EBITDA per ton product as compared to the standard. Generally, it's like a 3:1 ratio between specialized to standard.
So last question on the utilization levels. It's around 70% right now. What kind of utilization levels you are expecting for the next year, since you have spoken about a lot of orders coming in? And also any capex plans if you have earmarked, or it's just going to be replacement costs?
No, so let me address the capacity part of it first. I mean, like I said, 43,000 tons we closed with last year, capacity being available. Now, this 43,000 tons of capacity is available for the full year. It actually came online in October of last year, and so it was actually available for half the year. Now, with this capacity going forward, and if you look at in terms of what I mentioned earlier, that historic, like last year, we had about a 29% growth year on year. Our endeavor is, of course, to maintain this growth in terms of volumes going forward as well. And for any new plant, to reach 85% capacity utilization, it does take maybe a couple of years. And, Supa plant has just come online last October, and our endeavor is to keep increasing the capacity utilization.
Right,
but in a strong demand environment, I feel that that's possible.
Well, that's what's happening to the stock as well, and as you rightly pointed out. Thanks a lot, Rajesh, for giving your views on the company, industry, and the outlook as a whole. It's always a pleasure to have you on our show. So that's an interesting take coming on the management of KSH International. First time the company has come to KYC. A bullish commentary coming in, and especially they have stated that there's a 100% pass-through when it comes to the rising copper prices. For interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's big.
Benchmarks trade under pressure today with the Nifty trading near 23,200 levels and Sensex losing over 900 points. All major sectors traded in the red today with sharp pressure on IT, realty as well as FMCG. IT rally hits a speed bump as investors logged in profits after a strong run-up. TCS led the sell-off with its sharpest single-day drop in years, while Mindtree, LTI Mindtree and Persistent Systems also came under pressure today. Oil prices are surging again as hopes of a US-Iran peace deal fade and fresh conflict rocks the Middle East, with Brent crude really nearing $97 a barrel and geopolitical risks intensifying. Energy markets are really bracing for the possibility of further supply disruptions. A new trade flashpoint is emerging as the United States proposes fresh tariffs of up to 12.5% on imports from around 60 countries, including India and China. The move is linked to forced labor concerns and could reshape global trade flows.
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals. Calendar year.
Are you close to filing the...
we have already filed the DRHP, so we are waiting for the approval. Yes, we have filed the DRHP.
Yeah.
In an exclusive chat with NDTV Profit, SBI's top boss CS Shetty says SBI AMC IPO is on the cards by the end of this calendar year. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar, and let's take a look at the market. And yes, there is weakness and a substantial weakness that is seen in the markets, and a lot is really owed to the concerns around the West Asia crisis, with the US and Iran tensions being escalating and also putting that pressure on the oil prices, which are spiking up once again. And all of that is really showing up in the Indian companies and the stock market as well. A lot also has to do with the IT sector, which after 2 days of stupendous rise has seen a major bout of profit selling today. In fact, it's the worst performing sector, and a lot has really transpired around concerns on the IT majors and the AI thrust overnight in the US market, and that is also weighing heavy on the Indian markets as well. So there you go, almost all the sectors are in the red, and at the moment Nifty 50 is weakish in trade, as at this point no let up is being seen seen in the markets at this point, over 1% drop in markets. But let's get some important corporate developments of the day. And Harsh Mariwala, the founder and chairman of Marico, speaks to NDTV Profit on the sidelines of Citi's India Conference 2026. Listen in.
Sir, now the company has gone into the hair cleansing segment. What sort of a USP is for this particular product, and what sort of a runway do you see? Because it's a new segment for Marico.
So you're absolutely right. First time we are entered into shampoos in a serious manner, and we are leveraging our very strong Parachute brand name, which has very good equity, which has a very good emotional connect with the consumers. It stands for purity and stands for trust. So we are leveraging the goodness of coconut through this Parachute shampoo, and we've just launched it last month, so we have to wait and watch what is the response, but we are hopeful that it will do well.
Sir, in Marico, which are the products with the West Asia crisis going on? Which are the segments which will be resilient in this time, and which are the ones which will sort of need some support?
See, I think in many cases we pack our products in very small packs, which cost 10 rupee, 20 rupees. So in those categories, the impact may not be as high as something which is far more expensive. So for example, a Saffola cooking oil, a 4 kilo, 5 kilo, costs much more. So because the overall outlay on that particular brand is higher, there may be some cut down on the consumption. But I think it all depends on the crisis is panned out. If it continues for long and if it is leading to higher inflation, then everything may get impacted.
Also, so far, Marico hasn't really taken any, after the Middle East crisis started, no price changes have happened so far as per our dealer checks. What has worked for the company? Is it a better preparation which has worked, or something else?
No, I mean, one of our key brands, Parachute, the raw material prices fell. So because of that, we were able to absorb the cost inflation in, say, fuel prices, packaging, material prices.
Lastly, sir, I know nobody has the answer to this, but the guidance, the volume growth, which the company has said a high single digit, how sustainable it would be, and what can the investors expect?
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
All right, so that was the Marico founder giving insights on the quarters coming by and also the new product launches with my colleague Ridhima Bhatnagar. All right, let's shift focus to UFlex, and on the back of earnings, strong set of numbers there. But today, with the market momentum being weak, the stock is also down 2%. But if you really take a look at the 1 week chart for UFlex, it had seen a substantial gain ahead of the results. Also probably, and there you go, you can see the numbers there and the kind of trajectory, and that has a lot to do with the kind of strong performance that the company has really delivered in the last quarter gone by. All right, so strong set of numbers. Let's get chatting with the management of UFlex as well, and we have Sumit Kumar, who's the Executive Vice President Finance at UFlex, joining in. Sumit, of course, better realizations, product mix, all of them really helped with the profitability and 70 basis points uptick in the EBITDA margins. In the present circumstances, we are more than halfway past this particular quarter. How much of that profitability is looking sustainable?
Yes, good morning, Nisha, and thanks for having me over on your show. In a way, you set the tone for what I'm going to talk about for our very strong Q4 performance. And actually, if you see, before I even discuss the numbers for UFlex for the Q4, to put it in the right context, it's better to also understand the overall challenging backdrop under which we achieved this performance. So for a year as a whole, in fact, a major part of the year was marked by trade-related, tariff-related uncertainties. Against those headwinds, and particularly in the India market, the transition to GST 2.0 had its own impact on the overall demand. And finally, in the Q4, we had this Middle East crisis impacting and disrupting a lot of supply chains. So against this overall very challenging backdrop, I think it is important that we were able to achieve this Q4, a very solid, very strong performance. I think if I ascribe the factors behind this strong performance of quarter four, I will highlight three major points before I come to the numbers. So number one, in fact, is that UFlex is a fully integrated packaging majors across the globe with very strong manufacturing footprint across many countries. And this meant that in terms of our supply and delivery capability, and also having this manufacturing footprint across the globe, meant that we were one of the least disrupted players in the industry. And coupled with this improving realizations during the quarter, I think that helped our overall growth, which was 12.8%, very strong sequential quarter growth, and also 5.7% quarter year-on-year growth as compared to the quarter four of last year. This was largely on account of very strong growth in the sales volume of 10.3% on a sequential quarter basis and a 1% on year-on-year basis. Further, in fact, if you drill down this 10.3% volume growth for overall company, we had an 11.4% growth in the packaging film segment, the two major segments being packaging films and packaging business. So 11.4% growth in the packaging films business. And
I'll have to stop you there. Of course, we have the numbers. They've been announced. And yes, there was growth in across all the segments, and there is a fair bit of profitability that is being seen. You spoke about the challenging times. How much of the cost pressure and supply chain constraints is really impacting the company in this particular quarter? Because this quarter, we could see a full quarter of impact of war.
Yes. So, in fact, I will talk about both the quarters coupled together to give you the right perspective about the impact. So, during quarter four, which is a quarter reported numbers that we're discussing, during the quarter, we saw this increase in the raw material cost, not only being absorbed, passed on to the customer, but we also had the more than corresponding increase in our margin. So, we saw during the same time a margin expansion for most of our businesses. That is highlighted by the fact that while on one hand we had 12% growth in the revenues, the top line, we had 300%, we had a 36% increase in the EBITDA numbers. Our margins expanded by 260 basis points on a sequential quarter basis and by 300 basis points on a quarter year-on-year. So you see the EBITDA margin expansion has been the strongest, and in fact this is the strongest in terms of EBITDA margin for the last 14 quarters for the company. Our aggregate EBITDA of 6,260 million is also the highest EBITDA witnessed in last 14 quarters from quarter one of FY23. So largely as we see, this quarter four performance has been not only driven by better realization, improved volume, but also in terms of our operational excellence and ability to provide the assured supply to our customers has resulted that we have also been benefited by the higher realization of the market on back of the sales volume, resulting in a much more than corresponding increase in the EBITDA.
All right, so better volumes, and most of the industries have seen better demand and better revenue, Sumit, in the last quarter. What I'm asking you is 12.8% margin sustainable in the present quarter? And if not, what are the factors and which segments are getting impacted?
Yes. So on one hand, in fact, if you look at this packaging films business, I think during the quarter, we also seen that the uptrend being moderated. And on overall, for the 12.8% EBITDA margin for the year as a whole, we see that being the base marker for us to continue showing improvement. And we see EBITDA margins definitely improving from the overall basis of 12.8% here on to improve further.
Right. And going forward, any other guidance that you want to give for this particular quarter quickly, Sumit?
In fact, we will look at year as a whole rather than giving any particular guidance for the quarter in the midst of quarter.
Yes.
So year as a whole, we expect that a 70 basis point improvement over the previous year's EBITDA margin, which is 12.8% as a base. EBITDA margins improving from here, and overall revenues where we had last 4 years, if you actually put in perspective, we had a CAGR of close to 15%. If we see that as a CAGR and based on the current visibility, we see any kind of growth in the top line of high single digit or around 10% as the guidance for the revenue for the coming fiscal.
All right. Thank you so much for all the guidance, Sumit. Always a pleasure chatting with you. All the best for this financial year. Thank you.
Thank you so much, Nisha. Thank you.
All right, IT sector is our top story today with the kind of downside it is seeing, and IT sector is witnessing a sharp spell of volatility after, remember, a strong recent rally that we had seen. Now, investors are booking profits while technical indicators suggest the sector may have run ahead of fundamentals in the near term, adding to the pressure. Some global brokerages have also turned more cautious on the outlook for technology spending, triggering a broader pullback in the software stocks worldwide, while the long-term digital as well as AI story really remains intact. Markets are now also reassessing the valuations, growth expectations, and the timing of the next leg of the recovery. So that's the momentum now. Anil Rego, who is the founder and fund manager at Right Horizons PMS, joins in. Anil, pleasure speaking to you on NDTV Profit. My first question is, what do you make of the kind of pressure that the market is seeing today?
Yes, so I guess we have IT which did well for some time, now taking a bit of a correction. It also a little bit has been in line with our view that, this is possibly there was one leg left and that is sort of unfolding. Our view has been somewhere between June, July, we should see a bottoming out, and hopefully from there we see a little bit of a sustained, up. Okay, because when we're looking at various contrary indicators, etc., I think we are coming closer to the end, whether it is in terms of number of stocks which are at 52-week lows, if it was in terms of the breadth of the market, etc. Right, so you have those at levels which typically, from there one sees a bit of an uptick. So at extreme points, again, we're seeing extreme point on FIs, okay, and again, a set of outflows there. So all said and all, I believe it's a little bit a part of a natural correction. It's hopefully it's part of a bottoming out process, and at extremes is where it makes you very nervous. But one believes that in the short term we may see a little bit more volatility, through this month. And potentially next month, and then hopefully, we should be better off from there.
Right. Anil, how do you play the IT sector? Because there has been a lot of narrative building, overseas impact as well. But there are some experts and market experts right here on Markets at 12 also yesterday saying that it was a dead cat bounce. And today it looks like it probably was. What's your view on the IT sector and the current valuations and investment strategy for that?
So interestingly, we have a bit of a contrarian view there as well. Okay, and our view is that yes, in the short term, the index and the stocks need to find their level. Okay, definitely there is this whole thing around AI, and I'll use that wave itself and the US to give you an example. You had NVIDIAs of the world really do well, and then suddenly you had the Intels and the others follow through, right? So I believe that is also going to be there because my view is that actually Indian IT will also benefit from the AI wave, okay? Because they are working a lot with large MNC corporates who cannot just implement AI just like that and get it running, right? They have a whole lot of implementation work to do. Somebody needs to oversee it, and somebody needs to test it, and there's a whole lot of integration with various parts of their code, and that, in my view, Indian IT is best placed for that. Okay, so while you have this happen, I think coming back to IT itself and valuations, etc., I believe that we've seen both a price correction and a very good time correction. In fact, I guess it's been frustrating for most. Okay, wherever you thought, like even now, you thought, okay, the rally is about to take off. It again, frustrates you there. But it's coming back to my point that when you find the points of extreme frustration, okay, when you say, okay, from here, I don't think it's ever going to go up. Okay, is where it will come and it will really, turn around and do well. So in the short term, yes, I think this volatility is part of this bottoming out, as there's a bit of a thing from both sides coming back and fighting it out, saying that, where it will sustain. But I think in the long term, it's still going to be earnings growth, is going to be all of those factors. And I think some of that with AI projects also will start coming in. I believe that, Indian IT services will also benefit from AI in some form.
Right. So, Anil, that was your view on the IT sector. But at the current moment, given the market condition where there is a selling pressure, which is seen all across the board, which are the buying opportunities, or are there any buying opportunities that you're looking at? And how do you view the short-term nature of the market movement?
Well, when I said bottoming out, what do you do even with those sectors, including IT and stuff? I think you need to be staggering things because it's difficult to predict exactly where it is. So definitely, I'm not giving a buy call. Go and buy full as of now, right? So, and when it's saying it's going to be volatile, and so right up to maybe June and possibly July as well. So that's just a caveat that I just want to say. Now coming back is what is it that you can buy? I think the safest way to go about it is say, okay, what's not going to be impacted, right? So, and there are themes like, for example, hospitals, okay, which we would like to look at, and I think there's a secular trend which should sort of come in, and so hospitals can be one. The second is we still think that manufacturing, has a wave, up to go. Of course, you have to be careful that you can avoid companies now because of the war and especially the impacts on petroleum prices, etc. Right. So in the short term, we see volatility out there. So again, focus on manufacturing, just sort of let's say, petroleum based, or it's using inputs which are raw materials of petroleum byproducts. The other thing would be in terms of we also like say some of the consumer discretionary names. You can play it at two levels. You can play it at the top end where you're looking at premiumization, or you can look at it, some of them which are coming at the bottom end of the spectrum. So those I think are 3-4 places that we believe that we could do and look at it. And as we get clarity, then go back to financials and that thing.
Right. So, Anil, many takeaways are coming in from that, and many sectors that you think are worth considering at these valuations. Thank you so much for joining us on NDTV Profit. Let's shift focus to the tech and AI space. Well, we are talking about NetWeb, and take a look at that particular counter. It's 1.5% down today, but if you really take a look at the 7-day chart and 1-month chart, it is a huge amount of uptake that this stock has seen. It's about 15% uptake that it has seen in the last few days of trading session. And after it delivered another strong quarter as India's AI infrastructure boom really gathered pace, with AI systems now contributing over 40% of the revenues and global investors pouring billions into the AI ecosystem. The long-term demand story for compute and AI infrastructure really remains firmly intact. In fact, let's get chatting to NetWeb management. Swastik Chakrabarti, who's the VP Technology at NetWeb, joins in. Swastik, always a pleasure to welcome you on NDTV Profit. Now, my first question, of course, AI is the biggest turner and head turner for the IT sector. And of course, your recent entry into AI infrastructure has really caused a lot of flutter in the market, excitement on your stock. Give us some more details on how this is going to really perform well for the shareholder value creation.
First of all, thanks, Nisha, for inviting me to this session, and really privileged to be here. As you mentioned about, yes, we indeed see a lot of uptake happening with reference to the AI, not just from an infrastructure perspective, but an overall AI consumption in the market. And as the numbers basically show that we have been growing almost 460% year on year, and which is almost somewhere closer to 44% of our overall revenue. Now, one of the other thing from a market perspective, I mean, these are the number which signifies, right, a kind of potential in the market and how much we are able to make uptick as a part of that. On the other hand, it is not just about a typical infrastructure choices that is driving this, but I think our customers are now talking about a full stack solution. So it's all about how do I actually leverage the infrastructure investments that they are making, and how NetWeb is able to cover not just with the AI systems, but also the private cloud solution that we have. We have other data center servers as well as a rich software systems that we have built so that the customer can extract the value of their investments in a very, very much effective manner.
Right. In terms of the pricing and the consumer demand, and therefore, when will this really hit your balance sheet in terms of which quarter will we start seeing some performance benefits of these launches? Swastik.
So as you know, Nisha, that today we are in a market wherein some of the components, right, are skyrocketing, especially the DRAMs as well as high-end SSDs, which we call it as an NVMe SSDs, which is shooting up the price of the individual servers considerably. And in keeping in pace with that, obviously there is also a delivery timeline which is also somewhere or the other impacted. But one of the bigger benefit with NetWeb happens to be our close collaboration with some of the chip manufacturers like Intel, AMD, and NVIDIA specifically here. We are also the OEM. So we are able to cater to the customer needs in a more timely fashion, though there are kind of lead times which are enhanced by the supply challenges that we see on a day-to-day basis. But still, we are able to deliver it, somewhere in a kind of a timeline, which customers are nowadays, showing that their project deadlines or project.
Sure. So Swastik, my final question and a quick answer to that. Having an overview of how AI momentum is really going ahead and the valuations of Anthropic and IPO momentum and everything put together in a very short, concise form, what role can NetWeb play and how is India stacked for the AI journey? Very quickly.
Right. So you have seen that Anthropic investments are going on, and one of the major thing is that people are not just talking about the models anymore. It is all about how a model can actually deliver value, and for that there is an entire ecosystem which is being built. And with reference to Indian context, India needs India's own model with the Indian data set putting together. So we are seeing a lot of investments that are coming up, especially not to just look for specific AI systems rather than AI solution stack, and a continuous investment and continuous market growth that we see, which will cater, and NetWeb with its all data center servers, AI systems, software, as well as the private cloud will be able to fast forward those consumptions to make it as a sovereign AI cloud that customer would like to bring to their organizations.
Swastik, a very, very strong and positive push on the AI thrust. Thank you so much. I wish we had more time, but maybe some other time. Thank you so much for joining in. And yeah, it's time to say goodbye on this show. Keep it with NDTV Profit. Thank you.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia. And today we have Puneet Javeri, who's standing at the NDTV Profit Market Pit with all the action. Puneet, good afternoon. I mean, the way we've started off with trade, almost 130 points gap down is what we were seeing. Though we were able to maintain the 23,400 mark. If you pull up Nifty 50 on the screens right now as well, you'll see the kind of push and pull that we've been seeing in terms of where markets are concerned. I mean, that from the lows we are trying to come up, but still 23,300 below that number is what we're trading at.
Well, most certainly it's been a day of pressure. Now, the last 2 days you've seen IT continuing to support the markets. None of that is happening today and continuously under pressure. So now below that 23,300 mark, there's not too many support levels at this point of time. So you will look at 23,200, and that is some of the key factors that you're also watching out for. Now you've seen the pressure, of course, on the Nifty 50, but let's move on, look at the factors also very quickly, because you've seen pressure on the Nifty 50, you've seen pressure on the Nifty Bank as well, and the sell-off continues in both these indices at this point of time. Nifty Bank, though, slightly, lesser impacted today, but there's no support in these levels of 53,000 for the same. For the Nifty, 23,000 as well as 23,200 continue to be key crucial levels at this point of time, and hence the second half of the trading session becomes very important. When you also look at some of the other factors, that the Bank Nifty, of course, taking support at 53,000, so that will be the other level that you watch out for on the banking index. But all those gains for IT in the last 2 days have essentially been reversed. You're seeing one of the worst days for TCS, which is down almost 9% today. It's its worst performing session since March of 2020, and all major sectors continue to be in the red at this point of time. You've also seen that there has been slight buying seen in stocks like Balaji Amines. Yesterday we covered that in India market close. Telecom as well as some buying seen in infra stocks as well, but that's not enough to change the mood of what the market is in at this point of time. And finally, traders are keeping the strategy of selling on every rise that they are seeing at this point of time, and hence you do continue to see what happens. Rupees, of course, weakened yet again for the second consecutive day, but and hence been a day of pressure. And renewed geopolitical tensions will be something to watch, especially on oil, which has spiked up again. So, Hira, those are some of the factors we are watching out for. But it's been a day which has been consistently under pressure, led by IT.
Okay, so that's with regards to what's happening in terms of markets. But let's quickly look at the watch list. Borosil Renewables. That stock is up because solar glass import. You have the CVD extended, which is positive for them. You have Concord Biotech on the back of the US FDA approval. John Cockerell on the back of an order win, along with the EPAC prefab also buzzing. IT stocks, brokerages are cautious on the AI play in the global markets, and that has caused a sell-off, a pullback in terms of Indian markets as well after that 2 day of rally that we've seen. Patanjali Foods has got a tax demand. You have Gujarat Alkalis. A new renewable hybrid power project is what they're looking at. Canara Bank again in focus on the back of the 8,500 crore fundraise. You have NHPC, where they've said that the government will be selling an additional 3% stake. It's open for retail investors today. ITC is at the lowest level since July 2022, and a similar move coming in terms of TCS as well. So interesting names that we're picking up. But Puneet, over to you to take the rapid fire with Kunal Rambia.
Well, yeah, most certainly, and what a day to look at some key stocks, right, Kunal? Welcome to the show. The first stock, on our radar is Borosil Renewables. Of course, we spoke to the management earlier today as well. But on the charts, what is the current momentum showcasing?
Good afternoon, Puneet. Thanks for having me on the show. So, as far as Borosil Renewable is concerned, in last 5 years, this counter has been more or less in sideways consolidation, with the support near 400 and the resistance near 700. In fact, just a month ago, from making the bottom at around 400, now it's consistently making higher top, higher bottom. I think with the stop of 475, one can definitely catch the ongoing rally with the target of 700 on the positional terms.
The other one, Kunal, has to be on Concord Biotech, right? Because we've seen the stock be under pressure post Q4 results. But today, that US FDA approval is, really boosting the stock in a downtake in terms of the market. How are you seeing this counter? What's the near to medium term target?
See, extreme volatile counter, it has actually fallen from 2600 to as low as 950, 970. Now consolidation breakout is seen on the chart today. But again, the closing will be very crucial to watch out for. I think 1265, 1270 is the breakout to watch out on the closing basis. Above that, one can initiate a buy with the target of 1650. Till then, I'll avoid this counter.
Got it. And the other one is also John Cockerell. We're seeing a momentum on this counter after a really long time. Is it expected to sustain, Kunal?
Absolutely, extremely strong volumes, and the strength is very, very high. But again, at these elevated levels, risk-reward ratio is unfavorable. So by any chance, if we see some kind of cool-off or consolidation, one can certainly look at it. I think this rally is likely to continue going forward.
Also on EPAC prefab, Kunal, because this counter has also been a very laggard in terms of underperformance in the last couple of quarters. A big order today of 160 crores. How are you reading the charts now?
See, in last 4 to 5 months, this counter is consistently facing resistance at 218, 220 levels. In fact, today's high was almost near that level itself, and we have seen some kind of profit booking. So breakout above 220 on the closing basis will create a inverse head and shoulder formation on the daily chart. That can be a good buying opportunity with the stop of 175. Targets can be 300.
Also, Kunal, because the whole IT pack continues to be under pressure, but if you can give us some picks that you have that are on radar. TCS has hit a 6-year low. We're seeing pressure on Coforge as well. Anything that you are looking at in that space right now?
See, Puneet, entire space is looking very attractive to me from the risk reward point of view, and the first pick from my side can be Infosys. Look at today's correction; it's just been 3.5% and still within that consolidation phase itself. I think with the stop of 1175, which is a positional stop, one can definitely capture the ongoing rally, and this correction can be a good buying opportunity. If someone wants to play very short term, I think TCS can be the counter bet or say reversal bet with the stop of 2200. One can buy this counter, and the target can be 2400 in just next 1.5 week time.
Got it, Kunal. Well, that is Kunal putting that perspective of IT especially, which we've seen under pressure today, but he sees it as a good buying opportunity at this point of time. But Hiral, back to you for what's trending on Google today.
Okay, let's pull up what's actually trending on Google currently. If we can get those counters up and about, and that will tell you what the trends are indicating. I mean, TCS, Infosys, Wipro, Coforge. I mean, nothing that changes on that front. We've already spoken about these companies, but very interesting names coming in there. BSL, Nifty, I'm not sure what index is that one, but categorically it's IT which is trending as we speak. So, I mean, Kunal, I don't know if we should be talking about any of the mid-cap IT names. Coforge is one, 5.5% downtick today. And if I have to look at the fundamental analyst views as well, the maximum upside that we were seeing was around 6% from the current market price as of yesterday. And the question we were asking is that, is there a reversal from here on, because the target prices have been achieved, at least from a fundamental perspective? What are charts indicating?
Good afternoon, Hiral. So overall trend on the Coforge has been really very strong. If you look at last 5 years performance also, the trend is absolutely strong. And this was the first counter to pick up in the entire IT space, though it's near to the high itself. But I think this trend is likely to continue. Even at these elevated levels, I'm absolutely comfortable buying this because of the strength. The positional stop on this can be 1370. And the targets can be the previous highs, which are near 1800 levels. So yeah, it can be a good trending counter to watch out for.
Now we let you go on that note. Thanks so much for joining in, giving us your perspective across a whole bunch of stocks and spaces. But also look at Tenneco Clean Air. The company came out with its results, over the weekend. We've seen decent set of numbers for the company, but let's go across and listen into Arvind Chandra, the CEO of the company, and what he had to say on the demand momentum as well as what he is seeing for the outlook for the company going forward. Let me just start off with the demand question, because the demand momentum continues to be strong despite these input cost impacts that we are seeing as well. So if you can give us some perspective, because I want to discuss the order book a little bit more in detail with you. So if you can give us that perspective.
Yeah, sure. For sure. So look, you're right. I think none of our OEMs have said anything about softening demand. In fact, they're trying to pull ahead as much as possible. So we are often, and I think just like other automotive suppliers, we're all scrambling to hit the numbers, which are very high for regardless of the Mideast crisis from February onwards, March, April, May, and even June are looking great. But on the supply side, there are two parts of it, right? There's the supply side and the cost side. So in terms of supply costs, whether it is oil, we use lube oil for our shock absorbers. We use natural gas. We use LPG for our kitchen. So all of these, let's call it commodities that have gone up because of the Mideast war, and also things like plastics and rubber, we are managing. So the supply side, we have not seen we've not seen a shortage which says that we're not getting a certain part or a certain commodity. So we're managing, and we're doing different strategies, and our purchasing team has done a fantastic job of making sure that we don't run out of any individual, let's say, either direct or indirect material. Yes, direct material like steel, stainless steel, carbon steel are all going up, but we have a nice back-to-back arrangement with the OEM, so we do get the prices adjusted depending on the price creep. So yes, the demand has been quite solid. Now, if the Mideast crisis continues for many months, I don't know what's going to happen, July, August, September, leading into the festive season. So that still remains to be seen. As far as we are concerned, we're managing on the cost side. yes, the costs have gone up. We're also managing. We're trying to manage our SG&A. We're trying to run our certain capex and machinery in off-peak times. We're trying everything to try and manage the cost and also improve our recovery. So the combination of that, and that's the reason why you saw that in Q4, regardless of the Mideast war, we were somehow able to manage our EBITDA actually, and the PAT, profit after tax, actually grew faster than the revenue growth. So I think the simple answer for you would be right now, I think we're managing, and I think that's probably true for the entire supply base. But starting July, August, September, we'll have to see exactly.
That'll be something to watch. Correct.
Yeah.
And just because we spoke to you somewhere around March, and at that time one of your products, which was of course the Da Vinci suspension, it comes in your other vertical, which is of course the advanced ride technology. So that growth continues to be higher at 20% versus around 5.5% to 6% for the clean air business. So two questions here. How has the demand sustenance, or how has your order book for that business grown, especially for the Da Vinci suspension? Is that largely the supply starting to be much better now because you were of course building capacity for that? And in terms of the growth for the advanced ride technology business, do you expect it that will sustain at least for the next couple of years, at least in terms of higher growth versus the clean air business?
Yeah, very good question. So yeah, I think in terms of a growth mix for now, because see, in the advanced ride technologies or suspension business, we are shaping the market, right? We are defining the disruption that's happening in the market, and we are extremely excited both for Da Vinci. So Da Vinci, according to us, we always say is the world's best, let's call it affordable suspension system, and then closely followed by we also have a semi-active solution which has electronics and software. So both from a mid to premium segment all the way premium and upwards, we have a solution, and that's disrupting the market. So beyond Mahindra, we're seeing a lot of interest from other Indian OEMs and also Japanese and Korean OEMs. So this thing is going to be a real mover. It is going to be disruptive to the market, and because of that, you're also seeing our market share slowly creeping up. In fact, even pre-IPO to now, our market shares have creeped up quite a bit nicely in our favor. So yes, because of disruption, we are on the cusp of that disruption happening in the Indian shock absorber market, and OEMs are very excited about offering better ride quality as a differentiator to other OEMs, and from a just quality of ride standpoint, I think this is going to keep growing faster. But having said that, don't discount the clean air business. The clean air business has also got its own interesting points. For example, the CAFE 3 norms for CO2 and the BS7 norms that are all upcoming norms somewhere between 27 and 2030. That's another addressable market of about 1,300 crores for us, right? So that's going to give us an access to that kind of a market for growth. And the clean air business, yes, right now, you said 5%, that's correct. And again, a lot of that is because we are not present at all in India's number one PV OEM. We just don't have any presence. So all of that GST benefit that happened on the small, let's call it the low end vehicle range, we didn't get the benefit of that. But that changes dramatically. Starting in late 27, 28 onwards, we do have presence with this, India's largest PV maker, and we will have more presence from an export order book standpoint. So clean air gets the benefit of increased penetration in other OEMs and also export OEMs. So clean air is going to grow. ART is going to go because of large scale disruption. And also don't forget powertrain. We just announced bearings as well. So bearings, ignition, don't forget that. That's the icing on the cake.
Well, that was the management of Tenneco Clean Air. Stock's not reacting too much. Has run up substantially from the IPO standpoint in November of 2025. But let me welcome in our fundamental guest for the show, Mr. G. Chokalingam, joining in now. Mr. Chokalingam, very good afternoon to you, sir. Just in terms of a view, if you can offer on Tenneco Clean Air, it's been a good story in terms of the IPO. But does it still have those valuations lucrated enough to enter after the run up?
It's a great company. If you look at the product profile or the track record or return ratios, there is no doubt at all. As you also rightly mentioned, only the valuation is a little concern. It's trading at around 37 PE on trailing basis. So one can buy for medium to long term. If somebody wants to hold it for minimum 1 to 2 years, then one can start considering buying it. Otherwise, on any small decline also, one can start accumulating it.
Okay, so that's with regards to where Tenneco Clean Air goes. But moving on,
we have Apollo Hospitals. That stock is in focus. Let's put up that one on the screens at the day's highest levels with gains of 2.5% coming in there. And on the sidelines of the City India Conference, my colleague had a conversation with Sunita Reddy, MD at Apollo Hospitals. Let's listen into what she had to say.
We're here with Dr. Sunita Reddy of Apollo Hospitals here at the City India Conference. Welcome, Dr. Reddy, to this, and thank you for taking the time. I'd first like to ask you about the Apollo HealthCo demerger and potential listing thereafter. What is the update on that? Do you see that happening soon, and is the IPO still on track for next year?
Yes, so the demerger will definitely happen by the end of the year, and we look at listing sometime after that.
Fantastic. Another thing I'd found very interesting about you're investing in the Hospital of the Future initiative, and you're also at the same time adding beds. As you've added 850 beds recently, you have another plan to add more beds when the Apollo HealthCo happens. How are you balance these two, and how does it look? How does that strategy look like going forward? And what does that Hospital of the Future look like?
So if you think of what we mean by Hospital of the Future, I think it is happening even in our current beds, where there's a combination of AI, there's digital, that ensures better clinical outcomes as well as better patient service. So these are the two areas that we're very focused on, and it is happening right now. It's not Hospital of the Future, it is the hospitals that we're running and we're building out, which is currently 3,500 beds, moving to adding another 2,000 later, post to 2030. But clearly the second part of Hospital of the Future is the fact that now we are going into smaller nursing homes and looking after ICUs there. We're going into people's homes to look after them at home. And I think that is the future. It's to be able to do clinical outcomes at scale, to move beyond the four walls of a hospital, to look after communities with networks of primary, secondary and tertiary care. That is the future, and to also move, beyond our own borders to other countries, which we're starting to do as well.
Okay, so that's the word coming in from Apollo Hospitals. What's interesting over here is where they're estimating the impact of the West Asia crisis to be nearly 100 odd crores in terms of the company, and that's a big statement to make. In spite of that, you're still seeing the stock, which is up 2.5%. But Middle East situation to have 100 crore cost impact. That's the big takeaway from the conversation that Nimit has had with Apollo Hospitals. Mr. Chokalingam, what do you make of this? I mean, as a hospital, yes, they are in flavor with the kind of capex that all of the companies have been making, because now is when revenue recognition will start. But when you're talking about Apollo Hospitals, which is talking about 100 crore cost impact in terms of the Middle East crisis, what does it tell you?
Yeah, definitely it is negative, but there are two things. One, this is going to be a temporary phenomenon. I don't think the world can afford to see a war, prolonged war in the backbone of oil region. And second, the size is too big. So being a leader, it can absorb. And so in fact, we do have coverage of the stock. We have a target of around 9,000 rupees for the stock.
That's with regards to Apollo Hospitals as we speak. But moving on, rising fuel prices amid the Middle East crisis are accelerating the shift towards EVs and CNG cars in India. Stronger registrations and OEM traction is what consumers are moving away from petrol, diesel, while policy support for ethanol and batteries adds the momentum. Danish is here with us to tell us more. Danish, what are you picking up from your channel checks right now? Because yesterday, Puneet did have an interaction with the management of Maruti, where he indicated that post the Prime Minister Narendra Modi's speech, the kind of bookings that have come in the near term with regards to EVs, I think EVs has doubled, CNG is also very rapid. What is on ground telling you?
Well, as the West Asia crisis began on the 20th of February, we are seeing that the Indian consumers are now slowly shifting towards alternative fuel-run vehicles, and by that I mean the CNG vehicles and the EVs. As per the data available on the government portal Vahan, we can clearly see an uptrend as far as the registrations in EVs and CNG is concerned, and especially we are seeing this uptrend after there is a hike in retail prices for petrol and diesel. So if we break it down further and if we look at this from a company's point of view, for example, Maruti CNG penetration in the month of March stood at 44.35%, and this is from the overall registrations that the company did in the month of March. Similarly, in April, this stood at 42.20%, and in May, this stood at 42.33%. So we can clearly see that Maruti every month is now registering over 40% of alternative fuel-run vehicles. On the other hand, if we look at Tata Motors CNG penetration in March went up to 31.48%. In April, it came at 29.06%, and in May, it came at 28.23%. And during the same period, the EV penetration for Tata Motors stood somewhere between 15.54% to 21.30%. On the other hand, if we talk about Hyundai Motors is also seeing a rise in CNG penetration. In the month of March, the CNG penetration for the company was at 21.64%, and in April, it was at 20.35%, and in May, it was at 20.94%. And similarly, during this period, during these 3 months, the EV penetration for Hyundai was between 1.42 to 1.22%. So we can clearly see that there is a gradual shift among the consumers that is slowly taking place, and it has also been fueled by the recent retail hike of petrol and diesel and CNG prices, and no one knows till when the price hikes will take place or when it will stop. Hence, we are seeing that the Indian consumers are now gradually shifting toward those vehicles that are now running on alternative fuels.
Well, thanks so much for that, Danish. But Mr. Chokalingam, just a quick question on what we're seeing in Maruti Suzuki, right? I think the management told us yesterday a 40% growth in CNG, but also most importantly that the EVs are almost exported at almost 5,000 units per month. So that will add to the incremental export number, right, of last year, which was already at 4.4 lakh. Is it a good time to look at the counter according to you?
Certainly, I agree with you. It's a good time because the industry is still managing to grow. But between Maruti and M&M, I have a bias for M&M because the tractor business is not having any such uncertainty, steadily growing, margin is better. And within automobile also, M&M is a little diversified as compared to Maruti. So therefore, I prefer M&M to Maruti.
All right. Well, Mr. Chokalingam, we leave it at that. Thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, that's all the time we have on this edition of Training Stocks. From myself, Hiral, everybody who put the show together, thanks so much for watching. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, Digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrity.
Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets, and whether you talk about the Nifty 50, Sensex or the broader markets, it's actually a similar picture coming in. So you're looking at about a 1% cut coming in across the board when you talk about some of these indices. So broad-based sell-off largely when it comes to the last read. And when you talk about some of the sectors as well, no surprises there that IT is the one that is quite the drag right now, emerging as the top sectoral laggard followed by realty, media, FMCG, rural, financial services, consumption, auto, pharma, all of those sectors trading with quite some downtick at this moment. What's remaining a little bit resilient right now, as you can very clearly see on your screens as well, is perhaps PSU banks. That's the little bit of strength that you're seeing, if you can even call it strength. Let's quickly talk about some of those losers as well in terms of the Nifty 50 pack. When you talk about TCS, Tech Mahindra, HCL Tech, Infosys, Wipro, all of your IT names actually making it to the top of the list when you talk about Nifty 50 losers. Also, ITC, SBI Life, Jio Financial Services, Sun Pharma, as well as Shriram Finance also trading under pressure. Same can be said about L&T with that 1.5% downtick also coming in. You do have, in terms of the top gainers as well, let's take a look at Apollo Hospital. That's trading with an uptick of about 2.5%, Max Healthcare 1.5% thereabout, Trent, ONGC, Power Grid, Tata Motors, PV, as well as ICICI Bank also in good shape. Even HDFC Bank not doing all that much, not helping sentiment at all, with that 0.1% uptick also coming in. Kotak Bank also just a little bit of a positive bias that you're seeing there. So largely you do have geopolitical jitters that really seem to be shaking sentiment when it comes to the benchmarks. Trading with that little bit of cut also coming in when you talk about mid-cap as well. Let's quickly take a look at some of the gainers and losers from that entire space as well. Now, of course, when you talk about IT, you do have some of those Nifty 50 losers that make it to your list. Like I said, TCS, Emphasis, all of those counters trading with a little bit of downtick. But when you talk about the entire mid-cap universe as well, it's quite interesting to take a look at the 1% downtick also coming in there. So largely, broader markets also seem to be mirroring the kind of sentiment that you're seeing coming in. Something like a Persistent Systems, Coforge, from within the mid-cap space as well, down anywhere between 6 to 6.5% thereabout. You do have Emphasis also trading with that 3.5% downtick as well. KPIT Tech, Tata Tech, Ashok Leyland, Prestige Estate. From the mid-cap universe, you do have just about 28 advances when you talk about the mid-cap 100 and 72 declines coming in. So that largely is the kind of picture that you have at hand when you talk about some of these stocks as well. But let's also quickly talk about the entire commodities pack as well that's going to be in focus as well. When you talk about broadly the setup as far as crude is concerned, that's also shaping up to be quite interesting at this point in time, because you do have oil prices extending the rally, you do have US that intercepted some of those Iranian missiles, and you do have that commentary that is very much in the spotlight, as you can very clearly see on your screens as well. Nearing about $98 a barrel, that's Brent for you right now, with that 1.8% uptick also coming in. When you talk about some of the other interesting developments when it comes to oil markets, and we'll get you some insights in just a bit, but before we do that, let's quickly take a look at the kind of setup that we have. All of that said and done, let's also put the spotlight very much on the mutual fund pack as well. That's going to be very much in focus in terms of the kind of update that you've seen coming in there. Now, for the first time in years, you do have India's SIP boom that is showing cracks. Now, new account openings, in fact, are cooling, stoppages are rising, and the industry's biggest question is no longer right now about inflows. It's about whether retail investors can stay the course through a period of lower returns and higher volatility. In fact, Kshitij Mahajan, Managing Partner and CEO, Complete Circle Wealth, as well as Himanshu Kohli, Co-founder, Client Associates, joins us right now on the show. Thank you so much, gentlemen, for taking time out and joining us this afternoon, and a very good afternoon to you. Kshitij, I'll come to you with my first question. What can really bring back some of those new registrations? It seems to be quite the concern, because after a very long time, you're seeing the tide really turning here.
Well, good afternoon to you and Himanshu. So I think please understand the trajectory from 2021, 22, 23, when markets were doing very well. And we have seen SIP number going, really fast. From 2016, if you see 5,000 crore of total commitment of SIPs. And right now we're standing at around 31,000 crore of SIP numbers. So, markets were doing well. There were returns which were on the table. Small and mid-cap were giving fantastic returns, and many clients, they started their SIPs, in lieu of that, they will look at that type of returns. And then we have seen there's a lull period of 1.5 years. Obviously, initially FTA, Indian valuation issues, then FTA issues, and now we have this Iran escalation part which is going on. So my sense is right now I don't think there's much to worry about. And yes, the SIP closures are much faster and much higher than the SIPs total registration. But my sense is that what is the right behavior is when you keep on talking to clients to have their SIPs, goal-based SIPs, to not focus on yearly basis return, but to have a inclination towards how in a long term they can create a wealth. I think if you sell the SIP in a right manner, if you sell the SIP as aligned with the goal, then you will see SIPs coming back. But I think technology has its own pros and cons. So there are many platforms which helps you to register SIPs in 2 minutes and which helps you to stop SIPs in 2 minutes. So there is no guidance given on why these SIPs have been done, or maybe there's no alignment in terms of the goals which are popping up for those clients. That yes, if you're going to stop the SIP, there'll be a question mark on the goal which you are targeting. So I think there are many pros about technology, but at the same time there are many cons also. Many of the SIPs have been stopped because of the rebalancing also, because where we see clients keep on shifting from one asset class to other asset class.
No, absolutely. Many areas of improvement, and that's something that needs to be also figured out as well going forward when you talk about some of those growth goals also coming in. Thank you so much for highlighting that. But Himanshu, I'll also take it across to you. Wanted to try and understand if you think that the SIP momentum is losing steam, firstly, and secondly, in terms of mutual funds, they seem to outperform their benchmarks irrespective of markets. Do you see a continuation of this trend also going forward?
So first of all, Varsha, thank you so much for having me over here. What Kshitij mentioned are very relevant points. If I go back to the history, 2002, the SIP amount was $1 million, which was 4 crore rupees per month. From 4 crore, it has come to 30,000, 32,000 crore rupees per month. It is 7.5 to 8,000 times growth has happened in SIPs. Yes, temporarily we have seen there is a pause over there in the growth part of it, or maybe some of the SIPs which were there, they are not getting renewed. I think investor education is extremely important. If industry can do investor education, that in times like this, where the markets are volatile with the downward trajectory, where there is tension in the world, SIPs at this point in time, over a 5 to 10 years period, can give you better performance rather than when the markets are rising, because your unit cost is actually reducing over here. So I think entire industry, including the AMFI, mutual funds, distributors, advisors, they need to come together and ensure or give the feedback to the investor that this is something which is actually a better time. Because if you keep investing at this point in time, over a period of time, it can create 0.5 to 1% alpha in your portfolio. So if let's say a normal SIP can give 12 to 13%, at this point in time, it can give you 12.5 to 13.5% or 14% kind of a compounded returns, provided you go with a 5 to 10 years kind of a view. So that education is very important. In fact, a lot of people invest in Provident Fund with a 10 to 15 years kind of a horizon. SIP is actually a very good replacement. And that is what Kshitij mentioned, that we need to educate people to come with the right kind of a time horizon. If someone has entered into a SIP with a 1 year view, today, maybe they are disappointed. But if they enter with a 5 to 10 years view, there is a sense of excitement because I'm actually reducing my purchase price. So, the campaign which has been there, Mutual Fund Sahi Hai, has gone very well. In fact, another campaign needs to happen that SIP usse bhi sahi hai.
Right.
I think that is something which needs to happen. And when markets are falling, it's actually better at that point in time. So this is on the SIP. On the other side, yes, mutual funds are giving better returns than the benchmarks. So alpha creation is very important. And clients need to, or investors needs to look at maybe 3 or 4 buckets: large cap, multi cap, mid cap, small cap.
No, absolutely. I think it's quite important that investors, put their eggs in different baskets. That's one thing that they need to look at. Other than that, there needs to be more awareness in terms of all of this as well. Thank you so much, gentlemen. A little bit of a paucity of time. Thank you so much for taking time out and joining us on the show as well. So let's also move on and talk a little bit about Suzlon Energy that's in focus. In fact, Varsha, it's quite the interesting update that you're looking at when it comes to their growth roadmap as well.
Yes, absolutely. And they have actually unveiled Suzlon 2.0, the growth roadmap when it comes to this counter, wherein they're going to target 10 gigawatt of annual renewable energy sales by FY31. They aim to scale AUM to 70 gigawatt by FY31. And the order book also target has been given, which has been raised to 15 gigawatt in next 5 years. But To speak more about this and what are the key highlights when it comes to Suzlon 2.0 growth roadmap, we are here joined by Mr. Ajay Kapoor, who's the Group CEO at Suzlon. Mr. Kapoor, welcome at NDTV Profit. Always pleasure to have you. You know, you are actually repositioning as a full stack RE player from a pure wind OEM. Just wanted to understand what changes on ground execution and of course the margin impact that you'll have.
Yeah, thank you for having me on the show. First of all, we're very happy and excited as we unveiled the Suzlon 2.0. It's a 5-year roadmap. It is centered around wind. So we want to make sure that wind remains the core of what we do. But when we went and met our customers are looking at FDRE solutions. They are looking at not just wind, but the entire RE stack. So what we are doing is we are keeping wind at the center and then building solar plus BESS, and we are topping it with our energy management solutions. We realize that one big problem which customers are facing, especially in the wind, is the project execution. So this year, as we finished our year, we had about 28% of our portfolio coming from EPC. We have targeted to take up to 50% in the next 2 years. However, the big engine for our transition is the DevCo model. The big issue is getting the permits, getting the land, and getting the right-of-way. So what we are setting aside is a separate leadership team, which is fully empowered. They go procure land ahead of time. We sign long-term partnerships with customers for year 3, 4, and 5. As I speak to you, we have almost 8 to 10 gigawatt of advanced baked projects in the wind states. The good news is around the same place we can also put solar and BESS. So I think this is the engine, and we believe by FY31, 60% of our revenues of 10 gigawatt RE should be driven by our DevCo model.
Absolutely, and I also just wanted to quickly, this is Shreyansi as well joining in the conversation, quickly wanted to try and understand, Mr. Kapoor, that you're repositioning as a full stack RE player from a pure wind OEM as well. So what does the change in terms of ground execution then look like for you?
Okay, so fundamental to our strength is, there are 4 pillars. Pillar number 1 is the DevCo model, as I said. Now in DevCo model, it does 2 things. Number 1, we go from current 30% EPC to 50% plus. We have reorganized our teams on the ground so that execution capabilities are further sharpened. Fully empowered regional heads who have their own teams and their own budgets. In DevCo, we already set up a team, 200 plus. We're adding some more over there. Again, a fully empowered team which does ahead of time getting permits. We've also put our cash and enabling permit requirements that are needed with this team. So they are again fully empowered to be project ready. This, I believe, is going to pull in 2 things. Number 1, customers. It's a stickiness of the customer who would want to have wind ready and RE ready FDRE sites. Number 2, as we hit more on this, it's a natural mode to bring more wind turbine sales. So I think these are the 2 things which it integrates for us. On the technology platform, we continue to have end-to-end wind solutions with our deep heritage and the knowledge. We are putting up a BESS assembly plant, and we are going to integrate solar through asset-light partnerships. And on top, we are going to build our energy management services so that customers are then talking to us and we solve all their problems on the ground. And on top of it, once we have done this, we already have 18 gigawatt of asset under management under our OMS platform. We are targeting this to go up from 18 to 70 gigawatts. So we then sign up with the customers to look after the assets and ensure that they get the required power, because that's what they are paying for. And then, of course, alongside, we are building our international order book of about 3 gigawatt by FY31. And all this on a very strong digital enabled platform. So I think that's something that we are trying to envision.
Right. So this is a much aggressive plan that, you have shared with us. But, execution have always been issue. A very big issue in the industry, I would say. How does this integrated model of yours, reduces the risk of this execution?
Very good question. So first things first, we're very happy. Last year we did about 2.5 gigawatt in sales. That's almost 54% jump in our revenue. On top of an equal number we did a year before. We also saw bottom line doing equally well. Having said that, last quarter we also found our COD, the commissioning ramp up also happened well. We are seeing the same trend on ground as I speak to you. So I think that part of it is taken care of. The genesis of the issue is, we have a lot of turbines which are ready, but which are yet to be commissioned. Many times we find that we don't have projects which are 100% in our scope. So the power evacuation is in the customer scope. And until and unless they are able to get those approvals, we are not able to plug in the turbines which are ready to be commissioned. So that's one part of a problem statement. The second part is we sign a contract and the land acquisition and the permits take time. With the new strategy of Suzlon 2.0, we are going after the land and the permits ahead of time. And as I spoke, about 8 to 10 gigawatt of portfolio on which we are actively working, where we have the wind data, where we have a visibility of land, and where we have applied for permits, is something we go and then talk to the customer. Once we are able to put this whole process into almost like a factory approach of manufacturing, we believe our customers should save 12 months on execution, and those delays is also going to save on cost and increase the project ROI. So I think that's the way we are looking at on-ground execution. Right. I think that's also an ambition. We have taken 60% sales should come from the DEFCO, so that these problems are sorted out.
No, absolutely. Point taken there in terms of the execution as well. But with such aggressive growth plans, will you be needing significant capital, or is the model largely asset-light?
It's an asset-light model. Wind turbine business, we continue to run with a stronger digital enablement and our end-to-end R&D and the IPs that we have built over the years. BESS, we make few investments, but these are again not very big. Solar, we totally go in partnership. EMS is more of our IP. We put some money set aside money to buy land in advance. We have already enabled that in this year. And about 600 to 700 crores per annum we will continue to spend in putting up new manufacturing sites to put our end-to-end enablement. So it's an asset light, largely funded by our own cash flows. And as I speak to you, we are sitting on a healthy internal cash generation. I'm very happy with the way the company has performed this year, and the way we are targeting in time to come. I think we should be largely self-sufficient.
Right. And sir, you are actually guiding for, 15 gigawatts of order book, and how much of this is, already visible or yet to be blocked in number one? And number two, what is the mix between domestic and export when it comes to this 15 gigawatts of order book?
So very good question. So today as I speak to you, my order book is around 5,700 odd gigawatts, which is purely wind. It doesn't have anything in exports. Going forward, we are targeting 15 gigawatt of FDRE, which would include wind as the core, plus solar and plus BESS. On top of it, we are looking at 3 gigawatt of export order intake. So I think that's in short the breakup. If you're asking me whether I have a visibility of 15 gigawatt today, I have in the DEFCO about 8 gigawatt of better baked sites. Of those, 2 to 3 gigawatt of more mature sites. And I think it's the way, as I start moving around in this strategy that we have unveiled, we will keep developing this, and this will become the engine for us to go and acquire more customers and also build our order pipeline.
Absolutely. Thank you so much, Mr. Kapoor, for taking time out and joining us this afternoon. So there you go. That's the entire update coming in as far as Suzlon Energy is concerned. Also the growth roadmap there as well. Let's also move on and talk about the entire commodity space. Put the spotlight right back on commodities, oil as well as gold right now. When you talk about oil, it's extending a rally for the third straight day. When you talk about gold as well, you're seeing a little bit of a pullback. Let's put all of this into perspective. Kunal Shah, Head Commodities Research, Nirmal Bang joining us right now. Thank you so much, Mr. Shah, for taking time out and joining us. First things first, wanted to try and understand what you think about the current oil prices in terms of the third straight day of rally coming in. Do you think that it is likely to sustain going forward as well, since you do have peace hopes sort of faltering right now?
So I think if there is no peace deal between US and Iran, which is the case right now, there is a possibility that oil prices can shoot up exponentially. So right now, US, Europe, Japan, all of these countries are sustaining because their inventories are getting depleted. So I foresee a scenario where if this crisis continues for another 4-5 days, it can lead to a sharp rise in oil prices because the inventory level of the G7 economies are getting down very badly right now. And I hope and I pray that doesn't happen. But if there is no peace deal, then the possibility of a sharp rise in oil prices would be very high from here.
No, absolutely, and thank you so much for helping us trying to understand that a little bit also. But when you talk about gold as well, it's quite the interesting setup that you're seeing right now. It's a little bit of pullback, and you do see some of those key resistance levels as well that are very much in focus. What are your forecasts looking like when it comes to gold prices? Do you think that the fundamentals are still somewhat strong?
So I believe that in near term, if the oil prices give a shock to the world and if they rise because of no peace deal between US and Iran, then I believe that in a shorter term, gold prices can go down, test levels of 4,400 to 4,300 level. Anyway, the bottom is placed at $4,000. So I believe that those would be an opportunity to initiate long position.
And thank you so much, Mr. Shah, for taking time out and joining us this afternoon. So there you go. That's the update coming in as far as oil prices are concerned, as well as gold. But going forward, let's also zoom out a little bit, talk about riskier assets. Standard Chartered remains constructive on risk assets, staying overweight when it comes to global equities, with a preference for China, India and Taiwan when it comes to Asia. The bank also expects the Fed to stay on hold for much of the year, while gold continues to stand out as a key portfolio hedge against geopolitical and macro uncertainty as well. Let's go across and listen in to what Manpreet Gill, the CIO Africa, Middle East and Europe, had to say in terms of the investment rationale there.
I think it's time to talk about, what you've, in fact, I was just going through a report as well, and you've kind of argued that the equity rally needs to, be broadened over that semiconductor space as well. So I think my first question to you is that apart from this, what are the sectors that you think from a slightly long-term perspective of 2 to 3 years where the rally will occur and, kind of could be the next beneficiaries of the entire AI cycle that we've been talking about?
Hi, Maima. No, you're absolutely right. I think what stands out of the equity market rally thus far around the world is that it feels almost singularly, centered around the AI and within AI, the semiconductor sectors. And you see that in US equity markets, but even if you look across Asia, most of the gains in Asian equities have been led largely by Korean and Taiwan equities, which of course are semiconductor plays. So in our view, there is for that to broaden out. But I think the sector picks obviously would vary quite a bit by region. I think in the US, the tech sector itself is quite vast and goes well beyond just semiconductors and those AI plays. So, we just think as you think through even the AI cycle, we think areas like software and internet usually are the other beneficiaries when you think through long term. But when you look, within Asia as well, I mean, we're overweight Indian and Chinese equity markets. So a broadening play to us would start to, broaden the focus on valuations and growth of more boring sectors, right? Like financial and consumer discretionary in India. To us, it's about how does that rally broaden? And I think that's the top-down view we're taking.
And with regards to oil then, because, Manpreet, so far, we've, today, of course, oil reached that $97 per barrel mark. But, so far, the oil shock has been reciprocated in a decent manner per se, right? What do you think is the tipping point from here on where higher oil prices go in terms of hurting growth, inflation, equities meaningfully? How are you reading that whole situation?
Well, we just think that inventories and how they evolve from here over the next couple of months is going to be actually very, very important, because so far we just think we avoided a much worse oil price shock because inventories have been able to, pick up the slack, whether that was initially floating inventories and now, of course, drawdown of, strategic and commercial inventories. Now, there are many, many ways that, you can measure it. It's unfortunately not a single measure, and that's why you see a wide range of estimates about when you start to see more stress in the system. But most estimates we've come across suggest that, these inventories can buffer the supply shock, through the closure of Strait of Hormuz, through a large part of summer. But if we don't get, significant reopening and shipping of through the Strait of Hormuz restart in a big way by the time we get to, potentially the end of Q3 or early Q4, that's when, the risks in our minds start to rise. Because if you adjust oil prices for inflation, and for energy efficiency, we've got a partial oil price shock, but to really match historical oil price shocks, you need prices to rise well above $150 per barrel. So the good news is there's a lot of inventories out there in the world to help, delay, such an outcome. But the reality is the later in the year we go, the more you sort of run the risk that we do get that sort of oil.
All right, then that's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to NDTV Profit. Well, welcome to our show Small Cap Buzzes, where we talk about the smaller kind of companies that investors are interested into. Well, let's see what's on the show today. We are going to speak to Univastu India. That's the management that we have on our show. The stock is up 26% in the last 2 months. Q4 revenue and profit has more than doubled, and company is doing a lot of things when it comes to new platform also. We're gonna we're going to ask about whether this kind of growth is sustainable going forward. Moving on, we'll also speak about EPAC prefab. Now overall, if you see, the company is buzzing on the back of major order secure, which is at 165 crore. Company will supply cells and modules overall. And if you see the stock trend, the stock has been gaining for the last 3 straight sessions. We'll also speak to our fundamental analyst on this. Moving on, HLE glass coat will also be in focus. If you see, the volumes are trading at around 21 times of its 30-day average. The stock is up almost 20% in the last 1 month. What are the key triggers which has led to this rally? We'll also speak on this. And lastly, Savita Oil Technologies. If you see, volumes are trading at 5x. Stock is up in last 2 trading sessions, up 24% in the last 1 month. So we'll be covering all these stocks with our management, and we'll be speaking to the fundamental analyst as well. But let's see how markets are doing. Well, not well if I were to talk about, it's down almost 0.62%. Not much happening today, but IT, on the loser side, I would first talk about IT stocks are on the losing trend. You have TCS, you have Tech Mahindra, HCL Tech, Infi and Wipro, which are losing when it comes to, there you go, TCS is down almost 9%, you have Persistent which is down 6%. All IT stocks are sulking in trade. Let's see what broader markets are doing. Let's see what mid-cap 150 is doing. It's down almost 0.85%. Let's pull up small cap 250. It's down 0.45%. So not much good day for the markets, I would say. But Mahima, which are the small cap stocks which are buzzing and losing as of today?
Right, so Varsha, as you rightly mentioned, no strength seen in the markets at all. As far as the small cap 250 goes, down by about 0.4%, largely almost in line with what the benchmark is doing right now. But some specific name, in the broader end of spectrum, you have something like an MK Global, which is seeing gains of what 17%. There is something like a CMI FP, which is also up 14%. Go Fashion also seeing gains of about 14%. Akshar Chem also up by about 13%. You have Lakshmi Organics, Confidence Petroleum also doing fairly well, both up 11 and 10% each. Something like EPAC Prefab, that of course we're going to take up on the show, is also up 8%. But there are some names that are also putting that pressure in terms of where the advanced decline ratio go. Let's try to pull that up and see as to what that ratio is looking like. You have something like a Signpost India, which is down 5%. Something like Wakefit also seeing profit booking now down 4%. You have something like a Tarachan, which is also down by about 4%. You have something like a Concord Enviro Systems, which is also seeing a downtick for around 3%, and Suraj Estate also seeing a downtick for around 3%. So these are some specific names that are, of course, seeing pressure in trade today. But as promised, let's welcome in Pradeep Khandagle, who's the chairman and managing director of Univastu India, joining us now. Pradeep, I hope I'm pronouncing your surname correctly. But my first question to you right now is that your order book overall has crossed over that 1800 plus mark, right? FY26, your revenue stood at over that 240 odd crores. What is the execution timeline looking like for this order book, one thing, and how much of this are you expecting to be converting in FY27? So what's the top line outlook for FY27 as a whole?
The total duration, thank you for the inviting on NDTV Profit and in Small Cap Bazaar. The total duration for this auto cap is around 3 years, and we are looking around 600 crore for FY27, 26-27. And the quarter one, we are looking around 100 crores.
All right, got that view. Well, Mr. Pradeep, hi, this is Varsha at NDTV Profit, welcoming you. In Q4, there was some decline in margins. What change in product mix has led to this decline, number one? And what's the sustainable margin range that you are seeing for FY27? And also, considering the mix of EPC, metro and sport infra projects that you have, what is the sustainable margin for 27?
In quarter four, many orders came in quarter four, and so the major expenditure on the mobilization of the sites. That's why the margin is little less in quarter four, and we expect around 10% PAT for FY27. And all the
Go ahead. Please go ahead.
And all the projects which we bid of that's 1,800 crore, all are around 10 to 11% PAT.
Okay.
So the margin will remain.
Okay, got it. So margin will sustain at the levels at which it was at FY26. Is that reading correct?
Yes, yes.
Okay. The other aspect is that, if I'm not wrong, your 3-year CAGR has been at that 41% mark, and you've said that you will continue to grow at that 40% organic growth. Just want to get a sense in terms of, as to what is giving you this confidence of sustaining this kind of growth. And secondly, for order book itself, what is the visibility in FY27? How much more are you planning to add in terms of order book? And for you, how does that work in terms of, what's the conversion rate looking like for order wins as well?
We are looking around 1,000 crore order book in FY27, and mainly our focus is on the metro and the sports infrastructure. And we are pioneer in metro in electrical, mechanical, and heavy electrical infra. For example, receiving substations, overhead electrification. Our own BMS is there, and electrical and mechanical was for station infrastructure.
Right. And sir, just confirming, I heard you say that you're expecting 600 crores of revenue in FY27. Am I right?
Yes, right.
What would be the key drivers for this? Because there's a huge growth, that you will be seeing in FY27.
The main reason, because of the time period for 1,800 crore order book is 3 years. Number one. Number two, all the orders are placed for this year, and many purchases are already in place. And our target is to finish the projects before timeline.
And you've also mentioned that there is a possibility of a 50% CAGR growth as well, considering any inorganic expansion that you would take. So give us a perspective on any particular thing that you're already looking at in terms of buying, any opportunity of going ahead and acquiring, and at the same time, how are you planning to fund the same?
We are planning to expand into tunnel ventilation systems, which is the most growing segment currently. And the financial way, we are trying for the fundraising in the near future. And also we have a sufficient network in place. And if you see our debt to
Okay.
Our debt is always the lowest debt. We are on lowest debt.
Okay.
Debt to equity ratio is around 0.3.
Okay. And also just wanted to understand the net zero project integration. I think you had a JV with Boots. What's the update and what's the timeline when it comes to this integration?
We already completed 2 projects, one at Jhansi and second is at Kurukshetra. And the other projects are going on in Varanasi and in Uttar Pradesh.
Okay. All right. Certain things that, you've highlighted. One is opportunity because of the 2030 Commonwealth Games. The second one is data center is also emerging very fast. In terms of these new opportunities, what are you kind of penciling in for the next 2 to 3 years?
In data center, we are mainly focusing on the HVAC part, and we are targeting liquid to liquid air conditioning, mainly in data center. And we might come up in a second quarter of this year for data center.
Right. And also, I just wanted to talk to you about the order book. One is what proportion of your order book is government versus private, and any, big order also in pipeline that you are expecting?
All our orders are of the government only. The main client is the government. And the 2 orders are through L&T, but the main client is the MMRDA, and 1 order is to IRCON. Again, the main client is the MMRDA. So all our orders are of the government only. So we are working only in government segment other than the data center.
And also, sir, if you see the debtor days have sharply shot up to almost, 121 days, if I'm not wrong. When can you expect your debtor days to be a normal one, and what that normal range would be?
Data already received in April.
And so where can this 121 days number can go to? Where can it reduce to?
It will reduce to the 30 to 60 days.
Okay, 30 to 60 days is the debtor days that you are expecting. All right.
Yes.
And lastly, which segment will drive the next leg of growth for you? Will it be metro? Will it be sports, infra, data centers?
All the major is the metro. Metro will be our main growth center. After the metro, data center will be our main growth center.
All right, understood. Well, thank you so much, sir, for joining and having a conversation with us. It was a pleasure having you on the show.
Thank you so much.
Well, this was, Univastu, huge growth expected when it comes to FY27. But let's also invite our fundamental guest for the day, Girish Sodhani, who is co-founder at Ensure Capital. Girish, you heard the management expecting, almost 2.5 times of revenue in FY27. What are your views on this company?
So again, as we talk about the management commentary, obviously they are a little bit too bullish about their new future perspectives plans also. As the order pipelines, we are also just expecting that the unexpected order pipelines that would be consumed in the financial year 27-28 would be somewhere around 1,000 crores. Obviously, the propositions what we are talking about in the overall infrastructure, especially in the metro as well as the green infrastructure like power data centers and everything, are just going to be expandable by the governments in the next 20 or 22% year-on-year basis. So just little bit bullish on this particular counter, but not in the aggressions way. If any investor hold this particular counter, then can hold, but fresh interventions is not advisable.
Okay, all right. So that's the view coming in on Univastu. But time to take a look at the F&O space, and we have Puneet joining by to give us a perspective on how Qs are looking at this hour. Puneet?
Well, thank you for that. It's been a day that's been under pressure, and when you look at the Sensex also, that will show you that perspective. IT continues to be down and out today. For TCS specifically, it's a new low that the company has made. Recovered from the 9% downtick, had briefly hit that March 2020 low when it crashed almost 9% as well. Other than that, also all the IT names as well as ITC continues to be under pressure at this point of time. But when you look at the stock-specific action, that is where a lot of action is visible. Varnova continues to be one where longs are being built on the system. So is on Apollo Hospital today as well. And we just spoke to the management. When you look at short covering, NHPC as well as DMart continue to be on investors' radar for covering of shorts. So both stocks doing well. On NHPC, you also have that OFS impact coming in as well, the green shoe option now being validated essentially and now started as well. So that will be in focus. Longs being unwinded on both tech names, and there's no surprises there. 2 days of up move and then crashed out are all of these tech names, and shorts being built up on yet again the IT names. So TCS as well as LTM continue to be under pressure. So it's all IT largely under pressure, but we're also seeing the market breadth continuing to be weak on this Wednesday afternoon.
All right. Thank you so much, Puneet, for getting us those details with regards to where the F&O setup goes. But viewers, time to slip into a very, very short break, but don't go anywhere. We'll be talking about more small cap buzzers on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts
Welcome back. You're watching Small Cap Buzzers. Well, next stock which is in focus is EPAC Prefab. Let's see what that stock is doing. That stock is up almost, if I'm not wrong, 12 to there you go. It has come up a bit. It's up almost 8% in trade. Now, this is on the back of a big order win that the company has received. But, to speak more about this and to give us more details, we are joined by Jasmeet on it. Jasmeet, what's the order and how this is going to, have an impact on EPAC Prefab?
Well, Varsha, thank you for that. As rightly mentioned, the stock is buzzing on the back of that order win. But if you look at the key history of the company has had good quarters as well. And we see the overall momentum continuing for this particular counter. If we look at what the company does, well, company operates as a prefabricated manufacturer, and it has two main businesses. One is the EPS, where they manufacture the block and modules, while the other one is a steel building EPAC, where they have the entire unit designed in one particular factory and they set up in the other unit wherever required. Now, in terms of the order win, the company wins an order worth of 165 odd crores. And this particular order is for a supply of cells and modules which will be assembled at the unit while manufactured in their property. While this particular order also has a scope where the EPAC has to design, fabricate and manufacture and supply the entire unit of it. And further, this order is expected to be completed in next 4 months. Now, if you look at the Q4 quarter of the company, what we see is the company overall had a good jump in terms of the revenue and profit. The overall growth in the business was led by the prefab business, which grew nearly 45% this particular particular quarter. Further, the company's pending order book is also at large over 1,000 odd crores, which is a good scope of growth going ahead. Further, if you look at the key numbers, the revenue is up nearly 42 odd %, while the overall EBITDA saw an uptick of 30 odd % and nearly at 46 odd crore. In terms of key margin, those saw a slight pressure coming off from 10.7 to 9.8 odd % in the Q4 versus the Q4 FY25. Now, lastly, in terms of the PAT, it remains up at 51% of uptick, nearly at 30 odd crores. While in terms of outlook, the company remains key concerned about FY27, where they want to rebuild new factories and increase the overall expansion capacity. Although we do note that the company has strong outlook, and this order win adds further the up move of the stock movements we see today in trade.
Right. Thank you so much, Jasmeet, for all the details. Well, Girish, the stock is up in the last 3 trading sessions. We have seen that up move. What should investors do now, considering the huge rally that we've seen in the last 3 days?
So again, for the prefab, basically, particularly this type of sectors, we are talking about the green fields and the prefabs. So I think these type of sectors requires a little bit a longer period of time. If investor have the view of around 1.5 year or 2 year down the line, I think this is a very good percentage of stocks. If we talk about for the growth projections, obviously the company has a very much aggressive growth market shares targeting right now. In the financial year 27 and 28, currently they are working in approximately 2.5% of the market share. The company is just expecting by the 10% of the market share in the next 2 to 3 years down the line. So against overall the capex plans is also there, the Gujarat plans as well as the new projections out there. Apart from that, the order books are very, very aggressively. So if we talk about for the prefabs, obviously they're looking for the longer period of time if the investor want to enter. But for if investor already hold this particular counter, just wait for this counter with the stop loss around 175. That will be the very strong support what we are looking out.
All right, okay, so that's the view on EPAC prefab. In fact, since listing, it's corrected almost 50%, and now since the end of March, it is seeing a good traction. And uptick is what we've been seeing. So it's formed a support there, and we'll have to see as to how things pan out. And as Girish mentioned, it's also important to see look at this from a long-term perspective. But let's talk about the other one, which is actually Glasscoat. Now, here also in a month, this stock has been up almost 20%. Volumes are also trading at around 21 times its 30-day average. And to discuss as to what's working for the company, we're joined by Shivam now. Shivam?
Well, yes, the stock has been trading with a good momentum, and there is no clear trigger for this strong momentum. But the company has recently released their Q4 results, and the results were on a good side. And the filtration and drying segment, which were the segment the company operates in, has seen a growth of around 50% in FY26, and that has led to a revenue growth of around 17% on YOY basis. Now, the other segment, Thallitic segment, has also seen gaining traction and contributes around 20% of India's GLE mix. If we talk about the glass-lined volumes, that has also seen an increase of around 30 to 40%, which were seeing a margin pressure over the past few quarters. Now, despite this, the price pressure in the glass-lined segments still persist. Now, the company's order book remains at 682 crores, which is very healthy, like stepping in FY27. Now, a few updates on Omera's acquisition. The company has recorded a EBITDA loss of around 15.3 crores and PAT loss of around 15.6 crores, which has impacted their margins in this quarter, and the performance impact was mainly due to the transition challenges. Now, the company aims for 2,000 crore revenue in the next 2 years and targets a margin of 16% over the time period moving forward.
Right. Thank you so much, Shivam, for all the details. Well, moving on, Savita Oil Technologies is in focus. Let's see what that stock is doing. The stock is up almost 13% in trade. Volumes are trading at 5 times of its 30-day average, and the stock is up 24% in the last 1 month. But what are the key triggers seen in this rally? We are here joined by Parth to give us more details on that.
Right, so really good momentum that we are seeing in Savita Oil Technologies right now, and in FY26 they have achieved the record quarterly volumes, record annual volumes, and record revenue as well. So really good momentum in the numbers as well. The volumes in FY26 they have crossed 5 lakh kiloliters for the first time in the company history, with the transformer oil, white oil, and export business growing in double digits. Their lubricant significant range has also grown 5 times the industry average in FY26, and currently their focus remains on EV cooling and immersion cooling fluid opportunities. If you have a look at the Q4 numbers as well, then revenue saw a growth of 22.5% to reach 1240 crores. EBITDA was up 47.8% at 80.4 crores, with EBITDA margins also jumping 110 basis points to reach 6.5%. The PAT also saw a growth of 62% year on year to reach 47.3 crores as well. In the management commentary, they have aimed for double-digit growth across domestic and export markets, with the focus on premiumization and advanced specialty fluid products.
Okay, Par, thank you so much for getting us those details. In fact, if you take a look at the charts as well, it's just broken the previous resistance in terms of where the performance goes. But from here, the trajectory will be important to watch out for. Stock closing will be closing over 10% higher is what we're expecting, of course, today. But with that, completely out of time on this edition of Small Cap Buzzers. Do stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all those stock-related queries. So if you haven't already, do start sending them on the numbers that are flashing on the top of your screen. and we will also take in your calls as well with our guest and get you an answer to your question as well. And the landline number for that is flashing on the top of your screen as well. But before we do that, it's been a day where a forgetful one for the markets at this point of time. You've seen the benchmark indices continuing to be under pressure. While they have staged some form of recovery in the last hour or so, we're back above the 23,300 mark, closing in on the 23,400 mark yet again. So it's a crucial last hour and a half of the trading session. Look at the individual names in the Nifty 50 as well. IT continues to, of course, be in the downtrend as well, but let's look at that index and look at the heat map for the Nifty 50 also, because you've seen the index still continuing to be down, now down 5.5%. But in terms of the Nifty 50 heat map for these individual stocks, they continue to be under pressure, led by TCS down 8.5%. You're also seeing downtick on Tech Mahindra as well as HCL Tech down 5% on both those names. But the green on the screen in terms of the gainers has slightly more increased. You are almost down to 40 stocks which are down in the red at one point of time in an hour ago or so. Seeing some kind of recovery yet again, and it'll be important of where we end. Heat map also shows you that perspective. Nifty IT continues to be down and out today as well, and that's the top sector loser is the Nifty IT amongst others. Let's pull up the sectoral heat map now very quickly as well, and within that you're seeing Nifty Realty amongst others. You're also seeing Nifty Media, Nifty FMCG also down in trade today as well. And finally, in terms of the advanced decline ratio, now that has been 2:1 favoring the decline since the morning, but now as well that is continuing to be so. So starting to see that deceleration of the top red band, but continuing to monitor those. And finally the BSE 500 as well, and you've seen these individual movers in the tech space continue to be down. So all of those names we just spoke about, Persistent as well, and Birla Soft is down. So at this point of time, all the top sectoral losers in the BSE 500, all the top names are from the IT pack and continues to be so. But let me welcome in our guest for today, Tapan Doshi, research analyst at CATapan.in, and Sachin Dhanardhan. He is the AVP Derivatives Retail Research analyst as well. Now, both of you gentlemen, thanks so much for joining in. Let me go across and start taking the first stock related query, and that's actually coming in on ITC. Now, Tapan, no surprises there. Stocks at a 52-week low, and Radhakrishnan from Kochi is asking if it's a good time to add the stock now. What would you recommend?
See, the problem with the ITC, first of all, good afternoon, Puneet. If you see the cigarette taxation is a big risk persisting, over the years, until we don't know next what is going to happen. Again, hotel was the biggest, revenue generator and a profitability point of that is demerged already. Agriculture segment is actually quite volatile, and FMCG is not able to perform in a manner which everyone thinks about. Paperboard demand is still subdued. So, many things is going against the ITC. Of course, margins will improve, but we have a cigarette ratio, that taxation ratio. My take is better to avoid this. There are many other FMCG stocks which one can think about.
Well, let's also toss to Sergio Gore. He's speaking at the Citi India conference. Listen in.
Because American and Indian business leaders in this room know how to drive results. My vision is to make the US-India relationship the defining strategic partnership of the 21st century and deliver tangible results for the people of both of our nations. We can ensure the impact of our partnership is felt, not just in boardrooms, but in the daily lives of our citizens. I'm talking about American companies expanding into Indian markets and creating jobs, joint breakthroughs in medicine that improve health outcomes, US energy exports, and technologies supporting India's energy security and resilience. Deeper collaboration in critical technologies like AI, semiconductors, and biotechnology. As business leaders in key sectors, each of you has an important role to play in this work. With global supply chains being reconfigured, economies are seeking trusted and resilient partnerships. We have seen over the last decade that overdependence on a single segment of the supply chain creates vulnerability. Simply put, President Trump trusts India. Just last week, we celebrated our Freedom 250 celebration in New Delhi, and President Trump actually called into our event. He wanted to make sure that the message was clear. He deeply values the relationship with India. He deeply values his friendship with the Prime Minister, and he wants to move things on a further path. The US-India partnership has the potential to be the globally transformative, and now is the time for us to fulfill our ambitious shared goals. Working together, America and India can combat dependence, allowing a broader range of suppliers to reach markets. Together, we can integrate value chains, accelerate technological advancement, and strengthen energy security. The United States and India are uniquely positioned to drive the next phase of global economic growth. And when we work together on such shared objectives, we create more than the sum of our parts. We stand at a truly remarkable moment. In just over 2 decades, our bilateral trade has shattered records, skyrocketing from 20 billion to 220 billion in goods and services. That 11-fold increase isn't just about volume, it reflects deep, unbreakable trust. Today, the unparalleled growth in our two-way trade is being driven by innovation and high-value sectors. We see linkages not just between massive global corporations, but between agile startups and entrepreneurs in digital trade, advanced manufacturing, and emerging tech. As I've traveled across India, I've met some incredible startups, including some of the IIT campuses. Every one of those startups has had a connection to the United States. It's an incredible thing to witness these startups literally on the ground level. Some of these will be life-changing over the next few years. And to see this partnership between our two countries is something that it is truly remarkable. We've seen unprecedented progress, and we have incredible potential ahead. We can seize opportunities to scale the US-India partnership into a more seamless, resilient, and transformative economic relationship. India's growing economy and significant infrastructure needs align well with American expertise in energy, aviation, R&D, advanced manufacturing, and digital infrastructure. Such investments will benefit both of our nations. We need to identify those win-win situations. Our investment and trade expansion offer transformative potential. President Trump's goal is to facilitate bilateral trade in a way that creates lucrative opportunities for American businesses and workers. Our current interim trade agreement is on the table for us to finalize, and it will unlock prosperity for both of our nations. When I first arrived in India 5 months ago, one of my first priorities was to get this trade agreement as close to finality as possible. And within a month, we announced an interim trade deal. Just this morning, before I flew out here to Mumbai, I met with the trade team that is visiting us right now in New Delhi. Last week, they were in Washington, D.C. This week, we sent our team to New Delhi. That same team will continue meeting this week. Tomorrow, they're going to be meeting with Minister Goyal. We're on the last 1%. 99% of this deal is in place. That last percent, we will figure out sooner than later. To put it in perspective, because a lot of individuals will ask me, why is this taking so long? It's been a year, it's been a year and a half. The European Union deal with India took 19 years. And so keep that in mind. These are massive, complex deals that involve not hundreds, but tens of thousands of points sometimes. Everything from mangoes to IT to technology to fuel. And so we are getting there. There's so much good that will be identified and will come out of this deal that will benefit both of our nations. As we continue deepening our economic engagement, we need predictable taxation and regulatory frameworks that enable businesses to thrive. We need candid and constructive engagement on export controls and technology flows grounded in trust.
Well, of course, that was Sergio Gore. He's the US ambassador to India and has been very instrumental in, as mentioned on the trade deal as well, last 1% remaining at this point of time as well. But all those updates we'll try and getting you, as we go through the day as well. But let's go back to your stock-related queries as well. And the next question that's coming in now, this one's from Rimple from Chandigarh. He's holding on to NTPC. Bought at roughly around 431 rupees per share, holding 55 shares and can hold roughly for the next 6 months. Sachin, coming to you, what's your view on NTPC since it's bought at 431? Should he average down right now?
So currently the stock is actually trading near the 200-day EMS, which is support levels. The support levels currently is at 363 levels The maximum the downside we can see is 353. If he can hold that levels, he should continue to hold. But because the momentum is right now weak, I will not tell to add on basically.
Got it. Let's also, get you another key update now, because the cabinet may consider relief measures for the aviation sector on ATF fuel. Now, my colleague Rishabh is now joining in to give us all those details and a lot more. Rishabh, over to you.
Absolutely. What we're picking up when it comes to the cabinet meet that is already done, the presser is at 3, but what we're picking up ahead of that is that the cabinet may consider relief measures for the aviation sector when it comes to the ATF fuel. There might be a 10,000 crore rupee fund that will support ATF related costs for airlines. This is of course a major boost for airlines given the sort of pain that they've also endured as oil prices have really shot up due to the West Asia related disruptions, West Asia crisis related disruptions. So that's what we're picking up. We already also spoke about the earlier cabinet agenda, which is on the transition in terms of BS4 buses and trucks in Delhi to a BS6 norm. So we might expect these two items on today's cabinet agenda as well.
Got that. Thanks so much for that, Rishabh. So, awaiting some key more details, and as Rishabh highlighted, this could be a big one, 10,000 crore relief with the volatility that we've seen in the ATF fuel prices, amongst others, because of geopolitical factors. But let's go across and take the next query. This is Vijay from Chennai, and he's now joining in for a stock query on Indian Bank. He wants to know a short-term target for this one. Sachin, what could be some of those targets on Indian Bank? Hi Sachin, can you hear me?
Yes. So currently the Indian Bank has taken support around the 200-day EMS, and we are getting a bounce over here. Overall trend is bullish. The missing was momentum only. It has got started the momentum as well. We can see above 900 and 950 levels on the upside.
Got that view. But the next question also coming in now. And this one's on CG Power. It's a stock that's done well for investors, and Pramod from Bangalore is one of them. He's bought shares at 706, so he's clearly in profits right now, and asking if his 200 shares are good to hold for the near to medium term, Tapan, and what could be some of the key growth projections. So his question being if he should continue to hold this for the long term. What's your view?
Yeah, see, for CG Power, the semiconductor venture is progressing, and if you see T&D demand is robust, again, the capacity expansion is underway. So my thing is that, of course, the capex cycle is going to go up, but overall, no, they are going to maintain the interest costs and all that. Export is also expected to go, and again, the power thing going on well. The strong order book visibility is there. So yes, he can hold it for medium to long term.
Got it. Let's go across and take another, the first caller actually for today, and that's coming from Bhopal. Simnath is asking us this question. Simnath, very good afternoon to you. What's your query?
Good afternoon. My name is Simant. My query is on Zaggle Prepaid. Now, I hold about 100 shares of Zaggle Prepaid at 274. With the results coming in with a lot of positivity, still the stock is not getting to the levels that it should be. What is the reason for it, and what should I do? I'm a long term. I can hold on it for a year or so. So that's the opinion I need.
Simant, and apologies for taking your name incorrectly as well. But on Zaggle, we'll just cut back to Sergio Gore as he's still speaking and getting us some key highlights, and we'll get to this query in just a bit. But let's hear him.
It creates a job back home in the United States. So these are things that go hand in hand, and those are the win-win situations that we like to identify at our embassies. We're delivering on President Trump's initiative with India. Joint teams of US and Indian entrepreneurs are building thriving startups in emerging tech fields through our sustained support of Indo-US Science and Technology Forum and US-India Science and Technology Endowment Fund, where literally we're investing in these startups. In February, India hosted the Global AI Impact Summit. The United States showed strong support with a delegation of over 40 individuals. We announced the US AI Expert Program, the National Champions Initiative, and the AI Agents Standards Initiative. While it was called the Global AI Summit, the reality is 80% of those companies on this stage are American. And it was not held in India by accident, because when India and the United States work hand in hand on these situations, on these opportunities, that is where we're able to advance the goal forward for both of our nations. We're pushing our civ-nuke sector partnership to new levels. As many of you know, civil nuclear development is a very big growth area over the next few years. My mission here in India recently hosted member companies of the Nuclear Energy Institute to share how a vibrant, private sector-led civil nuclear industry can contribute to safe and secure civil nuclear power meetings. India's projected power demand that fuels its economic growth. We're looking forward to decades of future cooperation between our civil nuclear sectors. Such long-term investments will require support from the financial service sector, and that's you in this room. Since I arrived here 5 months ago, I've been determined to host high-level US visitors from the United States to India. And that has varied from the Secretary of the Army, to senators, to governors, to multiple cabinet officials. Our Commerce Secretary was here, and just last week, our Secretary of State was here. The reason we want to show that, it's not because they want to come to India for fun. The fun is there, the culture is there, the beauty is there, the history is there. But when we send our highest level of engagement, that sends a direct message to India and to us. And I'll give you an example. Secretary Rubio does not travel on any 4-day trips. He's at the White House full time. He's also the National Security Advisor. So he's usually about 200 meters away from the president. For him to have committed to come to India for 4 days is an incredible commitment, and it's a testament to where this relationship is and where we want it to go. The Secretary spoke at our Freedom 250 celebration, marking America's Independence Day, and stated, quote, "If I think about all of the key issues and all of the key opportunities of the modern economy, India and the United States together are perfectly positioned to work together on these issues to achieve a better life for the people of the United States, for the people of India, and frankly, for the people of other countries working together as well." We were also delighted that Minister of External Affairs Jay Shankar joined us in celebration our America 250 event. Talking about shared interests and values, Minister Jay Shankar noted, quote, "Democracy is in our DNA," end quote. Our market economies, our strategic partnership spans trade and investment, defense and security, critical and emerging technologies, semiconductors, AI, energy and space, to education and health, to culture. There is so much that we have in common between the United States and India. I couldn't agree more, and I couldn't have said it better myself. That's why I'm pleased our Freedom 250 campaign provides a launch pad to further deepen US-India ties in trade, investment, emerging technologies, and security. We have a truly historic opportunity ahead of us, an opportunity to completely redefine what diplomacy and economic cooperation can look like. What our two nations accomplish together will quite simply shape the future. This is without question the most consequential global partnership of the century. Every week, I tell my team in Delhi, in Mumbai, in Chennai, in Calcutta, in Hyderabad, what is it that we're going to accomplish this week? This embassy is results driven. And every week we identify opportunities that are win-win situations for both of our sides. Across, you name the sector, it's there. There are no two nations on earth better positioned to combine their strengths, protect their citizens, and lead the global economy forward. Let's stop witnessing history. Let's keep shaping it. Let us work hand in hand to make the US-India strategic partnership the defining relationship of the 21st century. Every individual in this room can play a part in that, and I hope you will. Thank you so much. And I think we have a few minutes. Do you want to do some questions? It's up to you. All right. Who's going to be first? It's a shy audience. Do we have a microphone that we can get into the audience? I think they're getting a microphone.
Hello?
That's okay.
Hello? This side.
Which side? All right.
Towards
the lights are blind. I see you. Got it. Okay.
One thing wherein we see at times that when you say that both countries are positioned to kind of win-win situation, but at times we are put in the same tangent with other countries when it comes to tariff, and that happens more often. And recently also, today or yesterday, we were hearing some news. So when is that we will have more clarity? Is it that the deal that we are working on right now?
That is, yes. Great question. Look, the reality of it is the tariffs that were applied around the world. So it wasn't just tariffs that were picked at India. These were tariffs that were applied to everybody, from the European Union to Canada to Mexico, to literally almost every other country in Asia, including Japan, North Korea. And the one thing I will say, the interim trade deal that was announced by the White House and by the Prime Minister here has India at a lower rate than any of your neighbors. And so that is something that this relationship is valued. That is the trade team that is right now negotiating on that. Once that trade deal is finalized, the interim trade deal is there, it's in place. It's that 1% that we're trying to get across the finish line so the leaders can have a signing and put that in stone and in law. And so we're very hopeful that that will get accomplished over the next weeks, several weeks, but it's not going to be years. We're very close to getting that done.
Well, that was, of course, Sergey Gore, and we'll keep getting you all these updates. But out of time in this edition of Ask Profit. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj.
On both sides to almost zero or something very low, but we'd be happy to get you that link if you're not able to find it also, but it is publicly available and widely distributed. Yeah.
We keep on hearing some negative statements also coming, by various members from the US. And we've also talked about great relationships that the president has with our prime minister. So why those negative statements? And also, every now and then there are like this news about some or the other tariff being imposed. If we have good relations, then why are not those relationships considered?
So is there someone specific you're talking about negative statements?
Yes.
I mean, but the reality is, right, India is 1.5 billion people. We're 350 million people. And so you're going to find any opinion you want, right, between the two countries. The reality is, I speak on behalf of the president, and I know how the president feels about this relationship. And he feels strongly about this relationship. He feels strongly about his friendship with the prime minister. And that's one of the reasons this has advanced so fast. It's one of the reasons this will get done, is because the president does hold this country and the leadership here in such high regard. Maybe one more question? Sure. You're not shy anymore.
Hello.
Go ahead. Oh, where are we looking?
This side.
Okay.
US could have handled, the Iran war much more maturely than what is the current situation,
Say that again. Sorry, I couldn't.
My question is that US could have handled Iran and Israel war much more maturely than what is we are into, right? World is, all common people are paying higher energy cost and other things. We could have handled it far better. Do you think what could have done better? We could have done better,
I think the premise of the question is what we did. It's not what we did, it's what the other side did. And the reality is you have a very reckless regime there. And as you saw, there's two things happening. As soon as this started, Iran attacked every one of their neighbors. Every one of the Gulf states was attacked. So whether that's Qatar, Saudi Arabia, even Oman, then they went into Azerbaijan, then they hit Turkey. And so that's a very reckless move. Forget about it, they also attacked Israel, but literally every one of the Arab states, every one of the Gulf states was attacked. Now imagine if it's not just a rocket, but imagine if it's a nuclear armed weapon. And the president's red line, that if somebody is reckless and somebody is so, it just has no control, they already shot normal rockets. Imagine if those ICBMs now were nuclearly armed, what the devastation on that region would be. And that has been the red line for the United States, that Iran will not have a nuclear weapon. We cannot have another terrorist state in the Middle East that will shoot down any of its neighbors now with a nuclear weapon. Secondly, to your point on energy prices, there's only one country that is blocking the Strait of Hormuz, and that is Iran. And not only are they blocking the strait and holding the world hostage, these are international waters. These are waters that Iran should not toll. And that is, by the way, the position of the Indian government too. These are international waters. Ships that have nothing to do with this conflict should be allowed through. Several Indians have been unfortunately killed. The reason they've been killed is because of Iranian missiles that have shot commercial vessels. This is not a military operation. When you're targeting civilians on these ships, whether they're from India or anywhere else, that's just wrong. And so this president does not let individuals hold the world hostage. Sooner or later, something will happen over there, but it's the irresponsibility of the Iranian regime. It's not something that this president will allow to continue. So thank you, everybody, for having me.
So interesting comments that we are picking up from Sergio Gore, and that's what is having an impact on the markets. You're just 1% left in terms of where the India-US deal goes. 99% of the deal, Mahima, has been done, and I think that is what is, keeping the markets afloat. Let's just pull up the intraday chart of Nifty 50, and that will tell you what I'm talking about. From the day's lowest levels, almost a 250 points recovery is what we've seen, because if you see, there was a point in time we actually hit that low at around 23,150, but slowly and steadily that recovery has come in, though we are still in the negative, but a good recovery from the day's lowest levels. With this, let's just pull up Bank Nifty on the screens as well and see what's happening on that front. That actually has turned into the positive. You're seeing gains of around 0.5% coming in terms of Bank Nifty as well. This is absolutely interesting. We look at the broader markets, but let's see what individual counters are telling us in terms of the heat map, and then we look at the advanced decline ratio. I mean, Mahima, look at this, Apollo Hospitals. What I'm surprised over here is, in spite of that negative commentary, the stock is still holding up to gains of 2.5%.
Yeah.
You have Tata Motors, PV, Max Healthcare, Trend. It's a pretty mixed picture in terms of individual counters.
Yeah.
But you have ICICI Bank, Kotak Mahindra Bank, which has caught up today. ONGC, which was seeing marginal gains of around 0.3% in terms of opening, is now up little over 1%. But the cuts in terms of IT, I think that is the burning factor right now.
It's the real pain. I think 2 days of gain will be washed out in the next 2 days.
Yeah, I mean, 8.5% downtick in terms of TCS. We've never seen.
Did we see this, right?
And
6 years ago, that's what you
Tech
mentioned.
Mahindra, HCL Tech,
Mahindra.
Infosys, Wipro, ITC, that is another pressure point that we are watching out for. In fact, Mahima will be getting us a deep dive in terms of what's really happening with the ITC. That stock is already at a 52-week low, eternal under pressure. L&T, Geo Financial Services, Adani Enterprises and Ports seeing some bit of profit booking after the surge that we've seen in yesterday's session as well. Let's look at the advanced decline ratio. Your VIX, in fact, has also spiked. It's a 7% spike that you're seeing, but 16.5 are slightly comfortable levels. Look at the advanced decline ratio. I mean, from where we started off, in terms of your advances as well, you've seen some bit of a recovery there, and likewise in terms of your declines, some bit of easing coming in, so your mouth absolutely is closing and becoming narrower. I mean, you can't say even Stevens, but there is that pull and push that the advanced decline ratio is showing you. What are broader markets telling you so far?
So, broader markets also, largely in line with the benchmarks, because the mid-cap 150 is down by about 0.3 odd percent. But again, there's a good recovery from the day's lower point. Same for the small cap 250 as well. Very good recovery now, almost trying to turn into green for that small cap 250. So we'll have to see as to, what are these counters that are active.
For several days of negotiations. He's here with a large team. He's meeting with the Ministry of Commerce and MEA this afternoon. We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on. To put it into perspective, we've been working on this deal for a year and a half. The European Union deal with India took almost 19 years to get done. And so we're very optimistic that this will get done. You have two like-minded partners, the United States and India, that want to get this done. And the incredible thing about this is it will be a win-win situation for both of our countries, and we're very excited to get that across the finish line very soon. Thank you, guys. Thank you.
That's fine.
Okay, so that is my colleague Nimit, who's in conversation with Sergio Gore, and that was the first bite that we've got at the Citi India Conference 2026. And I think that is what is keeping us absolutely enthused. And clearly the commentary that is coming in is that the engagement is absolutely constructive. In the next couple of weeks, probably we should be having an India-US trade deal that could be signed as well. And that's what you're looking at in terms of markets. Let's just look at BSE 500 on the screens as well and see the components in terms of BSE 500. Lakshmi Organics, strong moves there. Delta Corp is seeing a recovery. These were few of the counters which were under pressure yesterday, which have recovered today. Balaji continues the positive run. Borosil Renewables, we know the reasons why in terms of the import duty that has come in. But there you go. I mean, it's only IT names in terms of BSE 500 from the large cap, from the mid cap space, which are under pressure. The cuts are to the tune of 5 to 8.5%, and this is telling you a story.
This is absolutely, I mean, from the small cap, mid cap, and the large cap space.
Nothing is spared in terms of IT, guys. So I mean, this is very interesting that we're seeing in terms of where markets are concerned.
Yeah.
So that's what the picture is. Let's just very quickly look at, the sectoral indices in terms of the heat map and see if that is telling you anything. There you go. I mean, IT, real estate. I mean, the moment IT is down, you see that pressure building in terms of real estate, and that's evident over here. 1.2% is the kind of consumption has been weak, but obviously it is a ITC which is putting some bit of pressure in terms of where the FMCG pack goes. Consumer durables obviously there as well. PSU banks have done a catch-up today. Defense has played a catch-up. Private banks has played a catch-up, and healthcare. These are the segments which were under pressure, but that catch-up that has come in the second half of the trading session. So that's with regards to where markets are concerned so far. But moving on, let's see if we have any of our guests as well to understand what's happening in the markets. But before that, Aditya Birla Group is fast emerging as the front runner to buy Shell's renewable energy arm, that is Spring Energy. And sources tell NDTV Profit that the group has entered an exclusivity period and will now begin the due diligence over the next few weeks with a deal which is valued at around $1.7 billion. My colleague Nisha Podar is here with us with the exclusive details. Nisha, what are you picking up from your sources? I know this was a chatter that all of us were having, new Nimit in terms of what's brewing with Aditya Birla. Tell us more that you're picking up.
So, Hiral, highly placed sources who are directly involved with this particular transaction have shared with NDTV Profit that this particular transaction, Aditya Birla Group is the front runner, and not just the front runner, by way of becoming the choice partner, probably for Shell's PLC's, renewable energy arm. What it is looking at is the exclusivity period. So sources have confirmed to NDTV Profit that Aditya Birla Group has entered into an exclusivity period, which will last about 3 to 4 weeks for buying out Spring Energy from Shell PLC for about $1.7 billion. Here I would like to also mention that from Aditya Birla Group, while the structuring of funding could be different, but definitely Aditya Birla Renewables is the arm which is a subsidiary of Grasim, which is the likely candidate and also the company which is really involved in this large transaction. $1.7 billion or over and above that, that is the kind of amount we are looking at, and it's a large asset when it comes to the renewable energy space, panning across several states in India. And this also has significance for Aditya Birla Group's strategy on two counts. First of all, it already had a renewable energy outfit in the company, but now it's looking at focusing on this particular sector, which is the sector of the future. And at the current moment, while we have seen a huge transition in the energy resources that the country is looking at, so reaching up to 10 gigawatts is one of the aims of Aditya Birla Group. And second, very important is also that Aditya Birla Group has entered into several new businesses. While this business has been there, but it was in a much smaller scale. But while this particular sector momentum really builds up, the ambitions of the group is getting even more focused on the renewable energy space, and this large transaction is something that Aditya Birla Group is really looking at. But apart from the rumors of it buying out, the clear indication is that after becoming the front runner, it has entered into the exclusivity period, which will last for 3 to 4 weeks, where a proper due diligence will be done, and then the price discovery, and then probably the deal finalization could really take place.
Okay, all right. Nisha, thank you so much for, getting us those details. And of course, this is an NDTV Profit exclusive story, and we'll keep you updated as and when the story progresses. But with that, let me also welcome in Nilesh Jain, Head AVP Technical and Derivative Research at Centrum Broking, who is joining us now. Nilesh, a very good afternoon to you, and thank you so much for joining us. Your quick view on the indices, because, every day we're seeing the second half turn into a different story as to how the first half fares, right? So overall, and plus, what are the levels that you're watching out for both the Nifty as well as the Bank Nifty as of now?
Very good afternoon to you. Well, today, in fact, we have seen a very strong rebound. Nifty has filled the gap area, the gap that we saw on 8th of April. So a much awaited gap filling that we have already seen in today's trading session, and exactly from the levels of 23,151, we have seen a very strong rebound. If Nifty manages to close about 23,400 exactly at it currently present, and if this kind of closing we are getting, then it will be considered as a very good close for a pullback to continue on the upside towards 23,600 to 23,800. Now, we are not expecting any major upside, but yes, another 200 to 400 point pullback move can be seen. And on the lower side, we have already seen a very strong support at 23,150. That should be the stop loss. I think one can play this pullback move up to 23,600 to 23,800. Now, one has to remain cautious as well, because the volatility index is already up 8.5% at 17. So we need some bit of a cool off in the IBs that will provide more comfort. Now, good part is that today the Bank Nifty has also started joining the rally. A strong rebound was also seen in the Bank Nifty as it has defended 53,000 level. And also, if it closes above 54,000, that will be again considered as a positive close on the back of a short covering. Then we can expect further upside move of 500 to 800 point towards 54,500 to 54,800. So overall, Bank Nifty setup is comparatively looking better than the Nifty index.
Okay, all right. And what about your picks for the day, Nilesh? Is it all buy calls, or do you also have some sell calls?
So buy call, first of all, as mentioned, banking is giving more confidence. So Federal Bank from the banking space is something that is looking better place, and it has given a good breakout as well in today's trading session. So we can expect a follow-up on the upside towards 305 to 310. So at current level of 297, one can go long in Federal Bank, keeping a stop loss below 291. So that somewhere around today's low, that's 291 should be the stop loss. 305 to 310 could be the potential upside in Federal Bank. Now, apart from that, another counter that is looking positive is from the auto space. There's Tata Motor Passenger Vehicle, TMPV. We have seen a continuation of a high-top and high-bottom formation, and the setup looks positive for 410 level on the upside. So keeping our stop loss below 390. one can go long in Tata Motor passenger vehicle for upside target of 410 to 415.
That's with regards to the top picks coming in there. So Tata Motors PE, that stock is at the day's highest levels as we speak. But apart from this, in terms of other spaces, sectors which are actually hogging the limelight, you have IT. Let's pull up Nifty IT index and then we look at individual stocks as well. And what's happening there? IT index 5.5% downtick today after seeing the kind of surge that we've seen in yesterday's session. Mid cap, small cap and large cap IT, all of them under pressure. Nilesh, what would you advise investors to do with the charts? Because in the last two trading sessions, probably there were analysts who came out and said that yes, there could be some momentum plays coming in there, but now the momentum is turned downwards.
Absolutely, Hiral. So, in fact, there was a breakout at 30,000 level. That breakout got fizzled out, and today it has also slipped below its short-term 50-day moving average. That was placed at 29,670 levels. So overall, the setup has once again turned negative, and there could be possibility that we may see some bit of consolidation once again to continue with a slightly negative bias. So the next support I can see on the chart is somewhere around 29,000 to 28,800 zone. So yes, there is still some more room left on the lower side. So we may see some bit of selling pressure. Even if we see any pullback, that might get sold into, and IT stocks are likely to remain under pressure, at least from a short-term perspective.
Okay, all right, okay. So that's, of course, the technical view on IT. By the way, we're also joined by Dilip Bhatt, the founder of Pedigree Advisor, joining us now. Dilip, your quick view on the entire IT space, because we're seeing a lot of sell-off pressure coming in today. But, you know, earlier morning also today, we were talking about how these large cap names are much below the 5-year average valuations. But a lot of people are still bullish on the mid cap names rather than the large caps name. Where do you think right now is, you know, the real strength in when it comes to IT?
Well, I think as far as the IT space is concerned, now I have been maintaining that IT probably as an industry has slipped into that phase where we will see intermittent rises and intermittent falls, but very difficult to take a very secular long-term view. And especially in the immediate short run, we continue to remain a hostage to what kind of statements are being made by some of the AI companies abroad. So overnight they say something and we get either penalized or we get a boost out over here. So I think that phase will continue. I think the sheen definitely has gone out of IT sector without any doubt. So I think overall, as what we see, that IT the managements are pretty good in almost the entire IT companies. They generate a good amount of free cash. The amount of free cash that gets generated out of EBITDA continues to be pretty high, and the capital intensity continues to be low. But having said that, I think if one has to look on the growth phase and one has to look at the margins, I think that continues to be in the area of apprehension where we are not very sure. But the rupee depreciation, which is the single biggest tailwind. All in all, I think at best you can play IT as a momentum if you can get it right.
All right, okay, so that's the view coming in on the IT space. But the other counter, you know, that's zooming in trade today is Gina Seco Lifecare, and it has rallied sharply on the back of strong earnings growth, high margin Ayurveda products, and surging patient volumes as well. And Varsha, who tracks us very closely, is here with stock of the day as this particular stock is a pick. And Varsha, what's worked this quarter for them?
Well, you know, in the last 2 days, this company is up 31%. I mean, I don't know what investors are betting on, but it definitely has to be earnings and, you know, the kind of volume growth that the company has seen. Let's see, what does this company do? First of all, you know, this company operates a network of 36 hospitals. Also focuses on Ayurveda-based healthcare products. So hospitals and products, everything is into this company. Now, talking about the key triggers, one is of course the strong earning growth, though there was a slight disappointment in Q4. But this is expected, you know, to be recovered in going quarters. Scalable and high margin business model is also one of the key trigger. Higher patient volumes led to the strong operating leverage and the cost control despite expansion. Overall, if you see on a year-to-year basis from FY23 to 26, a lot has been changed, you know, when it comes to financials, a good margin uptick there also. Premium margins were backed by strong demand. If you see the gross margin is at 89%. and the model is structurally high margin one. Now, talking about the volumes, as I was saying, that if you see the product business is supporting the overall profits, IPT volumes grew 65%, OPT volumes, if you see, grew 69%, having a strong demand traction for the company. Now, talking about the dual engine model, that's a key differentiator. As I was saying, they are into services, they're into hospitals and products also, which creates a strong cross-sell, number one, and also have a repeat revenue opportunity. So basically, it's nothing but patients are moving from products to hospitals and vice versa, which creates a lifetime value. Talking about their asset light and high ROC model as well, the capex per bed for this company is very low, and they have a faster payback and break even at 35% occupancy, higher ROCE at 46%, making growth capital efficient and scalable. Talking about the aggressive expansion visibility, because that's all investors are concerned when it comes to hospital. The operational beds, if you see, are at a good enough total capacity nearing 2,861, and pipeline for further expansion when it comes to the bed capacity. They have a target to scale to 7,000 to 10,000 beds over the next few years. Talking about the strategic shift, they are moving away from government dependent product. Sales is towards retail, which is improving margins and cash flow. Focus is on disciplined capacity ramp up instead of aggressive expansion. Lastly, on the new growth opportunities, well, they are going into wellness premium formats. Number one, new therapy, which will offer expanding addressable market, and new product pipeline when it comes to chronic disease, female health and lifestyle segments. So new opportunities, good earnings growth expected, high margin, you have dual opportunity as well. This is all, playing for maybe Gina Seco Lifescare, and hence we are seeing that strong up move in the last 2 days.
Yes, and that's what it's telling the markets also. Probably this is the way that tum log bhi Gina seeko with what's happening right now. Hopefully, the market picks up as well. But categorically, this stock 18.5% up move is what you're seeing. In terms of hospitals, in terms of where pharma, everything goes, there is some bit of positivity. I mean, you saw what happened with the Wockhardt. A lot of positivity coming in with regards to Mankind Pharma as well, where analysts are betting big on this sector. Dilip bhai, your view when it comes to pharma, hospitals, and in fact today the Apollo Hospital Management at the City Conference indicated that the West Asia war is going to impact their cost by 100 odd crores. I mean, that was a statement to be made. How are you looking at this entire segment?
So I think hospitals and pharma are two very separate and distinct segments without any doubt. And I think for the hospital, the capital intensity of the business continues to remain pretty high. But their ROC is also good and the gross margins are also very good. But I think it's a sector that has a very solid tailwind in terms of the momentum of growth. So, but there are a host of hospitals which I got listed, and the challenge is which one really looks better than the other. But as a sector, yes, it certainly looks pretty good and interesting because of the growth, and even the ROCs are pretty good despite the growth. So that helps them to support the growth with a very little capital dilution. Now, coming to the pharma, I think pharma has the biggest tailwind because internationally also a lot of drugs have come out of patent and a lot of generics are at play at the moment internationally, and that suits the Indian pharmaceutical companies quite a bit. And that's where we find that the pharmaceutical sector continues to do pretty well in terms of the volume growth for exports. And even the vulnerability regarding the US FDA threat, which often we see in some of the big companies, I think they have diversified. I mean, not diversified, there are too many locations. So any one location or two locations getting hit doesn't bother them too much. So in that sense, that's a great positive news for some of the frontline pharma companies. And of course, the rupee depreciation providing them a good tailwind. I think here in this pharma space, Sun Pharma, Lupin, and Divi's look pretty good in the frontline stocks. And in the second line, I think the something like Orchid looks pretty good and interesting. Natco, though it has taken a beating, that looks pretty good and interesting. I would even say Venus Remedy is the way they are unfolding some of the things. I think that also looks pretty good and very interesting.
Got it. Okay, so that's the entire perspective on the pharma space. But the other stock, which is in focus today is Advait Energy. Now, it signed a BESS agreement with GUVNL with a project size of around 150 megawatt, and this contract is for as long as 12 years from here on. And to kind of understand as to what this order means for the company and what is the kind of accretion that they will get from this, we are now joined by Shalin Sheth, who's the promoter and MD of Advait Energy Transitions, joining us now. Shalin, a very good afternoon to you. Mahima this side. My first question to you is with regards to this particular order coming in, right? The agreement coming in terms of the economics of this, how is it different from what you've generally done? How are the margins different? And how much will this bring to the table in terms of where top line goes?
Thank you, Mahima, for inviting. Yes, this order is the second order for our portfolio as a project developer. Our first project we received by 50 by 100 megawatt, again by GUVNL. And I think we are the one of the few company who is going to complete the project by this July 2026. That is much ahead than the schedule. So that has encouraged us to take up the further plunge into this field. And we are looking forward to build up the portfolio of about 1 gigawatt in next 3 years. So in line of that, our vision, we have taken the second order. So we are confident to complete the order again in time. And second line, we are also creating a manufacturing facility from cell to container level and cell to C&I level for providing the BESS solutions to the industry. And this facility is expected to be ready in the month of October this year. So we want to ensure that we'll be supplying these projects, all the material from our manufacturing facility. And our company is taking a sizable market share for the huge BESS and C&I market in India by providing products and solutions.
Mr. Sheth, good morning. This is good afternoon. This is Hiral on this side. My question to you is, for a project like this, if you have to look at immediate execution, are there any supply chain bottlenecks when it comes to battery procurement, or you are well stocked in terms of meeting the requirement to execute?
As a philosophy, my company is always working that how we can find out a solution as a Make in India solutions, or we work on more on Atmanirbhar as in India as a country. And that is the growth we have received by incorporating various products manufacturing in India in last 5 years. Similarly, the products required for this project will be battery and container solutions. So we have put up a first project from cell to container solutions will be ready, as I told you, in the month of October. Yes, we have a lot of challenges as about 90% of the cells are coming from China. Previously, about 80-90% of the container solutions as a complete solution were coming from China. So we want to bring it down. And we are looking forward to doubling the capacity by next year so that we can contribute for this localization. Of course, the challenges will be there for next 2 years, and India has to be self-dependent.
Okay. Mr. Sheth, if I'm not wrong, your current order book stands at over 1,300 odd crores. Just want to know the timelines for the execution of the same and how much of this will materialize in FY27, and if you have any internal growth target for the top line for FY27.
As a company level, I think we've been growing more than 60 to 70% on CAGR and accordingly EBITDA and PAT level since last 4 years. Internally, we are looking forward for growing next year about 50 to 60% based on the orders we have received. And normally the orders timeline, if it is supply order, it is between 6 to 9 months. It is EPC orders, it is between 12 to 18 months.
Okay. The other question I have, Mr. Sheth, is in terms of the revenue visibility. If you could help me understand, what is the contract rate in terms of per megawatt per month? And what's the cumulative number that you're looking at? And what's the impact it could have in terms of your EBITDA margins over the 18-month commissioning phase?
In general, for my company, all the products are not coming in per megawatt basis because we have a single mix of the product. We are into the BESS as a product. We also working as a BESS as a developer model. We are also working power transmission and substation segments, that is product and EPC all. If you look at only for the BESS as a developer, normally industry is offering between 2 to 2.5 rupees per megawatt per month basis for your installation for 12 years.
Okay.
And you can expect the EBITDA level between 70 or 80% as per the industry standard for the same.
Okay, interesting. Okay. The other part is that you've mentioned that around 2,000 crore of opportunity pipeline for FY27 is already visible for your entire order book. What is the conversion rate looking like, and how much of a certainty do you have of will be converted in FY27 from this 2,000 odd crore?
See, we grew our order book about 107% on year-on-year basis this year, and we grew by revenue about 79% for the year. Based on the order, based on the tailwind, and based on the new manufacturing facilities which is being created in 2026 October, as we are putting an integrated manufacturing park. So we are looking forward to have the numbers more than 1,000 crores for the next year.
Okay, so just to clarify, what is this 1,000 crore going to be?
That is the revenue for the company.
Okay, overall revenue is what you're looking at as well. Okay, apart from this, if you have to look at overall margins in terms of EBITDA, on this kind of a revenue number, what will that look like in terms of FY27?
We are aiming to continue and marginally improve the EBITDA level as a group, because our manufacturing facilities will be started by this year, and that will help us to get the numbers. So we believe that we'll be able to continue and we'll be able to improve it marginally further.
Mr. Seth, for fuel cells and electrolyzers, because these are more margin accretive, both of these products, what are the opportunities looking like? What are you as a company doing, and what is the current state in terms of commercialization for all of both of these products?
Frankly, these products, especially for the fuel cell, will take about 2 to 3 years to come to the market. And normally we have been developing the product solutions and licensing agreement at least 3-4 years ahead than the market. So we believe that the fuel cell will give the numbers from 2028-29, because to provide the fuel cells, the hydrogen market should be sufficiently matured. And we believe that our electrolyzers supply chain will take up for this year. So we'll be able to start giving the numbers for the year 26-27 to start with electrolyzers. Next year, it will gradually increase, and we are aiming to use our capacity more than 200 megawatt by year 2028 for the electrolyzer also.
So that's good growth. Now, the other thing is 40% growth in terms of FY27 is what you're looking at. What gives you that confidence to sustain this kind of number? And two, in terms of the CAPEX, what's the plan to fund it?
Our next year's CAPEX is between about 280 to 330 crores. That is across our group companies. That includes the investment of the new manufacturing facility of the Advait Battery Ecosystem Private Limited, new manufacturing facility of the electrolyzers under our company called Advait Greenergy Private Limited. Then we also have the CAPEX. We are doing about 100 crores in our existing business. That will be operational again from this year, October. So these are the CAPEX number, and we find enormous opportunities for across all the sectors that we are working for, and we do not find any difficulty on achieving these kind of numbers.
Okay, all right, Mr. Seth, thank you so much for taking out the time and actually answering all those questions so candidly. Let's try to pull up the stock as well and see as to what it's doing in trade today. As we speak, it's trading at its day's high point. 5.4% of a gain is what we're seeing on Advait Energy. But Nilesh, quickly, any view on the charts for this one? Because since the listing, it's been on a constant up move, unlike what recent IPOs have done.
Well, absolutely. I have a very limited data, but whatever data is available, the counter has clearly remained in an uptrend after listing. The undertone looks strong, and we may see a new record high going forward towards 2200 to 2300 in the near term. So yes, if somebody has already bought in, then keep a trailing stop loss at 1950 and stay put for further upside towards 2200 to 2300.
All right. Okay. Okay. So that's the view coming in on Advait Energy. So Nilesh, as well as Nilesh, thank you so much, of course, and Dilip, thank you for taking out the time and speaking with us at NDTV Profit. But viewers, you know what? A big statement coming in. US Ambassador to India, Sergio Gore, says the US-India deal is now 99% complete. Let's listen in as he speaks to NDTV Profit on the sidelines of a City conference.
Look, we're 99% there. The last 1% we're working on. To put it into perspective, we've been working on this deal for a year and a half. The European Union deal with India took almost 19 years to get done. And so we're very optimistic that this will get done. You have two like-minded partners, the United States and India, that want to get this done. And the incredible thing about this is it will be a win-win situation for both of our countries, and we're very excited to get that across the finish line very soon.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Welcome back to India Market Close on NDTV Profit. Let's quickly pull up the markets with the kind of recovery that we are staging as well. In fact, the cabinet briefing is also expected to begin shortly. And the commentary that we've heard from Sergio Gore is something which is keeping us absolutely afloat because the day's recovery has been spectacular, though we're trading in the negative with cuts of 0.2%. You have recovery coming in names like BSE as well. Pull up the capital market stocks as we speak. Only a BSE, I would say, rather. A smart recovery coming in there, 1.5%. If you look at the intraday chart, there is some pressure still in terms of names like Gro or Motilal Oswal, but there also you're seeing a good recovery that is in place. However, we will be tracking the cabinet briefing as well. But moving on, the centre has debunked a recent media report claiming that the Reserve Bank of India sold gold to save forex reserve. The claim is that the RBI may have sold gold amounting to approximately $12 billion. Piyush is here with more details. Piyush, what are you picking up?
Yes, that's right. The RBI and PIB have actually negated and have declined the story that was done by one media outlet which said that the RBI has sold around $12 billion of gold to preserve the fall in Indian rupee. The RBI shared data which said that the gold reserves in its overall forex kitty has actually increased. It has increased from around 14% in September 2025 to 17% as on March 31, 2026 and further to around 17% as on May 22, 2026. Now, if we compare the gold reserve data between May 2025 to April 2026, we can see that the value of gold reserves have actually risen from 6.91 lakh crore to 11.33 lakh crore, essentially because the prices of gold have also increased over this period. And the RBI's physical gold tonnage that it holds has risen from 879.58 ton to around 880.52 ton. So this is the major update that the RBI shared, and it has declined the story by a media outlet on RBI selling around $12 billion odd of gold to preserve the fall in Indian rupee. Back to you.
Okay, thank you so much for that. In fact, we have Ajay Bagga as well who's joining in. Ajay, I know, and so, thank you for your patience and being on hold as well. My question to you is, with the entire article that did come in, yes, there was a lot of UN cry with regards to, is this what the RBI has done? We have a rebuttal coming in now. But your initial view in terms of how are you looking at this entire story with regards to selling gold to conserve the rupee? Obviously, the RBI has not done that, but your initial comments.
Yeah, RBI has not done this, and for someone who was in the markets in 1991, when India had to mortgage its gold, we flew out gold to London and mortgaged it to get foreign exchange lines. This is a very sensitive matter. As a culture, pledging gold is the last resort. It just comes before selling of property to meet some hardship. So, as a culture, we are very, against something like this. And this kind of an article yesterday turned out to be mischievous. It did blindside a lot of the market when it came out because it was from a reputed wirehouse. And they basically took the mark-to-market of the FX reserves without realizing that the rupee depreciation and the fall in the gold price is what was causing the mark-to-market, not an actual sale of gold. We have seen, for example, Turkish central bank sold most of its gold reserves earlier this year to protect its currency.
Right.
We are not in that kind of a scenario, nor does the RBI need to do it.
Absolutely. Ajay, thank you for your initial comments on that. We will have to end this conversation here because we need to cut into the cabinet briefing. Good announcements coming in there. Let's listen in. ATF price stabilization fund of 10,000 crores is what has been approved so far.
डोमेस्टिक ऑपरेशंस के लिए तो डोमेस्टिक ऑपरेशंस तो उससे स्टेबलाइज हुए, लेकिन साथ ही साथ जैसे जैसे क्राइसिस लंबा खिंचता गया तो जो ऑयल मार्केटिंग कंपनीज हैं उनके ऊपर इसका बड़ा नेगेटिव इम्पैक्ट पड़ रहा है. तो कैसे एक विन विन विन सोल्यूशन निकले जिसमें विन फॉर द एयरलाइंस, विन फॉर द ओएमसी कंपनीज एंड विन फॉर द सिटीजन्स. ये विन विन विन फार्मूला कैसे निकले उसके लिए बहुत बड़ा अटेम्प्ट किया गया. एंड लॉट ऑफ थिंकिंग, लॉट ऑफ कंसल्टेशन विद द इंडस्ट्री, consultation with the banking sectors, consultation with the OMCs finally the solution which has come out is a ATF price stabilization fund. ATF प्राइस स्टेबलाइजेशन फंड में बेसिकली एक सेल्फ सस्टेनिंग रिवॉल्विंग फंड बनाया गया है। सेल्फ सस्टेनिंग रिवॉल्विंग फंड के माध्यम से ATF प्राइस फॉर द एयरलाइन कैरियर्स हु वांट टू पार्टिसिपेट इन दिस, उनको एक स्टेबल ATF प्राइस अभी करंट क्राइसिस के दौरान मिलेगा, और जब क्राइसिस फिनिश हो जाए तब उसका एक रीइंबर्समेंट और रिटर्न का भी मैकेनिज्म इसमें क्रिएट किया गया है। इसके सारे डिटेल्स आपको मिनिस्ट्री ऑफ सिविल एविएशन की तरफ से प्रॉपर एक डिटेल्ड स्कीम की गाइडलाइंस शेयर की जाएगी। मैं आपको नेट इसका बताना चाहता हूं कि इससे हमारे एंटायर एविएशन सेक्टर में करीब 70 लाख से अधिक जो जॉब्स हैं जिनके ऊपर इम्पैक्ट पड़ना आरंभ होने लगा था बिकॉज ऑफ द स्ट्रेस इन द सेक्टर, वो इससे सिग्निफिकेंटली मिटिगेट होगा। और जो एयरपोर्ट इंफ्रास्ट्रक्चर में, एविएशन सेक्टर में पिछले दशक में जो बड़ा चेंज आया है, एयरपोर्ट्स डबल हुए, एविएशन सेक्टर अपने आप में बहुत बड़ा एक ग्रोथ का माध्यम बना, देश के इतने कोने कोने में एविएशन की एक पहचान बनी, लोग पहुंचने लगे, टूरिज्म को बेनिफिट मिला, कॉमर्स को, बिजनेस एक्टिविटीज को, हेल्थ केयर को, स्टूडेंट्स को, सबको इसका बेनिफिट मिला। वो सेक्टर इस स्कीम से सिग्निफिकेंटली स्ट्रेस से बाहर निकल के आएगा। और जो पाकिस्तान एयर स्पेस क्लोजर के कारण हमारी जितनी भी इंटरनेशनल मतलब इंडियन कैरियर्स को जो इंटरनेशनल फ्लाइट के लिए घूम के जाना पड़ता था, वो इससे मिटिगेट हो जाएगा, इससे काफी कुछ हद तक मिटिगेट हो जाएगा। इंटरनेशनल कैरियर्स तो पाकिस्तान के ऊपर से जा सकते थे, हमारे डोमेस्टिक कैरियर्स कुड नॉट गो ओवर द पाकिस्तान एयर स्पेस। वो कनेक्टिविटी का जो इश्यू है वो भी इससे सॉल्व होगा। ये पहला आज का फैसला था। दूसरा है ओल्ड ट्रक्स और बसेस दिल्ली में, एनसीआर में, इनको रिप्लेस करने का एक 5041 करोड़ रुपीस का फंड, एक स्कीम आज अप्रूव हुई है कैबिनेट में। जैसा आपने देखा होगा, हाल ही में बहुत सारे स्टेप्स लिए गए हैं दिल्ली के पोल्यूशन को कंट्रोल में लाने के लिए। जो बड़ा फोकस किया गया है क्लीनिंग पे, प्लांटेशन पे, इलेक्ट्रिक व्हीकल्स के अडॉप्शन पे, चार्जिंग इंफ्रास्ट्रक्चर बनाने के लिए, और कई सारे ऐसे स्टेप्स लिए। उसमें जो एनालिसिस से निकला वो ये था कि 40% ऑफ द पार्टिकुलेट एमिशन इज बिकॉज ऑफ द ट्रांसपोर्टेशन सेक्टर, और उसमें भी प्राइमरीली बिकॉज ऑफ द डीजल एंड पेट्रोल व्हीकल्स विच आर फ्लाइंग इन द सिटी, चाहे वो 2 व्हीलर्स हो, चाहे 4 व्हीलर्स हो, चाहे बसेस हो, चाहे ट्रक्स हो। इन सब में से भी जो मेजर कंट्रीब्यूटर्स हैं वो है ट्रक्स और बसेस। तो ट्रक्स एंड बसेस के रिप्लेसमेंट का, रिप्लेस दी ओल्डर व्हीकल्स विद मॉडर्न लेस एमिशंस वाले BS6 और CNG और इलेक्ट्रिक व्हीकल, ऐसे ट्रक्स और बसेस का रिप्लेसमेंट का स्कीम आज बना है। इट्स अ वेरी जेन्युइनली गुड स्कीम बिकॉज इससे एक नेचुरल इंसेंटिव क्रिएट होगा और लोग जो भी पुरानी ट्रक्स और पुरानी बसेस हैं उनको रिप्लेस करना चाहेंगे। अगर हम डेटा देखें तो BS1 to BS4 जो व्हीकल्स हैं, पुराने वाले व्हीकल्स हैं, वो 67% मोर CO और 97% मोर पार्टिकुलेट मैटर एमिट करते हैं कंपेयर टू द BS6 व्हीकल्स। तो उनको अगर हम रिप्लेस करते हैं तो एक सब्सटैंशियल रिडक्शन आता है पार्टिकुलेट एमिशंस में। इसको इंसेंटिवाइज करने के लिए आज कैबिनेट में अप्रूव हुआ रिप्लेसमेंट ऑफ ओल्ड ट्रक्स एंड बसेस रजिस्टर्ड इन दिल्ली NCR टू BS6 और EV और CNG व्हीकल्स। इस स्कीम के लिए 5041 करोड़ रुपीस का आउटले है और इम्प्लीमेंटेशन 3 संस्थाएं भारत सरकार की, MORTH, MOHUA यानी हाउसिंग एंड अर्बन डेवलपमेंट, और एनसीआर प्लानिंग बोर्ड। साथ ही साथ सपोर्ट लेंगे गवर्नमेंट्स ऑफ दिल्ली, हरियाणा, उत्तर प्रदेश एंड राजस्थान। इनकी मदद से करीब 2 लाख के आसपास ट्रक्स हैं जिनको रिप्लेस करने का प्रोग्राम बनाया जाएगा और करीब 16,000 बसेस हैं जिनको रिप्लेस करने का प्रोग्राम बनेगा। इससे हमारा मीडियम टर्म में और लॉन्ग टर्म में दिल्ली में पोल्यूशन सिग्निफिकेंटली कम होगा। साथ ही साथ माननीय प्रधानमंत्री जी ने ये भी
So that is NDTV Profit News Break confirmed, where the cabinet has approved ATF stabilization fund of 10,000 odd crores. And in addition to that, you're talking about, your scheme for phasing out old trucks and buses in Delhi. That has been approved as well. So these were two NDTV news breaks coming in right here, which have been confirmed so far post the cabinet briefing, on the back of which you have Indigo, which has seen a spike in trade as well. Apart from that, names like Electra Green, JBM Auto, which are beneficiaries when you talk about replacement of, trucks and autos go. Those counters are also seeing a spike in trade. In fact, let's get in Deven Choksi as well, who's joining in. I know he's been waiting almost for the last 15 minutes, but we had the cabinet briefing, Deven, so nothing that we could do. But your initial comments on the back of the cabinet briefing outcome that we've seen, 2 to 3 announcements that have come in, your views on the sectors that could benefit out of it?
Yeah, Hirel, good afternoon. Well, I believe that I think the electric bus and electric trucks, I think, which is basically the requirement now, which is being talked about, is certainly not the one-off. I think it is going to be the regular feature hereafter. Every state transport undertaking, as well as I think the state government's vehicles, are likely to go transformed in next 5 years. Then that is very obvious and clear. Given that situation of new demand which is getting generated out of it, not only the OEM companies, but also the ancillary companies, which are basically into this business, likely to get benefited out of it. In fact, I think companies which are basically into the storage, that electricity storage, the batteries, as we talk about, they are the ones who are going to be taking the major amount of business as well, because that remains a sizably large component in the cost of the vehicle. So from a perspective of looking at, I think, the growth, we see the OEM as well as ancillaries both getting significantly rewarded out of this particular move, and which is a starter. Maybe I think it is going to see newer heights going forward as well.
Okay, all right. By the way, we're also joined by Sanjay Lazar, CEO of Avila's Consultants, joining us now. Sanjay, 2 big updates coming in from the cabinet, right? There's one where they've approved ATF stabilization fund of around 10,000 odd crores, and then there's scheme of phasing out old trucks and buses in Delhi, which is of around 5,000 odd crores. How are you viewing both of these developments, and your initial thoughts on these?
Thank you for having me. So yeah, it's a very significant move. First, the ATF stabilization fund, 10,000 crores is a huge amount for the cabinet to have introduced. And as we all know, all our airlines are bleeding across India. They've been suffering and pulling out of domestic sectors. International sectors have already come down by 28 to 30%. Indigo just announced pulling out of Manchester yesterday. So there has been significant strife across the aviation sector. And this 10,000 crore stabilization fund will help toward bringing the ATF costs domestically, and then, of course, hopefully internationally. We do hope for some peace so that would sort out. On the auto front, I heard Mr. Choksi, and I think that's extremely positive step that the government has taken. And he's right, he spoke of Electra and other EV companies and stuff which would benefit with the phasing out of the old trucks and buses in Delhi. It's definitely going to help the EV auto industry, Tata Motors, so many companies. I can see that's a very positive step also for, energy integrity, energy security in the country. Our over-dependence on oil and diesel and fuel, fossil fuels, seems to be, the government seems to be heading in the direction of easing that out. They've already made a move on SAF for aviation. So I think, these are positive steps by the cabinet, but these are not the only steps. I do hope
for aviation's sake, they continue to push hard because the airlines are facing a very tough time.
But Sanjay, my question to you is, in terms of the package that has been announced as a relief measure, do you think that will be enough?
No, it won't be enough. For aviation, certainly not. It's a start, but it's a start. Rather than not having anything over the last 2 months, this is a major start. It's not the end of the road, like I said. The government needs to do a lot more. The first big thing will be, VAT on ATF. They should bring it across on GST uniformly across the country, or drop the VAT to more reasonable levels at all the states. So that's another big thing that the government needs to do. Also needs to do something in terms of lease rents for the smaller airlines for aircraft, because there is still uncertainty in the world leasing market, and people are scared to give aircraft to India after the Go Air fiasco. It's okay if you're an Indigo or a Air India, you get aircraft at dirt cheap prices, but the smaller airlines don't, and that's something that we need to look at.
So at least this is the step in the right direction.
Yes, of course.
Is the question.
Big step,
Absolutely. Thank you. Thank you, Sanjay, so much for joining in. Always a pleasure to get your views as well. So step in the right direction. Shivangi, couple of names that have seen a spike right now, from a Indigo to a JBM Auto, Electra Green. Anything that you like on the charts?
Very good afternoon. Thank you for having me. We've seen Indigo has seen a good amount of short covering, and this has caught my attention. Now, of course, the commentary will be positive on this one, and this will see a good amount of follow-up, but there is some bit of resistances intact at the higher levels. But then again, we are, aiming at a good short swing over here. One could look at this one for the next up move towards 4,700 levels, with a support of 4,450 zone.
That's with regards to where Interglobe Aviation goes. Devenbhai, let me come to you with regards to IT. It's very interesting to see what's happened in terms of IT over the last 2 trading days. And today, that pullback that has come in TCS, the biggest single day fall that we've seen since March 2020. And if I was just looking at BSE 500 components, if you just pull up that one on the screens as well, all the losers on BSE 500 are IT companies: TCS, Persistent, TechM, Coforge, L&T, Tech, eClerx, HCL Tech. No one is spared. Small cap, mid cap, large cap. What do you make of this, Devenbhai?
Wait for the day to get over and probably get the data from FIIs. I think they are the ones who are killing the entire spectrum right here, because they are in hurry to take the money out of the country. Because they probably have the better interest available in the other markets of the world in form of AI and the semiconductors, which is the Japan, Taiwan, and Korea, South Korea, is something which I think they're pumping in money pulling out of India markets. And that's where probably some of the classic victimization of Indian IT companies happening. Frankly, if you ask me, I think probably most of the Indian IT companies today, I think they are available at a valuation which is far more attractive. The downside risk in the business is minimal. They are AI enablers and not, I think, going to get killed with the AI for sure. And as a result of which, I think we believe that I think their even revenue model is changing from true time and effort outpaces to the outcome-based model, which is happening now. So in my viewpoint, nothing wrong with the companies fundamentally. The villain in the pack is the people who are pulling the money out due to the variety of other reasons.
Okay. Shivangi, the other one is Wockhardt Pharma. We've seen a significant rally post the announcement of approval for Zenith. 2 days, we did see some pressure also coming in the counter. But today, again, there is momentum being picked up. 6% of an uptick is what we're seeing. Anything on the charts for this particular counter? Do you think there's more steam left on this one?
Definitely, Wockhardt Pharma did grab a lot of attention off lately, but we've seen profit taking take over the index more than the momentum. Today, again, it has built-in strength, but it needs to hold above 2150. Only then will I be able to trust the stock with the move, ongoing. But overall, we will still do a little wait and watch over here.
So that's the view on Wockhardt, but the other counter in focus is LTM, and this has been under pressure today. and the entire IT pack is right. But our colleague Jasmeet joins us to give us a bull versus bear perspective on this particular counter. Jasmeet, over to you.
Well, thank you for that, Mahima. Now, LTM becomes a key candidate of bull versus bear on the back of several reasons. Well, the management just came out with their overall analyst day investor presentation where they plan on increasing the overall revenue by 2 times in the coming year, which becomes a key concern given the brokerages remain bearish on this particular counter. Well, so here is the entire analysis of the bull and the bear case. While the bull case, the company sees a 2x jump in the revenue from here on in next 5 years, which basically means a 15% of revenue CAGR over next each year. But if you look at the growth in the previous year for this particular counter, it stands at just 6%. So basically they have to grow double of 6% more than that in the coming years. While the second bull case, if you look at the overall growth of AI, they expect the macro level TAM to increase, the overall total addressable market to increase from $1.3 trillion to $2.3 trillion. But alongside that, they also see that the current traditional services can see a downtick of roughly $0.3 trillion, which is not at all addressed as of now. How much of this will come from the TAM's perspective? Now, in terms of the other bull case, the company targets a 200 BPS increase in terms of the EBIT margin going ahead till FY31. But in terms of the overall acquisitions that the company has planned, the increase in acquisition might impact the overall margins, and further the company has also recorded a record level order book. So when the orders ramp up, they eventually impact the margins, which is not taken into consideration. Now if we look at the other bull case in FY26, the company had a record level for the company in terms of the overall deal wins reaching at $6.6 billion. But in terms of deal conversion, that still remains a slow for the company, with something to watch out for. Now, well, the interesting aspect comes in the overall ANR, that's the analyst recommendation for this particular counter, where the buy rating stands highest at 24 with the return potential of roughly 90% from here on. It's a wait and watch of how does the stock changes and how does the overall Q1 pan out for the company. In terms of key valuations, currently they're at 38 times, which is the highest among the mid caps, and the 5-year average is at 37, in line with the current valuation. But the interesting one is to watch out the next year valuation, the 12 months forward, which is at nearly half of the current, that's at 18 odd times. So all in all, we do say the management remain bullish on this particular counter, but brokerages and the state remain cautious.
Okay, so that's with regards to where LTM goes. Thank you, Jasmeet, for that. Shivangi, with the kind of recovery that we've seen in terms of where markets go towards the close, I know, we're just 2.5 minutes away, but any picks that you have that you would want to give viewers right now?
Hospital, which has seen a lot of OI built up of lately. And this one has been on my radar for a bit of a time, and we've seen that this is one of the strongest in the diagnostic space stock. So this could be definitely kept on radar.
So that's, of course, with regards to where this one goes. A quick view on the Ether charts as well, Shivangi.
Yes, I'm just pulling up the charts. This looks like a good recovery today. We've seen that on the weekly basis, it is holding up the key exponential moving average. We could, however, see some, short swing over here. Although there is a bit of resistance is intact, but 1200 is what we can look at with a support of 1110.
Okay, so that's with regards to Ether. In fact, let me pull up a Ola with this one as well. And thank you, Shivangi, so much for joining in. It's always a pleasure because you have these EV companies which are buzzing in trade, Ether and Ola. But very quickly, what's interesting is we're still holding on 23,400 kind of levels. 5 points below that, but probably you'll see a closure that somewhere there. 0.4% lower is what you're seeing in terms of Nifty 50. Interesting is Bank Nifty, Mahima, over here. A percent higher. Let's just look at the intraday chart of Bank Nifty. If we can just have the intraday chart, and that will tell you the strong recovery that Bank Nifty has staged as well in terms of today's session. So this is one of the key positives that we should be looking at. Advanced decline ratio, let's pull up that one. I think that should be interesting with the way the mouth was narrowing. There you go. Do you have anything to say about it? 1,500 declines versus 1,058 advances. We've seen a recovery here. You've seen a decline coming in from the highest levels in terms of the declines as well. So that push and pull has continued in terms of where markets are concerned. But what are broader markets telling you in terms of closing?
So, let's try to pull up the mid cap 150 and the small cap 250. This, of course, gives you a picture that there is strength slightly in terms of where the small cap goes. But 150 is still down by about 0.4%, largely in line with the benchmarks. But small cap is, where it was 1 hour ago. Indigo as well, just of almost ending on that flat note. Let's try to pull up the BSE 500 as well and see as to where the action really is coming in from. You have certain names that are pulling that trade up. KPR Mill, Lakshmi Organics, RHI, Magnesita, Borosil Renewables, etc. All gaining in that range of 8 to 9% each, but this side still continues to be tech heavy.
IT
TCS,
is the
Persistent,
losing
LTI,
end. Let's just look at the heat map in terms of Nifty 50 as well, because that's something we've not looked at so far in terms of closing. But you've seen greens which have slightly increased than where we were, but Apollo Hospitals, Indigo, SBI, mixed bag there. IT on the losing end with ITC, Eternal, L&T, Adani Enterprises and Jio Financial Services. So pretty interesting day of trade. However, the recovery that we've seen in today's session has been absolutely smart. Individual stocks have been the ones which have seen the kind of gains that have come in, and you're closing at around levels of 23,396, just at about that 23,400 mark, and it's Bank Nifty which has been the highlight of the day with smart gains coming in there. But completely out of time with that, it's a wrap on this edition of India Market Close from Mahima, the team that put the show together, and myself. But before we let you go, listen in to the reply that NDTV Profit's Nimit Dixit got from US Ambassador to India, Sergio Gore, who's hinting that the India-US trade deal is now nearing completion with negotiations in the final leg. Only 1% is what is remaining. Let's listen in.
Just want to understand the statement that you made and has been made earlier about the 1%, that's the sticking point right now. Wanted to understand if you could give us any details about what that 1% is and why it's not coming through. I understand you said it's a massive deal and it takes time, but if you could give us some details about what that 1% is.
Look, I don't want to negotiate publicly, I'll be honest with you, but that's a great question. You must be with the media, are you? What outlet?
NDTV Profit.
Great question. So I don't want to negotiate publicly, but there is 1% sticking points. It's incredible because you get to 99% and you're right there. And so there's a few items. Look, in these negotiations, each side has to give something, right? Because that's what identified the win-win situations. And so I will say, to India's credit, you have incredible negotiators. One of the reasons this deal is tough, because for many years, India held the line on so many items that the United States was not able to get in here. That's why it took 19 years for the European Union to crack a trade deal. So we are optimistic. I'm actually here only for one day, and I'll be flying and meeting with Minister Goyal tomorrow and our respective teams. And so we're very hopeful on that one last percent. And a lot of it is frankly technicalities. Part of it is when does something kick in, and it's a lot of legal language, but we're hopeful that it'll get there. Good question.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today. So viewers, D Street has seen value buying at lower levels in the afternoon trade as benchmarks recovered part of their steep early losses. Nifty has rebounded 200 points from day's low, while Sensex has also seen near 1,000 points recovery. Broader markets, however, they've kind of posted smart recovery from day's low and also mirrored the key indices. And in terms of sectoral trades, IT stocks reversed their gains in trade today, with IT index being the biggest laggard, followed by realty counters. And on the other hand, fresh buying was seen in the financials as PSU Bank index have led the sectoral gains. Now let's look at some key counters that were buzzing away in trade today. First up, we have TCS, which has witnessed its sharpest single-day decline since March 2020 as investor concerns over AI-driven disruption rocked the IT sector. And the sell-off wiped out a recent recovery that had seen the stock gain nearly 9% from its lows. Market sentiment turned cautious after brokerages warned that rapidly expanding AI companies could increasingly compete with traditional IT services players. And the fall comes despite continued large deal momentum and even recent strategic wins, including an expanded partnership with Euroclear Sweden. And this move highlights growing investor focus on how artificial intelligence could really reshape the global technology services industry. Next counter to look at is ITC. So the shares continue to remain under pressure, falling to their lowest level since July 2022. And this has been after a sharp correction, seen this year. And the stock has lost more than 20% of its value since the start of 2026, with investors growing cautious about the impact of higher cigarette taxes. And following the government's tax hike in February, ITC was forced to implement steep price increases across its cigarette portfolio. So while higher prices have boosted realizations, they've also hurt the sales volumes and also creating a challenge for the company's most profitable business segment. In fact, let's look at John Cockerell now, which has secured a major order worth around 1,300 crores from JSW Vijayanagar Metallics, and the contract involves the commissioning of 2 annealing and even coating lines, further strengthening the company's order book. The win also reflects continued investment activity in India's metals and manufacturing sector. Next counter to look at is Borosil Renewables. So the shares have jumped sharply after the government has extended countervailing duties on solar glass imports from Malaysia for another 5 years. The duties ranging from about 9.7 to 10.1% are aimed at protecting domestic manufacturers from low-cost imports. And the move also forms part of India's broader strategy to build a self-reliant solar manufacturing ecosystem, with policy support already in place for solar modules and even cells. And for domestic players like Borosil, the decision could really improve the pricing power, also support the capacity expansion, and also accelerate the import substitution in the fast-growing solar sector. Next counter that was buzzing away in trade was Concord Biotech, which has received a major regulatory boost with the US FDA approving its abbreviated new drug application for mycophenolate and also Moftil, which is a medicine used to prevent organ rejection in transplant patients. And the approval opens access to an estimated $30 million market in the United States and is also in line with the company's strategy of expanding its global product portfolio. So the development is expected to strengthen Concord's presence in the US generics market while also enhancing its long-term growth prospects. The stock has already seen strong investor interest over the past few sessions, also following the positive regulatory update. Next counter to look at is Zydus Lifesciences, which has received a warning letter from the US Food and Drug Administration in response to a record request under the Federal Food, Drug and even Cosmetic Act. So the company clarified that the letter is not related to any on-site inspection of its facility. Instead, the references technical observations regarding the use of purified talc that did not meet the current United States pharma CPR requirements. And Zydus maintains that development will not impact its current operations or even the product supplies from its Buddy facility, and also said that it is working to address the regulators' observations. Viewers, next counter to look at is Advait Energy, which has transitioned, which has secured a significant boost to its clean energy portfolio after signing a battery energy storage system agreement with the GUVNL. And the project involves a 150 megawatt, 300 megawatt hour battery storage facility that the company will build, own, and even operate. So the contract carries a long-term tenure of 12 years, providing strong revenue visibility and even stable cash flow potential. So with government funding support also available for the project, the development further strengthens Advait's position in India's rapidly expanding energy storage market. And investors have kept the stock in focus since its listing amid growing interest in the energy transition theme. Next counter to look at is EPAC Prefab, which has won a new order worth 165 crores and also providing a fresh boost to its order book. And the contract involves the design, fabrication, manufacturing, and even supply of cells and modules along with erection work as part of the project scope. So the company is expected to complete this entire project within a period of approximately 4 months, and the order highlights continued demand for engineering and even manufacturing capabilities in the sector, and also adds to the company's execution pipeline, also improving the revenue visibility over the coming quarters. Next counter to look at is LTM, which is drawing positive analyst commentary after outlining its AI-led growth roadmap, Lakshya 2031, at its Investor Day. So brokerages have backed the company's long-term vision, also highlighting opportunities from artificial intelligence, digital transformation, and even the recently announced Randstad acquisition. So, however, the analysts are saying that successful execution will be key to delivering on the ambitious growth targets. And viewers, Gina Seco Life Care has emerged as one of the market's biggest gainers, with the stock surging over 30% in just 2 sessions. Investors are cheering the company's strong earnings growth, high margin Ayurveda product portfolio, and even a scalable business model that continues to deliver operating leverage. The company currently operates a network of 36 hospitals focused on Ayurveda-based healthcare solutions, and rising patient footfalls, improving profitability, and even an expansion pipeline have further strengthened confidence in its long-term growth story, keeping the stock firmly in the spotlight. Next counter to look at is Vodafone Idea. So the shares of Vodafone Idea have surged to a 20-month high after gaining nearly 6% in trade, extending a sharp rally that has seen the stock soar around 35% in just 2 months. Investor sentiment has improved on the expectations of fundraising, network expansion, and even continued government support, putting the telecom operator back in the market focus. Viewers, next counter is Ashok Leyland. So the shares have come under pressure, falling nearly 5% and touching about a 6-month low amid concerns over slowing demand in the commercial vehicle segment. And weak monthly sales trends, also rising competition and caution around fleet operator spending have really weighed on the investor sentiment. Next counter to look at is CMR Green Tech. So its IPO has received a strong response from investors, also getting fully subscribed on the very first day despite a cautious broader market environment, and the robust demand highlights continued investor appetite for quality public issues, with market participants now closely tracking subscription trends, GMP signals, and even the road to listing. Viewers, the Aditya Birla Group has taken a major step towards expanding its clean energy footprint by entering an exclusivity period to acquire Spring Energy, Shell's renewable energy platform in India. So sources indicate that the group has emerged as the front runner after submitting an offer of around $1.7 billion for the business. And through Aditya Birla Renewables, a subsidiary of Grasim Industries, the conglomerate will now conduct detailed due diligence over the next few weeks. And if completed, the transaction would significantly strengthen the group's position in India's fast-growing renewable energy sector. Viewers, the Trump administration is proposing fresh import duties of up to 12.5% on goods from around 60 economies, targeting what it calls failures to curb trade in products linked to forced labor. And the move follows a Section 301 investigation, which found that several trading partners have not effectively enforced bans on such imports, creating an uneven playing field for US workers. So under the proposal, countries with partial safeguards could really face tariffs near 10%, while others may be hit with a higher 12.5% duty. In fact, India's services sector growth accelerated in May, with services PMI rising to a 10-month high. This is signaling robust business activity across the economy. Strong demand, rising new orders, and healthy hiring trends have supported the expansion, even as companies continue to face elevated input costs. Now let's look at some national news, viewers. A major fire tragedy has struck Delhi, with at least 21 people losing their lives after a blaze broke out at a hotel in Malviya Nagar. So the fire started in the restaurant of the Flourish Stay Hotel and quickly spread to a neighboring property, Mikasa Inn. And more than 40 people were rescued during the operation, while several foreign nationals are reported to be among the victims. Multiple fire tenders, water bowsers, and even quick response teams were deployed to the densely populated area as authorities worked to contain the fire and also evacuate the occupants, as you can see the visuals on your screens right now. And investigations into the cause of the incident are underway. Viewers, in a major crackdown following the Pune hooch tragedy that killed 15 people, Maharashtra authorities have arrested 333 individuals linked to the illegal liquor trade. The excise department and also the police, they've conducted 440 raids across the state, seizing large quantities of spurious liquor, chemicals used in its manufacturing, and even multiple vehicles. So the operation was launched to curb the illicit liquor network and also prevent further loss of life. And political developments are gathering pace in West Bengal after a group of 58 rebel TMC MLAs claimed the formation of a real Trinamool. And amid the turmoil, Chief Minister Suvendu Adhikari is set to chair a key administrative meeting with legislators and even senior officials from Kolkata, Havra, and South 24 Parganas. Now, MLA Kunal Ghosh is also expected to attend the high-level review. Here's in a significant step towards environmental protection. The Supreme Court has constituted a 5-member high-powered committee to develop a uniform definition of the ecologically sensitive Aravalli range. The panel, to be chaired by Kanchan Devi of the Indian Council of Forestry Research and Education, has been asked to submit a comprehensive report by August 31st. The court has said that future decisions of mining, land use, and even conservation in the region must be based on sound scientific assessment and even aligned with the principles of environmental protection and sustainable development. The recommendations could really shape the long-term future of one of India's most important ecological landscapes. Because India could really face fresh trade headwinds from the United States, with the Trump administration proposing additional tariffs on imports from India and even 59 other economies over concerns linked to forced labor in global supply chains. The proposed duties range from 10 to 12.5% and are also currently under a public consultation process. The move comes even as India and the US continue negotiations on a broader bilateral trade agreement. And tensions in the Gulf have escalated further after the United States has said that successfully defeated a series of Iranian missile and drone attacks targeting regional countries. U.S. Central Command said that missiles fired towards Kuwait and Bahrain failed to reach their targets or were intercepted by air defense system. Now, the U.S. has also denied Iranian claims that American military facilities in the region had been hit. And in response, Washington conducted self-defense strikes on Iran's Kesh Island and even a strategic location in the Strait of Hormuz. So the developments have kept global energy markets on edge as concerns over shipping disruptions and even regional stability continue to mount. Meanwhile, viewers, Kuwait suspends flights an Iranian missile strike damaged Kuwait's airport, and also U.S. forces carrying out fresh attacks near the Strait of Hormuz. So the latest exchange highlights the fragile state of the current ceasefire as diplomatic efforts between Washington and Tehran continue to stall. With the Strait of Hormuz still largely closed, oil prices moved higher as markets grew increasingly concerned about the supply disruptions and even further regional escalation. Because the United States has imposed sanctions on Nobitex, which is Iran's largest cryptocurrency exchange, accusing it of helping Tehran and even sanctioned state entities bypass the Western restrictions. The action follows a Reuters investigation that identified that platform a key part of a parallel financial network used to process hundreds of millions of dollars for Iranian institutions, including the central bank and even the Revolutionary Guard. So Washington's move marks a fresh escalation in its effort to disrupt Iran's alternative financial channels. Let's look at some sports news now, viewers. Former India captain Sourav Ganguly will now receive Y category security cover after the West Bengal government reportedly downgraded his protection from the higher Z category level. The revised security arrangement comes after periodic review by state authorities. Ganguly remains one of the country's most prominent sporting figures and even continues to enjoy government-provided security. And India's teenage batting sensation, Vaibhav Suryavanshi, has received a major vote of confidence from the BCCI, with board officials indicating that selectors will do whatever it is necessary for the youngsters' development. And after a record-breaking IPL season, Sooryavanshí's chances of an early India call-up appear to have strengthened, with the spotlight now firmly on the chief selector, Ajit Agarkar, and even the selection committee. Viewers, Dutch giants Ajax have appointed Michel as their new head coach ahead of the upcoming season. And the former player returns to club with the task of restoring Ajax's dominance after a challenging campaign. And the appointment signals a fresh start for the Amsterdam-based side as they look to rebuild and even compete for major honours once again. Here's Bollywood actress Jacqueline Fernandez has pleaded not guilty in the high-profile money laundering case linked to the alleged 200 crore extortion racket involving Sukesh Chandrasekhar. Appearing before Delhi's Patiala House Court, the actress rejected the allegations against her and even said that she would face the trial. The court has now formally framed charges in the case, marking a significant step forward in the legal proceedings. Sukesh Chandrasekhar, his wife Leena Maria Paul, and even several others are also named as co-accused in the matter. And here's a Federation of Western India Cine Employees has revoked its ban on actor Ranveer Singh and also filmmaker Farhan Akhtar's upcoming film Dawn 3. So this decision comes after legal exchanges between the parties, clearing a key hurdle for the much anticipated project. With the dispute resolved, production and promotional plans for the film are expected to move ahead without further disruption. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
NDTV Newsbreak confirmed Cabinet approves ATF price stabilization fund of 10,000 crore rupees for aviation sector amid the Middle East crisis. Union Minister Ashwini Vaishnav says that the move will help stabilize the ATF prices and will prevent disruption of airline operations. Market stages a smart recovery in last hour of trade as Cabinet announces slew of measures for the aviation EV sectors. Nifty recovers nearly 250 points from the low point but ends in red with sharp pressure on the IT sector. Oil prices are surging again as hopes of a US-Iran peace deal fade and fresh conflict rocks the Middle East. With Brent over $98 a barrel and geopolitical risks intensifying, energy markets are bracing for the possibility of further supply disruptions. A new trade flashpoint is emerging as the United States proposes fresh tariffs of up to 12.5% on imports from around 60 countries, including India and China. The move is linked to forced labor concerns and could reshape global trade flows. US Ambassador to India Sergio Gore says Trump trusts India, values Modi ties. In an exclusive conversation with NDTV Profit, Sergio Gore said that India-US deal is 99% complete and this would be a win-win situation for both the nations. Aditya Birla Group eyes Big Green bet as the top contender to buy Shell's renewable energy arm Spring Energy. Sources tell NDTV Profit that the group has entered an exclusivity period and will now begin due diligence over the next few weeks with a deal valued at around $1.7 billion. SBI's top boss CS Shetty tells NDTV Profit that its asset management arm SBI AMC's IPO is on the cards by the end of this calendar year. In an exclusive FMCG company, Marico's founder and chairman Harsh Mariwala sees steady volumes ahead, says no price hikes as input costs ease for Marico, but premium packs may face a demand squeeze. Consumption trims are likely in the near term. Massive fire in Delhi restaurant, 21 killed, mostly foreigners. Major lapses emerge. Hotel had permission only for 6 rooms, but hotel operated 25 rooms along with rooms in basement as well. Delhi Chief Minister promises action. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar and let's get you all the top headlines that you need to know about in the day today. Let's begin First, with an important development coming in, which is going to be of national interest in a major relief measure for the aviation sector. Well, the cabinet has approved 10,000 crore rupees of aviation turbine fuel or ATF prices stabilization fund. Now, the move comes after the global ATF prices surged nearly 2.5 times amid the West Asia crisis. Let's listen in to what the Union Minister Ashwini Vaishnav had to say on this particular approval given by the cabinet today.
एविएशन टर्बाइन फ्यूल एटीएफ इसका प्राइस बहुत बढ़ गया। जो अगर हम देखें तो मार्च में 60 रुपए पर लीटर एटीएफ का प्राइस था, वो बढ़ के 142 रुपए हो गया मई 2026 में। इसलिए सरकार ने एटीएफ प्राइसेस को कैप कर दिया था 75 रुपीस 60 पैसा पे डोमेस्टिक ऑपरेशंस के लिए। तो डोमेस्टिक ऑपरेशंस तो उससे स्टेबलाइज हुए, लेकिन साथ ही साथ जैसे जैसे क्राइसिस लंबा खिंचता गया तो जो ऑयल मार्केटिंग कंपनीज हैं उनके ऊपर इसका बड़ा नेगेटिव इम्पैक्ट पड़ रहा है। फाइनली द सॉल्यूशन विच हैज कम आउट इज अ एटीएफ प्राइस स्टेबलाइजेशन फंड। बेसिकली एक सेल्फ सस्टेनिंग रिवॉल्विंग फंड बनाया गया है। इससे हमारे एंटायर एविएशन सेक्टर में करीब 70 लाख से अधिक जो जॉब्स हैं जिनके ऊपर इम्पैक्ट पड़ना आरंभ होने लगा था बिकॉज ऑफ द स्ट्रेस इन द सेक्टर, वो इससे सिग्निफिकेंटली मिटिगेट होगा।
All right, aviation is the key focus here. Ashwini Vaishnav really spelling out the details of the ATF relief coming in. Let's take it across to my colleague Rishabh Bhatnagar, who was right there at that particular press conference and gives us detailed perspective on what it really means and how will this fund really ease the aviation sector's plight right now, Rishabh.
Absolutely. So this is firstly an NDTV Profit news break that has been confirmed. The government has come out with a 10,000 crore rupee worth ATF price stabilization fund. Now, what the minister also said in his bite was also the fact that ATF accounts for roughly 40% of the operating cost for airlines. So a rise or a spike in ATF prices was adversely affecting OMCs as well as customers. There was a lot of sort of demand flux that was happening when it comes to ATF price. So you've also had the government cap these ATF prices, but that wasn't found to be a very sustainable solution. So instead, what the government has come out with is what they call a self-sustaining revolving fund. Now, let me tell you a bit about how this will work. Essentially, what this will do for airlines is that a one-time budgetary amount of roughly 10,000 crore rupees will be given out to the OMCs. This is an interest-free advance that is given to them. All scheduled Indian airlines are eligible for this. Now, this fund will be compensating OMCs for the losses whenever ATF price goes above a certain approved benchmark that will be determined by a mechanism under this scheme. So as and when that price fluctuates over that, the losses can be recovered through these 10,000 crore rupees. And once this crisis is over, once ATF prices settle, that's when you can have these funds actually being recovered from the OMCs and sent back to the government of India's consolidated fund. So that's what we're picking up in terms of how this fund will be structured.
Sure. Okay. Thanks for breaking it down for us, Rishabh Bhatnagar. And of course, it's an NDTV Profit news break that has been confirmed. Jitendra Bhargav, who's the former ED Air India, joins in now to add more perspective on how it's going to impact first the ATF prices and second, the aviation sector and therefore the consumers like you and me. Jitendra Bhargav, welcome on NDTV Profit. So you heard about the revolving 10,000 crore rupees scheme. And that is really benefiting the OMCs after the fuel prices really cross a certain threshold for the aviation sector. How will this really impact the aviation sector in terms of the ATF prices, you think?
You know, as the minister very rightly said, that the ATF prices have gone up by almost 85–90% since March. Now, what happened in the beginning was that airlines imposed fuel surcharge on the fares, hoping that it will be a temporary measure and they'll be able to sustain it. But as the war prolonged and you had problems on the fuel front, airlines started canceling flights. Now, what cancellation means is that large capacity aircraft are on ground, capital-intensive aircraft on ground on which you're paying lease rental, so it was impacting the airline on one side. The other side was that when you have shrinkage of capacity in the market, there's a surge in fares. So fares were also going up in a big way, making less people travel because India is a price-sensitive market. And when you have fares going beyond a certain point, fewer people travel. So it was a double whammy for the airlines, losing on grounding of aircraft, and another side, not being able to get the fares or the compensation. So this government measure needs to be applauded by the aviation sector, proactive action. And when you say ATF constitutes a major chunk of the cost, single largest cost factor for operations, now what do you do when you know that the fares that you can't really predict what would be the ATF prices in the month of 2 months from now, 3 months from now, how do you sell your tickets? That's why they were resorting to cancellation. Now with the stability having come in, that you have capped the ATF prices at 75 rupees 60 paisa, and you said this is where the stabilization fund would come in, help the OMCs, so there'll be no great hurry to say, let me jack up the fares or put pressure on the government that we are sustaining the price. So it's an across the board welcome relief, OMCs, airlines and passengers, of course.
Yes, so it's a welcome relief that is coming in. Jitendra Bhargav, my one quick question to you is that how is the aviation sector really reacting to these measures? What more measures could be required? And will this also bring some sanity on the way there was a disruption in the routes and cancellation of airlines and flights at the current moment because of this cost?
Bail out the airline, the losses will be contained, which is a welcome relief from their side. Passengers, of course, will applaud it because they will have more capacity in the market. Therefore, reasonability of fares would be there. So if you look at from whichever perspective you want to look at, it's a very welcome relief. And it is not just in India that airlines resorted to flight cancellation because of the fuel prices going up astronomically. So India, of course, Indian government has reacted, which is a very welcome sign. So people would welcome it and say, look, this is what is happening in our industry. But let's not forget that India, it's not just the ATF prices. Most costs of an airline industry are dollar denominated. And with the depreciation of rupee vis-a-vis dollar, airlines were suffering all the more. So when you look at it from the fewer passengers traveling, ATF costs, rupee depreciation, lease rental payable in dollars, and you require that many more rupees to pay for each dollar that you have to pay for the lease rental and other things. So it will be a welcome relief. All airlines would welcome it and say, look, we've got breathing space. We can work our thing. But one provision that the government must put in here is that having provided the stabilization fund, no more cancellation of flights should be allowed.
Yes, that's what I was. That's exactly what I was trying to ask you. That will this bring sanity in at least flying and commuting for the country, for the people of the nation? Fine, Jitendra Bhargav, all your insights well taken. And yes, the government has taken care of the OMC losses while capping the ATF prices for the airlines. So a two-pronged measure has really helped the entire sector. Thank you so much for joining in with your perspective. All right, moving on to the markets. Dalal Street saw value buying at lower levels in the afternoon trade as benchmarks really recover part of their steep early losses. Now, Nifty rebounded 200 points from the day's lows, while Sensex also saw near 1,000 points recovery. In fact, my colleague Jasmeet is right here with a detailed wrap on the market action today. Jasmeet, tell us.
Well, a weak day for markets today. Nifty 50 ends in red, down about 0.3%. In terms of top losers, we have the IT stocks. That's Tech Mahindra and TCS losing the most, down about 6.5%. While if you look at the broader market underperforms the benchmark in today's trade, while Nifty Midcap 150 ends in red, down about 0.3%. In terms of top losers in Midcap 150, we have stocks like Persistent Systems and Coforge, both the IT names losing the most in Midcap 150 as well. In terms of Small Cap 250, that ends flat in today's trade, And in terms of top losers, we have IFCL and RHI, which are among the top gainers for small cap to 50, both gaining about 9.5%. In terms of top loser, we have stocks among JM Financial, which is down about 5%. In terms of key sectors end on a mixed note. While Nifty IT being the top losing sector, which is down about 5.2%, we do see the brokerages coming and being bearish on overall IT space, as they say the overall AI can give a tough competition to IT services. That's why we saw a turnaround where Nifty IT was top gaining sector yesterday, but today in trade, Nifty IT emerges as a top losing sector. Now, in terms of top losers in Nifty IT, we have stocks like TCS and Persistent Systems, both down over 7.7 odd percentage. In terms of the other key trends, while Nifty PSU Bank was a top gaining sector in today's trade, it's gained about 1.5 odd percent. And in terms of top gainer in Nifty PSU Bank, we have stocks like Indian Bank and Central Bank both gaining the most, up about 3 odd percent. If we look at the other key trends, we do make a note that Nifty IT snaps its 3 days of gaining streak and loses in today's trade, while Nifty Financial Services snapped its 5 days of losing streak and gain in today's trade, while lastly Nifty Oil and Gas is down for the 6th consecutive day in a row.
All right, 6th consecutive day of losses. Thank you so much, Jasmeet, for the entire roundup of the market momentum today. Let's also shift focus to the money market, and the rupee ended at 95 rupees 70 paise against the US dollar, slipping to the day's low levels as markets really balanced India's strong domestic fundamentals against the lingering geopolitical uncertainty. Meanwhile, the crude oil prices, they remain in focus as they rise nearly 3%. When we talk about Brent crude, it's hovering around $99 a barrel range, while the WTI crude is crossing the $96 per barrel mark. Remember, for a while now, crude has been below $100 per barrel mark, but now slowly inching back there. All right, in a big development, US Section 301 investigation has found India among the 54 countries that failed to really curb the imports of goods made with forced labor. Now remember, as India and US trade deal talks are in progress, India is seeking fair terms in the probe, and Rishabh is here with more details on how US is really amping up on that tariff bit. Rishabh.
Absolutely. What we're picking up is the USTR findings on one of its Section 301 investigations are out. Remember, this investigation is some sort of a way to determine what sort of tariffs the US can now impose on various trading economies. Remember, the US has been using tariffs as some sort of a leverage over economies to get a better trade deal out of countries. And now from its forced labor investigations under the Section 301 of its Trade Act, it has found 54 economies guilty of certain wrongdoings when it comes to importation of goods made with forced labor. India is one of those 54 economies now, and this gives room to the US now to levy an additional 12.5% duty on Indian goods. Now, what we're picking up is the fact that there is the fact that this tariff is not immediate. This is, of course, subject to appeal. This is subject to hearings that will happen on July 7th when it comes to the USTR. What we're also seeing is that this is, of course, investigations were part of a broader campaign against 60 countries. India is now part of that limited list of 54 countries. And that's what we're picking up. This is, of course, all happening while the India-US trade talks are going on in New Delhi. You have the US trade team that is in New Delhi. And remember, we had also broken this on NDTV Profit. Tariff relief under this Section 301 investigations is set to be top of agenda as well for these countries. So that's what we're picking up when it comes to the USTR findings and this additional possible overhang of about 12.5% duties on Indian goods.
All right, thanks Rishabh for getting us all those important details. Now the US ambassador to India hailed India-US ties as the best, and also the US trade team is in India in an exclusive conversation with NDTV Profit. Sergio Gore says that the US-India deal is now 99% complete. Let's listen in as he speaks to NDTV Profit on the sidelines of the City Conference.
Yeah, if you could do a quick statement.
I'll do a quick statement. We'll do a quick,
yeah. Thank you, Mr.
It's a pleasure to be here today in Mumbai. And this morning I met with the United States team that is visiting us from Washington, D.C. So our deputy trade negotiator, is in Delhi for several days of negotiations. He's here with a large team. He's meeting with the Ministry of Commerce and MEA this afternoon. We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on. To put it into perspective, we've been working on this deal for a year and a half. The European Union deal with India took almost 19 years to get done. And so we're very optimistic that this will get done. You have two like-minded partners, the United States and India, that want to get this done. And the incredible thing about this is it will be a win-win situation for both of our countries, and we're very excited to get that across the finish line very soon.
All right, the government has really reconstituted the Board of Trade under the Commerce Ministry, appointing 29 members from across the industry, banking and technology sectors. Now, SBI Chairman C.S. Shetty, along with also Apple India MD, M&M MD and EY India Chair Rajiv Memani, JSW Cements Parth Jindal, even Tata Motors Sailesh Chandra and Zoho's Sridhar Vembu are also amongst the members of this particular committee. Now, the revamped board is expected to provide strategic inputs on trade policy, exports and India's global competitiveness. All right, to an important corporate development coming in from the mergers and acquisitions street, and Aditya Birla Group is fast emerging as the front runner and is the top contender coming in for Spring Energy, which is the renewable energy arm of Shell PLC. In fact, sources tell NDTV Profit that the group has entered into an exclusivity period and is now beginning the due diligence process over the next 3 to 4 weeks. So after the due diligence process, then the final negotiation as well as the pricing will be decided, and whether or not the deal is sealed will be decided. But this is the incremental latest detail on this large transaction. Remember, Aditya Birla Group has bid close to around $1.7 billion for this particular transaction, and it will be done by the group company Aditya Birla Renewables, which is a subsidiary of Grasim. All right, speaking to NDTV Profit at the City India event, C.S. Shetty has really reaffirmed SBI's goal to list SBI AMC in the calendar year 2027, while also confirming SEBI approval. Listen in.
SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year.
Okay.
We are just waiting for the regulatory approvals. Calendar year.
Are you close to filing the...
we have already filed the DRHP, so we are waiting for the approval. Yes, we have filed the DRHP.
Yeah.
Right, speaking to NDTV Profit on the sidelines of City India conference, well, Harsh Mariwala, the founder and chairman of Marico, said that despite the Middle East crisis, Marico has seen limited impact due to the reduced low raw material prices now and maintaining sector-wide resilience as well. Listen in.
Sir, in Marico, which are the products with, the West Asia crisis going on? Which are the segments which will be resilient in this time, and which are the ones which, will sort of need some, support?
See, I think in many cases, we pack our products in very small packs, which cost 10 rupees, 20 rupees. So in those categories, the impact may not be as high as something which is far more expensive. So, for example, a Saffola cooking oil, 4 kilo, 5 kilo, costs much more. So, because the overall outlay on that particular brand is higher, there may be some cut down on the consumption. But I think it all depends on the crisis is panned out. If it continues for long and if it is leading to higher inflation, then everything may get impacted.
Also, so far, Marico hasn't really taken any, after the Middle East crisis started, no price changes have happened so far as per our dealer checks. What has worked for the company? Is it a better preparation which has worked, or something else?
No, I mean, one of our key brands, Parachute, the raw material prices fell. So because of that, we were able to absorb the cost inflation in, say, fuel prices, packaging, material prices.
Lastly, sir, I know nobody has the answer to this, but the guidance, the volume growth, which the company has said a high single digit, how sustainable it would be, and what can the investors expect?
In the near future, looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
All right, Harsh Mariwala very candidly speaking to my colleague Ridhima Bhatnagar about the war situation and its impact. Now, a devastating fire in South Delhi has claimed at least 21 lives, many of them really foreign nationals, and left several others injured. More than 40 others have been rescued so far. Fire broke out at 8:50 a.m. in the restaurant of the Flourish Stay Hotel, which was reportedly located in the basement of the 5-story building. The fire later spread to a hotel and Mikasa Inn next to it, and authorities say that around 40 people have been staying in that hotel at that particular time. Some lapses have been found. Sources have told NDTV that the hotel had permission to have 6 rooms, but 25 rooms were being operated. Some guest rooms were also in the basement. All right, a tragic incident there that has occurred. On that note, we'll say goodbye on this particular edition of Profit 360, but do keep it with NDTV Profit. Thank you so much.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies, what's the story behind it, and interestingly, will there be any alpha made or not? So let's start with the company in focus today. That would be definitely there, but I'll give you some hints. Try to guess it. It's India's third largest manufacturer of magnetic winding wires, and if you look at the export angle also, that's also very strong. Company delivered with a very strong operational numbers, and it was recently listed also. Let's see the date. What's there? Of course, it's backed by Malabar Investments as well. Try to guess the company. This was listed on December 23rd, 2025, near that Christmas Day period. Interesting. But the stock has given a solid returns, up 113%. Stock double हो चुका है IPO प्राइस से. लेकिन ये स्टॉक है क्या? ऐसे खराब बाजार में इस स्टॉक में अच्छी रिटर्न्स? Which stock is this? The stock in focus is KSH International. The company is coming for the first time in KYC, and we'll try to decode what this company is all about, what's the outlook ahead, and why did the numbers come so strong in Q4. But a lot of questions are there. Let's try to answer them one by one. Why are we calling this company? Strong growth outlook for FY 27-28. Will this sustain? Because 4 quarter numbers were strong, and that is where we would like to see the momentum in this counter. Also, the second question, the views on exports and specialized wire segment. The management has explicitly stated in their press release that these are the growth levers. Let's try to understand more about the demand trends in the client confidence, especially on the client onboarding front, and also how the raw material prices are jumping, and is there any pass-through mechanism, because the company definitely has a lot of raw materials tied up to metals and minerals. The utilization numbers of the factory and the capex plans, what are the numbers looking like for the next 2 odd years. Also, we'll be looking at the future product mix as the company is pushing towards the value added segment. Apart from this, another important question is there any execution risk, because monsoon is nearby? In their industry, there is at times execution risk or lumpiness as well. And to explain this entire process, we'll have Rajesh K. Hegde. He's the MD at KSH International, where we'll ask a lot of questions for Rajesh. But let's try to understand the company first. This company karti kya hai? First and foremost, I would like to point out 2 important portions. The company was founded in 1981. It's India's third largest manufacturer, of magnetic winding power and also the largest exporter. So definitely their revenue mix is pretty interesting. They provide ultra precision special and standard magnet winding wires to OEMs. So that is something to watch out for. But where does the wire go? It's in the power, renewables, railways, motors for the EV and the ICE, internal combustion engine segment. So they are catering to a lot of industries. Also for industrial, there is home appliances, compressors and refrigerators as well, where most of their wiring solutions are there. Now they have 4 manufacturing facilities which are located in Maharashtra. Apart from this, also the key factor to watch out for is the total annual capacity. Look at that, it's around 43,445 million tons per annum. So that is something we'll be watching out for. And interestingly, 2.45% stake is held by Malabar Investments. 70% capacity utilization is there in the 4th quarter. Also, let's look at the other key triggers for the stock. FY26 EBITDA per ton stood at 67,625. Compare that with the numbers last year, it was 52,356 rupees per share. Also, let's look at the segmental revenue mix. The specialized segment that is still there, value added margin is higher. It's around 75% of the margins. Compare that, it's around 25% for the standard wires which we are talking about. Apart from this revenue mix, the key clients, very big names are there. BHEL, CG Power, Hitachi Energy, Bharat Bijli, ABB, Bosch. So you can say technically it is a power ancillary company, and this is why the entire sector has been seeing a lot of strong, you could say, tailwinds, and it's an approved supplier to Power Grid, NTPC, NPCIL and RDSO. So definitely the company's credentials are pretty strong. But how was the 4th quarter? The first question is strong volume growth coming in, and the mix is also good. Higher copper prices were also there. So we need to understand what's the pass-through mechanism for them. The volumes increased by 29% on a year-on-year basis. So that is showing strength. Apart from the volumes,